then advocate in front of the regulators. We've had several meetings with the State Bank. They recognize the Pakistan Fintech Networks, as does the SCCP and the PTA. As you know, Pakistan is in a serious development stage of digitization. We have 90 million plus smartphones. We also have people who have 2G phones, which I think is a huge market that people can start addressing as they are not. We have 90% GPRS cover. So Pakistan, more and more, especially post-COVID, are using apps to use services. As you do that, there's one thing you as practitioners must keep in mind, which is the ethics related to the digital world. What are you doing with the customer data? How much privacy are you providing the customer? Do you have customer consent to use their data? Are you keeping the customer data in a safe environment? And I think as fintech and other digitalization services become more prevalent, the regulators will get involved in this as to the ethics of customer data. And there's something that's not where it ought to be in Pakistan. And I think there's something that the regulators ought to look at, and certainly Pakistan Fintech Network will push for that to make sure that we develop a set of standards as far as customer data ethics are concerned. Data, people say is the new oil, and I disagree with that, because data is something, oil is diminishing, it's a finite quantity. Data is not. Data, as my young friend at Finja once said, and I'm going to quote him, is that data is like sunshine. It's just there. It's going to keep being there. Come out every day and you get more and more data. And one of the things that we have not done is obviously monetize and capitalize on data that currently exists. Now, some companies which have recently come from outside Pakistan are demonstrating the way how effectively they can use alternative data points. Unfortunately, our customer journeys with our traditional credit providers remain convoluted. To get a new credit card, new to the industry, you're still taking 60 days to get a credit card or a personal loan. That will change. Eventually, the banks are going to see that their lunch is going to be eaten by these alternative credit providers who are making decisions in microseconds, dispersing loans in minutes, and changing the customer journey. Whether it's fintech or any kind of tech, the lens is just one lens. How are you changing the customer journey? Period. Okay? If you're changing the customer journey and if you're doing it effectively, the customer will be willing to pay for it. If you're changing the customer journey, then you can potentially scale it. So your prime question, if you're in the fintech world or any tech disruption world, needs to be, how are you changing the customer journey? I see 6 to 7, well, not 3 to 4 pitches a day, for the potential startups. And my primary question is, how are you changing the customer journey? And some of these people don't have that answer, and we never go beyond that, because if you're not changing the customer journey, then you're not doing any disruption, and the customer's not going to come to you. Easy Paisa is an example. Easy Paisa became so successful because we changed the domestic remittance customer journey. In a minute, you could send money to 60,000 locations just by giving 4 data points to the retailer who was in your neighborhood, who doesn't play golf in the weekend, is open till 11 p.m. at night. That was the disruption. That's what Easy Paisa did. It just changed the customer journey, and between Jazz and Easy Paisa, they move 7% of Pakistan's GDP right now. I'm going to talk about 3 themes. 1, open banking. Open banking is going to happen in Pakistan. What is open banking? Open banking is the fact that you as individuals own your data set, not the institution which is holding it. The institution which is holding it is custodian of your data. That's your data. And you should be able to access that data in a secure manner. You should be able to access the data in a convenient manner. There are global companies which are valued at billions of dollars which are doing this, where basically your data in a bank, in a telco, in an insurance company should be accessible to you on a digital basis to be provided to a third-party provider who's looking to provide you a service. State Bank is looking at this. State Bank is going to come up with a framework, hopefully next year, which will allow third party to access data from banks in a secure manner, in a standard API, so that it can provide it to, for example, alternative lenders. If you're a nano lender and you're getting information from a smartphone, the richest information always, in my view, in my experience, is financial information, and that resides in your bank account. Right now, that journey is convoluted. You go to a bank, you get a physical statement, it's stamped, then you give it to your potential provider of service. All this needs to be automated, and open banking, of which customer data is just going to be one piece, is going to happen next year. The big revolution in India happened, and you have to give them credit, was because of India Stacks. India Stack was able to put your identity, put your college degree, put your birth certificate in a secure digital locker. They then made UPI, which we have the RAST equivalent of, which we're having a session for tomorrow. And RAST, again, is going to be a game changer in the ability of digitizing Pakistan payments. Remember, we're a cash society. We have about 4 or 5 trillion rupees circulating in the system, and nobody wants to do digital because digital is expensive and cash is not. You do digital, you're taxed. You do cash, you're not taxed. So this whole system is, in fact, stacked up against for you going digital, and something that we need to work with the government with. The second thing, the theme that's going to happen is going to be fractionalization and tokenization. And when you see, when I talk to the SCCB chairman in the fireside chat, that tokenization and fractionalization of assets is going to be another needle changer in Pakistan. If you fractionalize real estate, I mean any asset class, if you can fractionalize it, you bring it down to bite-sized level for the large retail population, you're going to get traction. Clearly, you need the right set of regulations to make that happen, and that's happening in Pakistan. So there are many things happening in Pakistan which we're not aware of, but in many cases, our enabling environment is getting better and better. Honestly, I've been to many countries. Centralized biometric KYC maybe exists in a handful of countries. In how many countries can you immediately find out somebody's identity with a biometric verification? Very few. So your KYC stuff is done immediately. SCCP is working on many things that you'll be able to download data from them, not personal tax returns like the FBR recently, but company data and what their ownership is. CDC is working on basically final process of startups being able to put their shares in a digital manner as opposed to a physical manner. So fractionalization, ladies and gentlemen, is going to be very big in Pakistan, just like open banking. For those of you who are founders, co-founders of Fintech, my advice is that you're going to see a scarcity of investments in Pakistan, globally as well, but more so in Pakistan over the next 2 years. It's going to be tough. I've just come back from Singapore and then Dubai, and I talked to at least 20 VCs. And the view is that it's going to be tough if you've raised so the people who've raised initial money at a very high valuation, big number, are going to have difficulty, in my view, in the second round. People who are just starting off probably are going to be better. But keep in mind that most of these funds have a 10-year life. And if they don't invest in the next 2 years, they'll probably have 3 to 4 years life left in their fund. So in 2 years' time, you're going to have a huge number of funds looking to find good companies. So your aim should be to survive the next 2 years, build your company. Focus both on your GMV, but the path to profitability. A path to profitability. It doesn't matter you're going to be profitable in 2 years, 3 years, but there's a path to profitability, and your unit economics are showing that you're getting on that path. That's going to put you in very good stead. My sense is the days of just GMV and serious money loss are gone. Maybe they'll come back, but it's going to be a long time before they come back. So you need a path to profitability. Ladies and gentlemen, in my view, Pakistan is one of those countries where there's huge opportunity. Planet N has 36 companies, 33 are in Pakistan. We're going to go up to another 10 companies. This is where the major opportunity is, notwithstanding all our issues. All our issues are there, but the huge opportunity also exists because of those issues. And if I were you, I'd focus on what you can build and create. If you're working in a bank, my advice to you again is, ठीक है, आप एक काम कर रहे हैं, but think about working for yourself. It's time for you to do your own thing, and inshallah you'll be successful. I'm going to quote from Iqbal before I end, and this is a verse that I find, always inspirational for me. And Iqbal says, "हम खुद तराशते हैं मनाजिल के संग मील, हम वो नहीं हैं जिनको ज़माना बना गया." We are the creators of our own destiny. We are not one of those created by circumstances. Thank you very much.
Thank you, Nadeem. It's always wonderful to hear you speak. Data is the new oil. What can you build or create? Open banking, some wonderful messages for all of us to really contemplate on as we go forward. We will now move into our inaugural session speeches. I'd like to first share with you that Mr. Kabeer, Naqvi CEO and President of UBank, is unfortunately unable to join us due to health reasons. We wish him recovery and healing. I'd like to invite Farrukh Khan, Managing Director and CEO of Pakistan Stock Exchange, for the inaugural address. Farrukh brings over 30 years of senior management and board-level experience. He's a qualified chartered accountant, has held many different positions, from financial advisor to being an entrepreneur. Farrukh, thank you for being with us here today.
Assalamu alaikum, and thank you so much for inviting me, Nadeem, Chairman Pakistan Fintech Network, as well as the network itself and Orbit, for providing me the opportunity to speak at this inaugural session. And as Nadeem was mentioning, it is an incredibly important sector, area, and it's really, Nadeem, a great initiative to have an industry body that can interact with everyone. In my brief talk today, I was told to keep it around 8-10 minutes, so I'll try and stick to that. I would like to highlight two key areas. One, the huge opportunity presented by the capital markets for fintechs, and second, the funding available for fintechs from the capital markets, something which Nadeem also alluded to. As funding from overseas is drying up, there are alternative funding sources available for good companies. So, as you all well know, from raising capital to deploying business solutions, fintechs have been at the forefront of tech-enabled economic activity throughout the world. And they have generated substantial interest from investors, VCs, and others internationally. And they are undoubtedly a force and a major generator of economic activity. As again Nadeem mentioned, that almost every large firm will certainly be a technology firm, but will also be a fintech firm. Here in Pakistan, the focus of fintechs has been almost exclusively towards enhancing and deploying payment systems and towards banking services. The capital markets, I would like to suggest, are an untapped sector waiting to be discovered by the fintech industry locally. This is a large-scale opportunity with tremendous growth potential. In fact, more than 40 years ago, the fintech phenomena in Pakistan actually started from the capital markets, where in the 1990s we introduced electronic trading. And at that time, along with the dematerialization of share certificates, custodial services, it was sort of path-breaking and was well ahead of any other sector, including banking, in terms of digitization. Internationally, fintechs have undergone exponential growth in the capital markets by creating new value propositions or improving existing ones. Again, I completely agree that they are able to enhance and simplify the customer journey and create the capacity to handle vastly greater client numbers by increasing convenience and simplification, as well as regulatory compliance. The capital markets ecosystem, which includes depositories, custodians, investment banks, exchanges, clearinghouses and capital market information aggregators provide a fertile ground for innovation by fintechs. And we've seen that, forget the developed markets, from Asia to Africa, fintechs have created large-scale business models in the capital markets, in brokerage, as well as asset management. And it's time we do this in Pakistan as well. And one of the, amongst the many challenges faced by the capital markets, transparency and investor outreach have been amongst the biggest issues hampering the growth of capital markets. And technology and fintechs can help surmount these and other challenges. PSX, with the support of SECP, has taken many path-breaking initiatives in the last 2 years, including providing both the enabling framework and infrastructure to allow online account opening, establishment of a professional clearing member, streamlining AML and KYC requirements, introduction of Sahulat accounts for small investors, and crucially, enabling sharing of customer information between banks and brokers and capital markets. This is now seamless for RDAs and in pilot phase for domestic account holders. And this really is a game changer as fintechs look at the capital market space. So just to give you an example, the online account opening that we have enabled in September, 76% of all accounts opened in September this year were through the online channels, which 2 years ago was almost zero. We are also in the process of introducing online-only broker category, so fintechs can get a license and offer front-end brokerage services with good UI and UX-based apps, while they can outsource the back-end services as well as compliance to other capital market entities. And we really need services like robo-advisory, wealth management, full service and discount brokerages that can capitalize on technology. I think the only number worse than number of taxpayers in Pakistan is the number of investors in the capital markets. So as I said, for the size of our company, for the size of our country, for the size of our economy, it is a huge scale opportunity. So we believe that all the necessary structures are in place for existing and new players to take advantage of and build profitable large-scale businesses and help grow the capital markets. Locally, we have seen how fintechs like JazzCash and EasyPaisa have been able to capture the unbanked market segment of the country. We are also seeing some successful models now in Pakistan's capital market. K-Trade, which recently launched, has had more than 1 million downloads. Zindagi app, introduced by JS Bank, is now available in 13 cities and has had a lot of success. Capital Stake, which launched in 2014, has built, in fact, a data platform in the capital markets by synthesizing and gathering data and then converting into an API, which can be used by different entities. And they have incorporated the platform with 20 brokers, including with PSX and others. It is fair to say that so far, regrettably, Pakistan has not leveraged the opportunities offered by the telecom and tech revolution that has swept the world in the last few years. And this has far-reaching implications for our economy, its position in the world, productivity, export of services, and just creating large-scale businesses and wealth. Thankfully, this seems to be changing now, and I hope that we are finally at an inflection point and at the cusp of another opportunity. Hence, it's critically important that we learn from the past and make sure that we fully capitalize on the emerging future opportunities. And it's really important to understand that, what was it, both from not just the regulator perspective, also from our entrepreneurs and business perspectives. I mean, it's always amazed me that Pakistan is probably one of the few and perhaps the only developing country that doesn't have an indigenous homegrown telecom billionaire. I mean, forget India, Asian tigers, even in Zimbabwe, we've got local telecom billionaires who took advantage of these changes taking place. So I hope this time our business community, entrepreneurs, regulators will learn from the past to understand the risks and take advantage of these opportunities. At PSX, we are committed to ensuring that we support the new economy and create the environment in which the value creation for companies, investors, and advisors takes place in Pakistan. And I'd like to briefly touch upon the growth enterprise market or the GEM board, which is one important step in this regard. This was actually created in response to the capital raising challenges faced by smaller companies and startups, which have always found it difficult to raise money from banks. VC funding was also constrained due to many reasons, and one key reason, as you know, is to be inability to show a viable exit option. When we launched the GEM board, our hope was, and I think it's proving true, that we would be able to impact the entire value chain of early stage financing. You know, as you talk to investors, a listing on the GEM board is a viable exit opportunity to talk about, as well as a capital raising platform for smaller companies. As Nadeem was mentioning, recently, although international VC funding has been deployed at record levels, due to both domestic and global volatility, this has impacted and the flows have slowed down. The GEM board, I would say, provides a very attractive alternative fundraising platform. The market provides a deep pool of capital for companies and provides access to both local and foreign investors. And once listed, the market will keep providing growth capital through the company's life cycle and the opportunity to transition to the main board. You know, recently in developed markets, companies have been going public later. I would suggest that I believe that in Pakistan's particular circumstances, which include underdeveloped private market ecosystem and complex FX and tax regulations for private companies, it is important perhaps to consider listing as an option earlier. You know, PSX opened to international investors back in 1991. There's 30 years of track record of tax and FX regulations. Every day, millions of dollars go in and out of the market, you know, without any issues really. And since all listing is done on a book building basis, you can actually use it as part of your VC or B or C round of funding as well, because you can attract specific investors to come into a listing round. It doesn't have to be just a random set of investors. And you know, since there is a large number of investors involved, you may not have to go through the torturous process of shareholder agreements and all the obligations and drag along and other rights that have to be negotiated. Being listed provides many other opportunities, many other advantages. It provides a very flexible capital structure, many more financing options for both debt and equity. You develop a diversified investor base. It helps build the brand, helps to retain staff, because ESOPs are much easier in a listed structure than in unlisted companies. And shares of sale of shares in listed companies is also a lot more tax efficient. We recently signed an MOU with PSEB, who will fund up to 40 tech companies that will come for listing on the GEM board. So just to conclude, I would say capital markets always have funding available for good businesses. Yes, the valuation will vary depending on macro and other conditions, and it's an important judgment call to make. Do you take a lower valuation today, get funded, capture the market, grow to scale and create even more value later, or do you wait and run the risk of someone else capturing the market? PSX is here to help and support you in any way we can. Once again, thank you for inviting me, and we look forward to partnering with you on your exciting journey to revolutionize both the business and economy of Pakistan. Thank you.
Thank you so much, Farrukh, for highlighting the opportunities in the capital markets and the support that you have offered us. I'd like to now have Mr. J.K. Khalil's recorded session for our audience. J.K. Khalil is Cluster General Manager at MasterCard. He is responsible for MENA East Cluster, which includes GCC and Pakistan. He brings a background in strategy, consulting, technology, banking, fintech, and is also on several advisory boards. Let's play the video.
Good morning and welcome to the Pakistan Fintech Forum. I wish that I could be there with you all in person, particularly after the last 2 years of disruption. Sadly, on this occasion, this is not possible, but here we are, once again, harnessing the power of connectivity to bring people from across the world closer together with the touch of a button. Solving problems using technology? And that is what you, the industry leaders and business mavericks in the room, do best. You are the innovators and the creators. You are the ones transforming our sector and creating an even bigger future, brighter future for Pakistan. Fintechs are disruptors of the status quo in the pursuit of a better tomorrow. New players are continuously emerging. Their scaling strategies are maturing, and investments are being accelerated. Yet the core ambitions remain the same, striving to empower people, increase access, spur development, and bring more stakeholders into the digital economy. Through deep partnerships, we are expanding our MasterCard payments matrix across new rails, new segments, and new use cases, as we power commerce and empower the digital economy to enable people to send money however, whenever, and wherever they need or choose to do so. And fintechs play an increasingly vital role in enabling this economic transformation. As Pakistan embraces the limitless power of digital payments, we are committed to continue to drive digital transformation in the country. This great work with great partners fuels our global pledge to connect 1 billion people, including 50 million small businesses, to the digital economy by 2025, with a particular focus on including 25 million female entrepreneurs. But we know we cannot do this on our own. The only way we are going to achieve sustainable and inclusive growth is by building a more connected ecosystem that benefits everyone. And we cannot do this alone. Indeed, we recently all watched disbelief as floods devastated Pakistan. As the water is receding, the country has lost thousands of lives and now faces huge economic losses as the resilient people of Pakistan rise to the challenge and start to rebuild. Again, the power of innovation and technology has come to the fore as leaders from around the world came together to offer support. At MasterCard, we harnessed the power of our technology and engaged with various government entities to support the flood relief efforts, powered by some of our key assets, such as our payment gateway services. I am proud of the small role that we were able to play, but equally heartened at seeing once again how technology and collaboration can uplift communities and make an impact. Another testament to the power of partnerships. As we look to the future, we are committed to fueling the next generation of fintechs. At MasterCard, we offer services and tools that help fintechs, innovators at any stage, launch, grow, and with agility and speed, build up their business. MasterCard's technology-led approach to support fintechs is underpinned by a shared mission of inclusive growth and doing well by doing good. We're pushing our networks further, forging ambitious partnerships and championing the people, businesses, and innovations that are transforming the way the country works. Thank you for being part of this exciting journey with us. And thank you for allowing me to have the opportunity to be part of this great forum today. And I wish you all a priceless event.
Thank you, Mr. Khalil, and I think we all appreciate MasterCard's vision in lifting communities, and particularly for me, hearing about the 25 million female entrepreneurs and their financial inclusion is really exciting. I'd like to now invite Syed Junaid Imam Saab, Managing Director, Pakistan Software Export Board and Ministry of IT. Mr. Imam is leading digital transformation agenda of the government at the Ministry of IT. He is in particular responsible for the development of Pakistan's first personal data protection bill and cybersecurity and cloud policies. Currently, he is developing key policy initiatives for the government, such as the Digital Pakistan, National AI, DLT blockchain, data governance, and startup facilitation policies. Thank you, Imam Saab, for joining us.
Bismillahirrahmanirrahim. Chairman, Fintech Network, MD Stock Exchange, ladies and gentlemen, Assalamu alaikum. So first of all, I would like to congratulate Fintech Network for hosting this event, where both the financial sector and the tech sector have come together to analyze opportunities and find out ways where they can bring in benefit for the masses and for the country in general. So Pakistan Software Export Board is working with the tech industry to ease out the challenges that they face in the country. And we have seen a gap between the tech sector and the financial sector in the past. And if you look at the global economies, the tech sector is working very closely with the financial sector. Probably we started somewhat late, but I think the direction is right. And Pakistan Software Export Board has partnered with the stock exchange as well, where we are working with the tech companies to come on the GEM boards initially, and then on the main stock exchange as well. One key reason is that if you look at the global exchanges and like NASDAQ, S&P, most of the companies that are there now are migrating towards tech. So probably 30 to 60% of the indices are represented by the IT and tech companies. But in Pakistan, I think only 5 or 6 companies are on the main board. So there's a big gap where we need to work together. And PSEB has also signed MOUs with the Pakistani Exim Bank, Bank of Punjab, to facilitate the IT and tech companies in their helping them with the performance guarantees, getting loans. But I think a lot has to be done to facilitate this new sector in relative terms. And it's just not one entity that has to facilitate you. There, all the relevant stakeholders, be it State Bank, be it FBR, and other government agencies, they have to facilitate this tech sector. I would like to give you few information and points that probably you will be encountering in next maybe year or so because of my position in the Ministry of IT. And it's the key thing is the availability of data. We realize that government agencies who are holding on to data, they are not very open. So unless you have availability of data, the growth will be limited. So in order to overcome this challenge where the government agencies who are collecting a lot of citizen data but not making it available to the tech sector, to the startups, so we are working on a data governance policy. So in this data governance policy, we are defining the classification of data, and based on the classification, the government agencies have to share data with you. So there will be an open set of data. There will be some public data as well. So they will also probably attribute some monetization depending upon what the cost they have incurred to acquire the data. But you will have open data available to you where you can work on synergies, you can test your ideas, and before going to the production, you have some staging environment where you can test your products as well. So availability of the data is a key aspect that we in the Ministry of IT is working on. Another important initiative that the government has taken, and that is very important for the fintech industry, that is we have got funding from the World Bank for our project. So this project has multiple components. One key component is digital ID. So I think for the growth of this fintech, a national digital ID is the key. So we are working with NADRA to build a national digital ID. The second aspect of this project is a secure exchange layer. So this is another problem that we see, that we lack standardization when it comes to integrating different organizations. So we are working on a data exchange layer for Pakistan. And one challenge that we see, IT is a devolved subject. By devolve, I mean that after 18th Amendment, It's the IT is a provincial subject. So when we talk about digital ID or when we talk about data exchange, so all different stakeholders from the federal government and provincial government need to be on board. So for this data exchange layer, we have all the provincial governments with us, and the key federal government institutions like NADRA, who are custodian of large data. So we are working together to have this national data exchange layer, where we will standardize and we will provide a secure exchange layer to the private and the public sector. So this will build a long-term plan for the government, where the availability of data will be made to the private sector as well. So I think availability of data and your access to data at low cost, I think will be the key for the growth of the fintech sector. One important thing that you also need to know that there are few regulators here, but you will also be interacting with a couple of new regulators in a year or so. So one is the Data Protection Authority, and the other would be a cybersecurity board or an authority. So I think initially we talked about the data privacy. So one key shift that we are bringing in the new data privacy law is that the organization who is collecting the data is not the owner of the data. So the subject for which you have collected the data is the owner of the data. So whoever has collected the data is the data controller, and whoever is processing that data is the data processor. And the law has devised the liabilities and other responsibility for data controllers and data processors. And the law also gives a guideline for the rights of the data subject. So this is a fundamental shift that is taking place as far as the data governance is concerned. The other aspect is cybersecurity. So as we are transforming digitally more and more, the risk of data breaches and threats to the businesses are becoming more and more. So you also need to spend more, and while designing the products, you need to be more focused on the security aspects as well. What we see right now, we lack the awareness of the security, even at highest level, at organizations level, and at the product development level as well. So we in the government are bringing in different programs for the awareness and for the training and capacity building as far as the cybersecurity is concerned. But moving forward, I think it will be a key focus area for the growth of this tech sector as well. So in short, I think government and almost all government departments dealing with data, with tech, have to come forward and put their hands together to facilitate this sector, I think, which will be a key sector for economic growth of the country. And from the government of Pakistan, from Pakistan Software Export Board, I assure you that the fintech is a focus area, and we will keep working for the betterment of this sector. Thank you very much.
Thank you so much, Junaid Imam Saab, for your efforts within the Pakistan Software Export Board and Ministry of IT to facilitate the fintech sector and encourage economic prosperity and growth in the country. Our last inaugural address before the keynote is by Aamir Azim Bajwa, Chairman, Pakistan Telecommunication Authority. This is going to be a recorded session. Aamir Bajwa brings experience in ICT development, spectrum management, digital transformation, and policy making. Thank you.
Governor, State Bank of Pakistan, Chairman, Pakistan Fintech Network, industry leaders, distinguished guests, ladies and gentlemen, Assalamu alaikum and a very good morning. I am honored to be a part of this elite gathering on the role of fintech in increasing financial inclusion, transition to cashless society, and to revolutionize the payment systems using digital technologies. At the outset, I would like to offer my sincere compliments to the Pakistan Fintech Network for organizing this distinguished forum. Ladies and gentlemen, digital connectivity is reshaping the very fabric of societies and economies worldwide. Individuals, businesses and industries alike are exploiting the immense opportunities emerging from use of digital technologies. PTA, being the telecom sector regulator, continues to play a significant role in increasing and creating an enabling environment for expansion of advanced networks and improving the availability of and access to cutting-edge ICT technologies in association with the telecom industry and allied stakeholders. According to Pakistan's Bureau of Statistics, 93% of Pakistani households have mobile phone ownership, which shows a great potential for mobile-based digital payments and other financial services to the unbanked. Collaborative efforts of mobile operators, fintechs, and banks have increased mobile banking accounts by 224% from 27 million in June 2017 to 88.5 million in June 2022. However, half of these accounts are not active. Despite encouraging growth in banking accounts and increasing transactional activities, Pakistan's financial inclusion is lagging in regional and global terms. According to Global Findex 2021, only 21% of adults of Pakistan have bank accounts ownership, compared to an average of 71% in developing countries. Adoption of financial services in Pakistan is mostly for making online payments, and as such, access to savings or credit solutions is very limited. Women account ownership of 13% is still less than half of the men's account ownership. There is a strong need to make efforts to include the unbanked population in the financial system and help them adopt digital banking services. Recently launched Asan Mobile Account Scheme is a unique model where two sector regulators, State Bank of Pakistan and PTA joined hands, developed a regulatory framework for the scheme and issued joint license to cater for unbanked population in Pakistan. PTA has made concerted efforts to facilitate integration of banking systems with all telecom operators, primarily mobile operators. Digital banking solutions have great potential of contributing towards digital financial inclusion of common citizens and reducing gender gap. PTA is also working actively with the industry on devising solutions for eradicating identity frauds. There is also a need for State Bank of Pakistan and fintechs to devise solutions which eliminate avenues of frauds and facilitate in forensics. Ladies and gentlemen, Government of Pakistan envisioned digital financial services through National Financial Inclusion Strategy, with the game changers are the telecom operators and fintechs. The fintechs could only penetrate with the active participation of telecom players. PTA, being telecom sector regulator, is working to ensure accessibility and availability of telecom services across the country. Just to give a brief overview, we have over 194 million biometrically verified SIMs and subscribers, with mobile coverage to 90% of the population. We have 124 million broadband subscribers, which makes about 56% broadband penetration, with availability of 3G and 4G mobile coverage to 80% of the population. Mobile operators' widespread distribution network across country has resulted in over 88.5 million M-Wallet accounts with over 630,000 M-Wallet agents. For identification and digital onboarding of customers, we've integrated the systems of Pakistan Mobile Number Portability Database, or PMD, and mobile operators with the banks, and also implementing multi-finger biometric verification for SIM issuance to eradicate SIM-related frauds. Due to effective competition in the telecom sector, mobile broadband services are available in the country at very low per GB prices. Affordable internet in Pakistan has enabled Pakistanis to double their average annual mobile data usage per subscriber from 40 GB in 2019 to 82 GB in 2022, showing a great market potential for the proliferation of digital financial services and e-commerce. For the low-cost device ecosystem, the implementation by PD of device identification, registration and blocking systems known as DERBs in 2019 has resulted in very significant increase in legal import of mobile devices and establishment of over 30 mobile assembly units in Pakistan. We have locally produced over 66 million mobile devices, including 4G smartphones, since implementation of the system. According to GSMA, the gender gap in internet awareness in Pakistan has declined from 16% in 2016 to 11%, and PT is committed to ensure access to all and improve gender inclusion in ICTs in Pakistan. Ladies and gentlemen, under the National Financial Inclusion Strategy, PT remains committed to strengthen the digital ecosystem for payments and financial inclusion, banking on a huge market of over 195 million biometrically verified subscribers. This would require whole of the government approach and collaboration between the regulators and the industry. PT will facilitate industry's efforts to provide easy, swift, secure and cost-effective digital solutions for accessing financial services. I am confident that the Fintech Forum will achieve its objective to explore Fintech opportunities for the financial inclusion and cashless society in the country, which is at the heart of all efforts of the government for a growing, stable and documented economy. I thank you all.
Ladies
Good
and
morning,
gentlemen,
and welcome to the Pakistan Fintech Forum.
it is a pleasure for
I wish that I
Pakistan
could be there
Fintech
with you all
Forum
in person,
to have the
particularly
Honorable
after the
Governor
last
of
2
the
years
State Bank of
disruption.
Pakistan, Mr.
Sadly, on
Jameel
this
Ahmad,
occasion.
with us for the keynote address. Mr. Ahmad assumed the charge of Governor State of Bank of Pakistan on August 26, 2022, after his appointment by the President of Pakistan. Mr. Ahmad has served as a banker both at the State Bank and also at the Saudi Central Bank. He is a fellow member of the Institute of Cost and Management Accountants of Pakistan, the Institute of Bankers Pakistan, and the Institute of Corporate Secretaries. Thank you, Mr. Jameel, for being with us. And please give him a big, warm welcome. Thank you.
Bismillahirrahmanirrahim. Syed Nadeem Hussain, Chairman Pakistan Fintech Networks, CEO Fintech Network, distinguished speakers, ladies and gentlemen, Assalamu alaikum and a very good morning. I'm pleased to be here today at Pakistan Fintech Forum, which has gathered experts and practitioners of the industry to deliberate on enhancing financial inclusion in the country by leveraging technology. I would like to take this opportunity to share some thoughts on the topic and why we at the State Bank of Pakistan think that technology is the way forward for enhancing financial inclusion. I would also share SBP's expectations as a regulator with the fintech industry. Ladies and gentlemen, financial exclusion and high usage of cash is a major problem in Pakistan. In fact, even people who have a bank account often find it difficult to access formal financial services relating to credit and savings from their service providers. As a result, people and businesses rely on cash for their day-to-day financial needs and resort to informal savings and risk management methods, including borrowing from informal lenders at a very high rates for meeting their financial needs. Today's disruptive digital technologies enable people to not only be financially included, but become financially enabled as well. We are witnessing the rapid emergence of mobile technologies, which not only provide easy access to financial services for customers, but also enable business to rapidly identify customer needs and create value for them. While I must acknowledge that these technologies are being embraced both by traditional financial institutions and non-financial players, ranging from smart startups to large technology firms, but a lot more needs to be done. I do hope that this conference will conclude with some innovative ideas on the key theme, which is breaking barriers through digital financial inclusion. Accordingly, I would like to focus today on the extent and gravity of the financial exclusion and lack of digitization in Pakistan. I would also summarize what SBP has done so far to facilitate the enablement of fintechs and adoption of new technologies. Ladies and gentlemen, in Pakistan, over 60% of people are in the age bracket of 16 to 30 years, making it one of the youngest populations in the world. However, only 82 million people of the estimated 132 million adults have bank accounts. This translates into account penetration rate of only 62%, which is one of the lowest in the world. Even more challenging is the glaring gender gap. For every 3 men with a bank account, there is only one woman with a bank account. If we move from basic accounts to credit provisions, situation is even more challenging. Access to finance, to micro enterprises, SMEs, and housing is very low. Due to the emergence of new disruptive technologies, today's consumer preferences as well as needs of businesses are evolving rapidly. While on the one hand, consumers are demanding newer and more convenient services, on the other hand, businesses are striving to identify the needs of their potential customers and find ways to fulfill them. New business models based on data sharing and advanced predictive computing are not only enabling these businesses to proactively identify and fulfill their customers' needs, but also to address their risks in innovative ways. Platform-based models are enabling enhanced collaboration among different types of service providers. These platforms are playing an important role not only in providing finance to various sectors like agriculture, SME, housing, etc., but also helping in better risk management of the businesses. It is also important that our fintech sector work with a collaborative spirit to build such platforms. Today, in Pakistan, we have most of the enabling factors in place that allow the blossoming of a tech-based financial ecosystem in the country. These include a fully functional digital ID system, ubiquity of mobile devices, penetration of mobile and broadband services, availability of faster payment rails, remote account opening process, and facilitative regulatory frameworks for enabling the entry of non-bank entities into the financial arena. Ladies and gentlemen, SBP is aware of the potential of new technologies and the role of new players in improving financial inclusion in the country. The rise of disruptive technologies enabled by mobile devices and rapidly expanding tele-density has necessitated that SBP to acknowledge the role of non-conventional players in the financial arena and take steps to enable them. Let me now briefly describe some of the measures that SBP has taken to facilitate fintechs and adoption of technology by the financial services providers in Pakistan. First, we have introduced policies and regulations aimed at enabling new fintechs to offer innovative digital financial services in Pakistan. In 2008, we issued the regulations for branchless banking, thereby introducing and enabling the use of agents for providing basic payment services in Pakistan. In 2014, rules for payment system service providers and payment system operators were issued to facilitate the establishment of e-payment gateways in the country. In 2019, SBP also issued regulations for electronic money institutions, that is EMIs, to facilitate the issuance of e-money wallets without requiring the issuer to be a bank. Earlier this year, SBP issued a licensing and regulatory framework for the establishment of digital banks in Pakistan. Second, SBP introduced digital or remote account opening framework in 2019 when it allowed banks and EMIs to remotely onboard small merchants digitally. Last year, this framework was further enhanced into a comprehensive customer digital onboarding framework for conveniently and remotely opening bank accounts by resident Pakistanis. SBP also worked very closely with NADRA to allow the use of remote biometric verification using mobile phones, which is a salient feature of the framework. SBP also launched the Asan mobile account scheme so that people who don't have access to internet-based smartphones can remotely open accounts using their feature mobile phones over USSD network. Another key initiative in this regard is the Roshan Digital Account that enables non-resident Pakistanis to open and operate accounts without lengthy documentation process. Through Roshan Digital Account, SBP enabled the digital onboarding of overseas Pakistanis who now can remotely open an account within a short span of 48 hours. Since its introduction, more than 450,000 overseas Pakistanis have opened digital accounts and have sent more than $5.3 billion to their accounts in Pakistan. Third, SBP also realizes the need of developing and modernizing the payments infrastructure so that citizens can efficiently pay and receive funds. SBP took a number of steps to introduce interbank fund transfer and utility bills payments functionality and Pakistan's own payment card scheme called PayPal. As you are aware that SBP has launched Pakistan's Instant Payment Gateway, which is called RAST. RAST is built on state-of-the-art payment technology and world best standards, which is ISO 222 certified and offers a number of features to support the growing fintechs ecosystem. On RAST, we have already deployed the functionality of bulk payments and person-to-person or P2P payments so that customers can transfer their funds. Today, on average, RAST processes around 200,000 to 300,000 transactions per day, person-to-person transactions per day, valuing at around 5 billion rupees. Next year, SBP will launch the Quick Response or QR code based person-to-merchants or request-to-pay functionality, which will enable merchants and small businesses to receive instant payments from their customers. I believe that RAST will provide the key enabling building blocks for taking Pakistan's payment industry to new heights. SBP will continue to work with all stakeholders to promote the introduction and use of innovative payment methods to promote digital payments acceptance in a cost-effective and efficient manner. Finally, SBP realizes the importance of sharing customer data to promote innovation and to make financial system even more accessible. However, this needs to be done in a safe and secure manner so that we can ensure the security of data and also with full consent of the customers. We are working on the open banking initiatives under which banks, with the consent of their customers, would be able to share their selected data with other banks or fintechs so that they can build and offer better customer-centric products. As part of this initiative, SBP is working on the development of a technical sandbox to test and standardize the application programmable interfaces for various use cases. I know that many of you are impatiently waiting to join the sandbox. So let me assure you that we will expedite the process so that the applicants to the sandbox get a chance to test their use cases. To harness the potential of distributed ledger technologies, SBP is also researching the central bank digital currency, commonly known as CBDCs, and is weighing the cost-benefit analysis of this venture. We have examined almost all the jurisdictions who are either experimenting or have issued CBDCs in their respective jurisdictions. However, we will tread this path very carefully, especially with regards to design choices and use case analysis. SBP is also working with the service providers towards improving the overall customer journey and user experience so that the citizens of Pakistan have easy, convenient, and low-cost access to financial services. Ladies and gentlemen, this brings me to the concluding part of my remarks today, where I will share my expectations from the fintech industry. The first message for the fintechs and the industry is to work towards creating customer-centric products and services that brings real value for the economy. Secondly, focus on reducing the transaction cost. I would encourage fintechs to adopt a business model that reduces the transaction cost by innovative and intelligent use of technology in a sustainable manner. Third, fintechs needs to build partnerships and adopt a collaborative approach. In today's world, we are witnessing the rise of platform-based businesses. These platforms have the ability to collaborate by sharing application programmable interfaces, APIs, and then build new products and services. This may include building lending platforms for SMEs and micro SMEs, or integrating the formal financial mechanisms in the housing or e-commerce platforms. I would therefore encourage the fintech industry to collaborate and build partnership not only among themselves, but also with other financial services providers to create customer-centric products and services. Fourth, focus on customers and on providing them stellar and immersive use interface. Work on improving user experience, customer service, and developing and harnessing new ideas. While we appreciate the target of building a billion rupee companies that new tech companies usually aspire for, but the focus on servicing the customers must not be lost in this process. Finally, ensure regulatory compliance and foster a culture of good market conduct. SBP has observed some slippages in this area in the recent times, but let me assure you that SBP will not compromise on customer protection, good market conduct, and financial stability. In conclusion, I would like to reiterate that digitization of financial services, financial inclusion, and growth of the financial sector are intertwined. Evolving demographic landscape and convenience-centered user preferences can be met by those financial institutions that wholeheartedly embrace digitization. As our population matures, more financial consumers will demand services that can better and efficiently be delivered through digital means. Digital financial services entail reduced operational costs, improved operational resilience, enhanced access to new customer segments, increased business revenues, and provision of market-desired financial services. With this, I would thank you to all of you for inviting me and also giving me a patient hearing. Thank you very much.
Thank you, Mr. Jameel Ahmad, for highlighting the priorities of the State Bank. I'd request you to stay on stage because we're just going to have a quick shield and certificate distribution ceremony. So once again, thank you so much for being with us. Please give him a warm applause. If I may invite Mr. Nadeem Hussain, Chairman, Pakistan Fintech Network, to join me on stage, and we will now have a shield and certificate ceremony, starting with Mr. Farrukh Khan, CEO and Managing Director, Pakistan Stock Exchange. Please join us on stage. If we could have the shields on stage also. Thank you. And if the photographers can quickly come take pictures and we can move forward. G.
MasterCard का जो है ना साकिब अली को देना है on the behalf of this one साकिब अली साकिब
Ji, on behalf of UBank, we will request Mohammad Farrukh Kamran to collect it for Mr. Kabeer Naqvi. Applause would be really nice. Yes. Thank you. For Mr. J.K. Khalil from MasterCard, we request Ali Saqib to join us. Thank you so much for supporting the Pakistan Fintech Forum. I will now request Syed Junaid, Imam, Managing Director, Pakistan Software Export Board and Ministry of IT, to please join us. Thank you. We will also be inviting the panelists. Not everyone is here, but those who are here, we would like you to come and receive your certificate. So I'll just start calling the names for the panelists also, so that you can line up. Mr. Babs Ogundeyi, CEO and co-founder, Kuda Technologies. Thank you. Ji. Mr. Babs, please. From Nigeria, yes. Great to have you here and looking forward to your talk and then further discussions. You come here, please. A warm welcome to our friend from Nigeria. We have a lot to learn from Kuda Technologies. They have set up a digital bank with, I believe, 5 million customers. So it's quite exciting to hear from them. Thank you. Mr. Mudassir Aqil, will you quickly join us, President and CEO, Telenor Microfinance Bank. Followed then by Mr. Irfan Siddiqui, Founding President and CEO, Mizan Bank. Great. Mr. Irfan Siddiqui, please. Founding President and CEO, Mizan Bank. I think wo nahi hai. Mr. Rahmat Hasni, President and CEO, National Bank. Are you here? Maybe not here. Maybe some of the panelists are not here. Yes. Mr. Umar Moeen Malik, Head of Easy Pesa Business, Branchless Banking. I think we couldn't stop it. Yes, because there are many people are not. So thank you so much. Thank you so much. We will now break for tea. We have 15 minutes for tea break, so do enjoy your tea and come back for the next sessions. So we expect you back by 11:20. Thank you, everyone. I'd like to encourage everyone to return and join us for the next session. So if we can all help people who are still outdoors chatting to come back into the room so we can start. Can we please request people to make their way back? Thank you. We are going on time, which is great, and we want to maintain the schedule. Azima, can you help me bring more people back into the room because there are several people out? Thank you. Welcome back, everyone. We will now be moving into a fireside chat. As people make their way back from tea, I'd like to share with you that the Pakistan Fintech Network has 58 members, and they range from microfinance banks, tech startups, to agri-tech firms, and we're really happy to bring them all together on this platform. Thank you, ladies and gentlemen, for making your way back after tea. I hope you are energized and ready to move into the next session. We will now be having a fireside chat, which is a chat between Mr. Aamir Khan, Chairman, Securities and Exchange Commission of Pakistan, moderated by Nadeem Hussain, Chairman, Pakistan Fintech Network. The topic is the role of the regulator for tech disruption. Mr. Aamir Khan brings 25 years of financial sector experience. His expertise includes capital and risk analytics, management and directing financial strategy for both national and international firms. He is unfortunately unable to join us in person, so we do have a recorded session that we will play now.
Assalamu alaikum, ladies and gentlemen. I have the pleasure here to be with the chairman, SECB, Mr. Aamir Khan. Aamir and I go back a long way. Since Aamir has come to the SECB, very honestly, we've seen great traction on many fields. So we're going to take the next 20-25 minutes picking Aamir's brain and asking him to respond to some certain of our queries. Aamir, thank you and welcome to the Pakistan Fintech Network's digital conference.
Thank you for having me.
Aamir, the first question is, obviously you're well aware that we have huge financial exclusion in Pakistan. You know, the number of active users, whether it's loans, whether it's insurance, whether it's saving, the whole financial services seems to be limited to a certain segment of the society. What is the SECP's position in using digital disruption to fix this particular issue or get on a journey in fixing this financial exclusion issue?
Thank you, Nadeem. Nadeem, I think before I answer the question, I would just like to briefly touch upon that SECP does have a very, very wide mandate, and a lot of people might not know. But SECP actually administers 14 specific primary laws. So it's a very, very wide scope that we have, from insurance to mutual fund, to lending NBFCs, to private equity, to real estate investment trusts, to capital market, to futures market, and obviously the corporate registry and registration of charges that take place over there, the secure transaction registry. So there is a very, very wide mandate, and the number of companies and the number of regulated entities that we have and we oversee, and there are associations of like chartered accountants and cost management accountants. So we do have a very broad spectrum to look at, and hence if we do it right, we can definitely have a very large impact in terms of financial inclusion, and that's basically what we've been trying to do. Very earlier on, when we started this journey, we were very clear that perhaps there are 2 or 3 things which are the key enablers in this regard. And one of the enablers was simplification of laws, because we felt that we have rather a complicated legal framework that exists at this point in time, and we need to simplify it and reduce the regulatory costs and burdens in terms of time and money both. Also, we wanted to make it simple so that barriers to entry are low. We wanted to make it easy for people to come up with new ideas and develop products and services, and attract investors of all kinds, given their whatever their palette is there. And we look at financial inclusion generally when people talk about it. The immediate thing is to go to access to finance side of the financial inclusion. Fortunately, we have a very broad spectrum, as I said. So what we've tried to do is if we look at I'm not going to go too much into the details of the regulatory changes, but obviously they are very significant. Primarily, I think what I'm going to talk about is digitalization, and we have created enabling frameworks for digitalization, whether it's in the mutual fund industry, whether it is the insurance industry. And likewise, we have launched the secure transaction registry, and 115,000 charges on movable assets of poor persons have been created as a result of that. We have enabled digital lending, which has incorporated a very large number of new borrowers. We have supported and nurtured the non-bank microfinance company space over the last few years, and they are now huge in terms of the number of borrowers, 3.5 million borrowers, and 75% of them women, and outreach that exceeds outside the boundaries of the large metropolitan cities, unlike the other financial institutions in that area. I think we've also encouraged the brokerage industry to move towards digitalization and make offerings on that. And finally, I think we have now IMLAC, which we encourage CDC and support it, through which mutual funds can be distributed.
Ahmad, the SECP was the first regulator to create a sandbox provision. So, I mean, you not only created a sandbox, but you also have had various cohorts in it. So what was the rationale behind creating this SECP sandbox?
Yeah, I think, Nadeem, the way it started off was that we felt that, again, because of the complexity, I mean, I think there were 2 or 3 main driving forces behind it. One was the regulatory complexity of existing structures and the need for people to invest large amounts of capital upfront. They might have a great idea, they might have a solution to a need that needs to be served, but they might not have the capital for it, they might not have the infrastructural wherewithal or the competency in terms of corporate management side of things, and yet they would have an idea. So I think one of the things we wanted with the large young population, and some of whom are very creative and have brilliant ideas, as you perhaps know better than me. So given that, we wanted to create a space for them to operate and try and test their ideas. The second thing, I think what we wanted was, we also wanted to basically try and create enabling regulatory frameworks for areas which were untapped so far. But I think the third thing, and the most important thing that I think was foremost when we were going on this journey to start the sandbox, was to ensure that we have an open dialogue with those people who find it difficult to get their voice across to the regulator, because this is an opportunity. It is publicized. We do webinars around it. We give a lot of opportunity to youngsters to come and present. It's a very thorough process. It's a very large team inside SECP which goes over them, and it's a very transparent kind of a mechanism. And we advertise in advance, and then people get an opportunity to present their business case in front of the SECP team. And then eventually the commission approves who makes it to the finals of the cohort and tries the idea. So I think there was immense amount of learning opportunity rather than a closed door regulator. It actually, I think that needed to be opened the door for people to come and share what they thought what the market needs. And in certain instances, it did impact on how we moved to actually improve or grow certain areas.
As an industry practitioner, that the sandbox in the SECP, very honestly, was revolutionary. It allowed companies to interact within a set framework to explore new ideas and actually start doing interventions for the customers which the current laws did not allow. So I would like to talk about some of the specific solutions that were in the 3 cohorts that you've done so far, because I think vis-a-vis financial inclusion, these can have, they can move the needle. I mean, if done correctly and done well, and the enabling requirement comes in. So the first solution I want to talk about is the peer-to-peer lending solution that was approved in one of the cohorts that the SEP did. Now, peer-to-peer lending, especially given that our commercial banks only lend to 1.5 million people, and the entire microfinance industry, both MFEs and MFIs combined are 8.5. We only have 10 million active loan customers in the entire Pakistan active loan ecosystem. But peer-to-peer lending has also experienced some challenges where they were initially first very successful in the US as well as China. How do you see, firstly, the potential impact of peer-to-peer lending in Pakistan? Secondly, what are the learnings and lessons in the 2 countries I talked about where peer-to-peer lending subsequently faced some challenges? How is SCP thinking of mitigating against the potential risk associated with those infractions that took place?
So yeah, I mean, it was a difficult one to crack, frankly, Nadeem. And when they came, there was Finja who came up with this idea to us. But we immediately realized that there is immense potential in it, because some of the things that attracted us immediately to the model was that it was scalable. Obviously, it was targeting people who would never get financing from a normal bank or a normal financial institution. That was number 2, and number 3 was the ability to actually structure something in a way which would not endanger the investors' money to a great extent, alluding to the point that you made towards the end of your discourse. So I think on all 3 counts, it was a good idea to test it. There was about, I think, if I'm not mistaken, about 35 million plus, or between 35 to 40 million disbursed to over 3,500 Kriana stores. And they backstopped it quite well. And one of the features that we added, I think, is what was critical, where we did demand. Now, this was, maybe you can call it unreasonable, maybe you can call it unconventional, but we thought that perhaps some kind of a skin in game is necessary. And it shouldn't merely be, because if people know that they've got 15 or 20% skin in the game and that's the money that they have to pour in, then the underwriting standards and the structuring would be much more robust compared to a situation where we just allow, and I think that was critical from our perspective to avoid the moral hazard, for the lack of a better expression, that a P2P platform does present. I think in terms of loan loss provisions, it was excellent. In terms of the return that it provided to the investors, it was excellent. And I think the model by and large works. Now, the real challenge is how to scale it up. We have allowed and created provision for other NBFCs to come into this area. And I think 3 have already shown interest. 1 is already operating. So let's see how this progresses. But I have great hope of it. Like any other idea, it will take its time to mature and grow. And maybe at some point in time, we can relax the skin in game part as they gain scale and they start facing growth pains. But until then, I think we are good with what we have proposed at the moment.
So, Aamir, is a separate license required for an entity to engage in peer-to-peer lending, or it's an NBFI standard license which allows them to do this activity as well?
Um, Nadeem, I just don't want to be saying something which I'm not 100% sure, but what it requires is an existing NBFC license is good. There is some equity requirement, which if my memory serves me right, is 20 million. So a normal license is 50 million. For this, perhaps the license is for 70 million. But it's not a separate license. You can get an NBFC license to keep things simple, and you can simultaneously register a P2P platform for which you have to have that equity requirement and certain other application requirements that you.
So, I mean, so an applicant can apply for the P2P license, NBFI just limit itself to peer-to-peer lending, follow whatever the requirement is with a capital of 20 million as opposed to 50 million.
Capital of 20 million plus 50 million. 20 plus 50. So
20 plus, okay.
Yeah,
so
yeah. It's about 70 million that you need. Yeah.
I think, I mean, this can move the needle if done correctly. And since you have skin in the game issue, potentially the moral hazard, which we experienced in those two countries where it was just a platform and no responsibility for the platform owner. You alluded early to mutual funds, and as we are both aware that the penetration we have of mutual funds at the retail level is seriously wanting. You know, across our neighbor has been able to get a lot more penetration at the retail level for people to become aware of the capital markets, being aware of the mutual funds. And in your cohort, you obviously had some companies other than the company you mentioned also to try and get this out. What do you think are the main challenges for our brokerage houses or companies which are trying to get to this target market in increasing the penetration and making our people aware of the potential of the capital markets?
Yeah, Nadeem, I mean, I wouldn't really try to be cagey or defensive on this one, but I would like to say a few things. So I think the industry is now at about 1.3 trillion. It is about 6% of the bank deposits and about 2% of the GDP. And the CAGR over the last 3 years has been, I think, if my memory serves me right, about 27 to 28%. So it isn't really that hasn't grown or it hasn't. But to your other point, in terms of number of investors, yes, it has not done as well as we would expect it to, and given the size of our population. And I think a couple of things there were that on one side, we had some challenges in terms of the approach towards distribution. And that was basically the industry, it seems, was more focused on the brick and mortar approach up until 3 years back. And also, I think, in all fairness, the industry was perhaps over-regulated as well. So you put the combination of that with brick and mortar and the kind of investments that are needed to grow, then obviously your outreach gets stunted. And I think what we did was that we've enabled the digital distribution. We've allowed them to have their own platforms. We've allowed other robo-advisors to come in. Amlak is already up and running. Although I think in terms of user experience and in terms of being catchy and connecting with younger investors, Amlak still has some catching up to do, because I was recently looking at a report, OECD report on how these kind of investments, or what kind of investments have been attracting more younger people and what kind of platforms. So I think one of the key things that we are still missing out on, my learning, is gamification of investment. And I think we are not there. I think that in terms of the quality of presentation of the website, its friendliness, and how it does that, I think we also have some challenges on KYC, given the concerns around that area, AML area. I think we are working on a payment gate, a KYC capital market gateway project with CDC, and that should simplify the KYC process. A block is already there. We need more digital distribution. And I think the third thing was a paucity of products. And I think the emergence of ETFs. ETFs are always very slow to pick up for obvious reasons. And I think we have some regulatory challenge which we are trying to resolve for some time, but we need some approvals from it for it, which would allow brokers to launch their ETFs. And once I think that happens, this space should grow further. Because and right now we have I think 7 ETFs within a matter of 2 years. We have a debt ETF which seems to be doing very well at the moment. In 2 months alone, it has since its launch, it has done very well. So I think we have good times ahead of us. We've got the strategy in terms of the market development right. And I think we have some good players over there who will take advantage of these reforms that have been taken, and also the relaxation in the regulations. That so there was a time when we actually needed SCCP's permission to publish an advertisement, and SCCP actually approved the advertisement also. So I think we have done away with those kind of things. And
Ahmed, we've seen the world over. One of the cutting edge thing is tokenization and fractionalization of assets. When one talks about coming down the income stream, then you need to make the asset much, much smaller and palatable. You need to make the asset liquid, and you need to make sure that the customer is protected, because when you go down the income chain, you're getting less informed customers coming in. In one of the cohorts, I think you have 1 or 2 companies where you started on the fractionalization of real estate. The real estate the asset class is a huge category. For the higher end, you already have REITs, but if you're coming down the bottom and you're looking at fractionalization real estate, I understand that you have 2 potential players, people, a platform, and also people who want to subscribe to that platform. I'd like to focus on the platform itself. I understand laws need to be changed. I'd like to understand what your thought process for this particular initiative is, and what do you see the challenges to enable fractionalization of real estate to start, but then you can take potentially any asset class to make it available to the retail level.
That's, I'm sure that's an area which is of interest to a very large number of people present here today. I think what I would just say is that I'll just take you 1 minute to go through with the journey. So what we did was that we made a very simple kind of a position paper and launched it about over a year ago on this matter. And we followed that up with including tokenization as a possibility in our sandbox, and different permutations and combinations people applied to us. We allowed 2 of the companies to go ahead, and one did actually go all the way, which is Microfinance, and they managed to actually tokenize and take on board investors' money as well as that, and that process is still running. Subsequent to that, learning from that experience, learning from those challenges, and it was a 2-way exercise, which was quite exciting, frankly. We were able to come up with EYFR to actually do a study. And that study, the first draft has already been submitted to us. We have given our comments on it, and it's now being finalized. Will totally in its final stages. And also simultaneously, we also started drafting the regulations for running a platform. So terms like white paper and AF platform and everything to do with it, we are very familiar. The team is very familiar, and we're working on that. And it's my hope that the first set of regulations for public discussion will be in the market latest by early December. And once that happens, we have 15 days to do the market consultation and then bring the regulations back to the Commission for the final notification. So in a best case scenario, end of December, otherwise this journey that we started over a year ago, we expect it to culminate, and at some point in time, early next year, first quarter, we can start looking at licensing some of the platforms that are interested in.
Ahmed, there was a debate in the market, and I'm sure SSP is aware of that, as to the capitalization level required for the platform. I understand there's a regulator concern for creating liquidity, for getting skin in the game, and other aspects of mitigating moral hazard as to the level of capitalization. The flip side is that as you're aware that people who are innovative, people who are startup, don't have that level of capitalization necessary. So is SLB considering this balance while it comes up with the final number, it feels adequate for this capital licensing requirement?
So, Nadeem, I think the situation with this particular challenge is that we would very much want people to be attracted towards it, and we would like youngsters to participate in this entire exercise. But this, we feel that the cost of the platform, the cost of the compliance, the ability to meet KYC requirements, and also even in this case, there are certain issues around the skin in the game and those kind of issues. So at the outset, as you can imagine, this is a very, very big opportunity, and we do not want at this stage, at least that's the thought process right now, we do not want this opportunity to actually have a false start. So it is very critical that we get the people with the right kind of resources, training and ability to build a scalable model, and then I think at some stage if there is a need to attract more people and increase the size of the pie, so that can happen, because we are also looking at some of the global scenarios where people are struggling with controlling the mushroom growth and the challenges around that. So I think, but having said all of that, we are trying now SCP to have public dialogues which are very open, which are very candid, and which are actually dialogues and consultation in substance rather than form. So we'll be very open to listen to the views of the public once the regulations are put into circulation for public consultation.
Perfect. Thank you, Aamir. One last question. We used a lot of your time. I appreciate it. You alluded to Nemat Capital. Nemat collateral, in initial talk. Now, Nemat again is a revolutionary idea that the SECP helped orchestrate, conceive, and then got CDC to execute. The electronic warehouse receipt, the first one was traded at Pamex, which I understand was your ambition as well to get it traded. But the Nemat hasn't taken off where probably what your initial desire was in terms of the traction that it wanted. How do you see addressing the Nemat challenges, because it can have a very serious impact, especially if you started going down the value chain and went beyond grains at some time. I'm not saying we limit ourselves only to grains, but maybe going to perishable, which probably has more complexities than grains does. But on the face of it, Nemat looks like a huge problem solver. So what are your thoughts on Nemat, and what are the further developments you expect to see on electronic warehouses?
So Nadeem, you're right. I mean, this has got the potential to be something really big, and I think it is critical, because when we talk about regulators being aligned with the real economic needs of the economy in which they operate in developing economies, this is a very critical area. Now, the challenge obviously is that the magnitude of it, especially after the fact that that agriculture is a provincial subject, and to try and create an environment or the trading of it at a centralized exchange has its own legal challenges. So this is the kind of initiative which comes along once in a decade. It requires a decade to mature, and it needs to be nurtured carefully and carried handheld for a long period of time to make a real meaningful impact. And I think it requires a concerted effort from SECP and collaboration with State Bank, which is already there. We have a lot of support and at all levels from the management at the SVP, and I think that is the way forward. We are also trying to engage with the Agriculture Coalition. We are also trying to engage with provincial food departments. The PMAX is also trying to play its role. So this is going to require for everybody to come together, and it will take some time. I think we have to give it more time and patience and more nurturing before it blossoms into something meaningful. And once it does, I agree that the more we move towards perishables and vegetables and those kind of areas, the margins and the scope would enhance significantly for everybody involved.
Thank you, Ahmad. It's indeed been a pleasure talking to you. You know, the vastness of the area, the intervention that SCCP is working on is indeed heartening. I thank you for the time that you've taken. I know you have a very busy schedule. If you have any ending comments, that would be great. Otherwise, I will thank you once again and welcome you, to the conference if you physically are in Karachi.
Thank you very much, Nadeem. I wish everybody a very happy conference, and I hope we get some great ideas from this conference that are important and that we can move with going forward.
We will now be moving into a tech talk. The topic is, can digital banks help solve financial inclusion in developing markets? Very relevant for Pakistan, which faces one of the widest digital and financial inclusion divides and hence offers huge opportunities. I'm very pleased to welcome Mr. Babs Ogundeyi, CEO and co-founder of Kuda Technologies. Kuda is building digital mobile banking solutions in emerging markets. Their first successful operation has approximately 5 million customers in Nigeria, a country very similar to Pakistan, both in population and GDP. Mr. Kuda is dedicated to making financial services more affordable, accessible, and inclusion. We appreciate that goal tremendously. And now, in association with Fatima Fertilizers and City Schools, has applied for the State Bank digital banking license. Please join me to give a very warm welcome to our friend and colleague from Nigeria, Mr. Babs Ogundeyi.
Assalamu alaikum, everybody. So I'm very happy to be here, and thank you for having me. This is my first time in Pakistan, so if there are any questions later, please be nice. So let me just introduce myself properly. My name is Babs Ogundeyi. I'm actually sort of been working within financial services all my life. I know my appearance doesn't appear so, but this is me sort of transitioning from a financial services person into a tech person, and apparently this is how we need to appear as sort of tech experts. A little bit about my background. I was raised in the UK. I went to school in the UK. I worked within a company called PricewaterhouseCoopers for many years. All my clients that I worked with were banks, 90% banks, but mainly financial institutions. And I did that in the UK and also in Nigeria. And whilst in Nigeria, I also had the privilege to work in public sector. I was a special advisor on finance to the Nigerian government. The reason this sort of experience is important is because it really kind of exposed me to sort of what it means, what financial services means generally, but more importantly, what it means to people in emerging market and the potential that it has in helping people in emerging markets. And that's sort of pretty much the reason behind setting up Kuda. Now, what is Kuda? Kuda is I would say a digital bank is probably the easiest way to describe it. And the mission is to provide affordable and accessible financial services to people. and also make it somewhat rewarding as well. As we know, financial services is pretty complex. At least traditionally, it's been sold as something pretty complex, which kind of explains some of the reasons why inclusion has been difficult. Most everyday people don't necessarily always understand the I would probably say the terminology that financial institutions use to describe themselves. Again, this doesn't aid inclusion. So one of the things that sort of Kuda has looked at is how do you simplify financial services for the everyday people? And this fact is super critical in aiding adoption for the masses. And you may be asking, although someone already touched on it, why is somebody born in the UK, Nigerian, working in Nigeria, in Pakistan? And the reason for that is Kuda, along with his partners, my friends at Fatima Fertilizer and City Schools, we've applied for a digital banking license from the State Bank of Pakistan. And the reason for this is because I believe very strongly that the experiences that we've learned over the last 3 years at Kuda in Nigeria is extremely relevant to Pakistan. There are huge similarities, similar population size, similar complexities in terms of sort of ethnicity, size, the infrastructural layout, and all the sort of different challenges that you all know about. These are things that we've experienced since 2019 when we launched the first Kuda product. Okay, so the topic for today essentially is talking about how digital banks, or I would prefer to call it digital financial services, can help solve the huge problem of unbanked, underbanked financial exclusion. You can see from the map, these are some of the sort of key countries that in emerging market that this problem really persists in. And of course, Pakistan is one of those countries. But the beautiful thing about these countries is the demography is very young. This is critical because digital financial services essentially is about relationships. It's what is your relationship with money and how do you interact with money? Now, there is a huge opportunity to change the mindset, not even to change, but to kind of lay claim to the mindset of an existing generation. Now, in emerging market, there are about almost 2 billion people, 2 billion unbanked, or 90% of the 2 billion unbanked or underbanked are from emerging market. And because the population is very young, about, I'd say 70% generally across board are under 30, this means that, you know, people connecting digitally is not going to be as hard a sell to an older generation that have been used to connecting in a traditional way, in a brick and mortar way. And it is that brick and mortar, at least in my humble opinion, that has not aided inclusiveness when it comes to financial services. So there is a huge opportunity to change the way the world sees money and interacts with money with this generation. This is a generation of digital natives. They're comfortable to a large extent with interacting with the world digitally. So they will be comfortable interacting with money digitally. A huge part of sort of the success factor is trust. So historically, that trust hasn't necessarily been there again, because financial services is generally expensive, most of the traditional players have gravitated towards a very niche, privileged few. And to those niche, privileged few, there is enhanced trust. So, but the masses, to a large extent, has been neglected. And it's purely a business decision, you know. The effort that I would require to onboard an affluent customer and a non-affluent customer is relatively the same. So if I had to make that decision, I would gravitate towards the one that most likely will bring me the most revenue. But obviously, technology demystifies this, and through democratization of financial services, we have the opportunity to reduce the cost of onboarding. So it doesn't matter your level of affluence, the cost of onboarding is exactly the same. Thereby sort of making it attractive to create adoption even for the masses. So I think it's important to, and I touched on it, it's important to understand sort of the hindrances and limitations of financial services and the hindrances of financial inclusion or financial exclusion. You know, one of the biggest things is KYC, which I just talked about. The cost traditionally is expensive. Now we have API-driven, cloud-based API-driven technology, which enables us to onboard, lots of people in an instant. When Kuda started in Nigeria, there weren't a lot of companies that were onboarding digitally. I would say we were one of the first. Now it's seen as quite normal, and this is just in 2019. Which is not that long ago. But today, it's very normal to onboard a banking customer or other types of financial service type customers digitally. In order to do that, there needs to be some kind of enabling environment, which, you know, I'm very happy to hear the chairman of the Fintech Association mentioned in his earlier speech about the way the regulators are now endeared to creating the ability to onboard digitally, because that is the first level, and it's a very critical level that you need to get it right if this is going to be successful. So I think the KYC element is kind of it's now acceptable to onboard digitally. And if you look at it in terms of a potential fraud perspective, it's actually safer than somebody walking in with documents. And I'll explain the reason for that. Fraudsters are super smart. They're probably, in terms of advancement and progression in technology, they're, unfortunately, kind of keep up just as fast as innovators than what I would say the regulation moves in. So what I mean by that is fraudsters are moving faster than regulation, and that's very dangerous. Now, what innovation has done is to attempt to remove the element of potential fraud. So if I walked into a bank with my fake documents, how would a teller that is, or an officer that is onboarding me, how would they be able to ascertain for certain that that document is an authentic document? They probably wouldn't if it's a very good forgery. But imagine if you have direct access to the source information. So through APIs, you can connect directly to, say, the driving agency. You can connect directly to the voting agency. You can connect directly to identity management agencies, which, number one, at least you know that this person really does exist, because that is the source agency. And with facial recognition technology, you can confirm that the photograph at the direct source, at the agency, is the same photograph that has been supplied. You can do liveness checks through selfies. So when you look at it in terms of fraud, you actually eliminate the first part of fraud, which is the part that allows fraudsters to get into the system. So you've eliminated that. So going digital, even for digital first financial institutions, is actually very critical, because any kind of fraud requires a financial institution to store the money, move the money. If we eliminate that, we definitely, if we eliminate access to open accounts and whatnot, we definitely reduce the ability for fraud instantly. Another key sort of element of, I would say, financial inclusion is access to credit. So it is not enough to be banked. You need to be able to do lots of things. So yes, you have an account, but what can you do with that account? Are you able to, and I think someone spoke about sort of fractionalization, super important. Are you able to have access to increased wealth? Because that becomes the true, I think, advantage of making everybody inclusive. Because when we talk about inclusion, who does it really benefit? You know, digital is kind of expensive, and cash is not, at least to the user, to the end user. So there needs to be a strong incentive for me to become digitally inclusive or just financially inclusive. Because if I have my, and I'll use dollar currency, because I think in dollars, so it's a bit easier for me. So if I have my $5 and I keep it under my pillow, if I go back to it, assuming it hasn't been stolen, my $5 is still my $5. But usually, with digital, if I put my $5 in a bank, say, or even non-digital, just in a bank, the expectation is there's going to be some charges. So my $5, you know, it's already small, but it's no longer $5. So what is the incentive for me to become, you know, financially included? There isn't really any. So we need to sell, and we need to create that incentive for people that we need to be financially inclusive. And there are two areas that I see that we can do that. One is credit, and one is opportunity to sort of fractionalize financial services. Essentially, ability to increase wealth. So if I know that, you know, if I keep this $5 in a bank or in a financial institution, and I use it judiciously, I have the ability to increase it to $10, to $15. You know, so how do we do that? We do that with credit. With credit, there is a huge opportunity to leverage on data and the behavior of consumers, making access to credit almost instantaneous. And this sort of instant gratification is super appealing to anybody that sort of we're looking to include in the financial ecosystem. Another point is fractionalization. So one of the products that we recently launched on the Kuda app is a stock trading product, which basically gives consumers access to stocks all over the world, even the US stocks, local as well as international stocks. And what that does is it actually allows the masses to have access to some of the benefits that the more affluent segment of a population has been having for years, which is the ability to increase wealth through what I would call smart thinking rather than hard labor. And I think that's very important to start introducing that. Before technology and before digital financial services, that hasn't really been possible because of the cost of investing and the cost of doing business with some of these sort of platforms or traditional players. But fractionalization really removes that and makes, even if you wanted to invest equivalent of $1, it's possible. So I think that's super important, and technology allows us to do that. And one final thing I'd mention is education. Education goes beyond sort of financial literacy. It goes beyond trust, which is very, very critical. But it's also, we need to find a way to ensure that we sell the real benefits to everybody, not just sort of masses generally, but also in terms of gender. We need to be able to sell benefits to the female consumers as well. So, for example, at Kuda today, we have a 70-30 ratio, so 70% male users, 30% female users. But when we look at credit, we actually have a significantly higher repayment ratio with the female users than the male users. So there is a benefit to, increasing the pool of the female consumers. And all of these things, in terms of sort of just educating the consumer, educating everybody about the benefits of financial services, I think if it's done correctly, will significantly improve the inclusion ratios of financial services. Now, if we look at, again, some of these things I already touched on, the solution. We talked about onboarding already, super important, so I'm not going to spend much more time on that. But some of the other things you're able to do in terms of some of the features that you're able to provide makes it really attractive through incentive creation for people to start using digital financial service products. There's a feature that we have called the budget. So there are two things. It actually uses data to understand your behavior, and that way it automatically creates a budget of how you should live your life. Now, without thinking about it, you already can sort of comfortably spend money with the knowledge that you're not overspending. If this kind of thing is, I would say, the way to educate and build trust within communities. So, because a lot of it is, as I said, not just about having an account. It's about, what do you do with the account and how do you use it? So technology and digital financial services gives us that ability to embed products and features that, without even thinking, you're educating the consumer. And the consumer doesn't feel like they're in a classroom. Just by using the product, automatically, there's education, there's literacy, and there are incentives. And for me, that is really sort of the true definition of a digital bank. Of course, you still have to do banking. The fundamentals of banking is important. You have to be able to sort of take in deposits, look after deposits, lend judiciously, reduce NPLs. But, all that is very complex to the end user. So what digital banking does is it creates this persona that the consumer interacts with, it becomes comfortable with, and starts to trust. And in the back end, clearly, as a business, you still have to do what you have to do. You literally layer the fundamentals of financial services with this super user-friendly application that is intuitive and speaks directly to its users. So design is very, very important. One of the things that I was talking to somebody earlier, one of the things that we've done is to ensure that the people that design your product needs to reflect the people you're trying to attract. So at Kuda, I think the reason that it was relatively successful in a short space of time is because if you were the age of 30, you were considered to be super old and elderly. That's because the vast majority of the population that was being targeted were under 30. So naturally, you build for the people that you understand. When we noticed that women were not signing up as much, we started hiring female product designers. Again, the mindset is, if the people that are designing the product is a reflection of the people they're trying to attract, they would design something that is sellable to those guys. So these are some of the intricacies of what a digital bank is. And I really want to stress, at least from my experience, it's significantly more than just an app. Of course, everybody can build an app, and everybody probably does have an app, even traditional players. But it is the thinking, it is the mindset, it is the design thinking, it is every little thing that goes into the build of that app that makes it a digital bank. It's how do you use data to understand the customer and build absolutely bespoke products for each consumer. So today, out of the 5 million customers that Kuda has, I can say to a large extent, each customer has some level of personalization. When you talk to each customer, we talk to each customer by their name. We have so much information, so much data about each customer that when that customer interacts with the app, that customer really does feel that this business or this app is talking to me directly. And that is very significant in how people think and in how people interact with something as important as money. You have to feel that trust. So all of this is important. It also enables you to become empathetic to people. There is a lot of stress, especially in the emerging market. There is a lot of hardship. There is a lot of I would say, stress about daily living. Now, there are challenges even when you're looking after people's, what I call people's livelihoods, because that's what it is. It's not just people's money, it's people's lives, essentially. And it's really a life and death situation. So you have to be in a position to be completely empathetic, even when the consumer is probably not in the right, but you have to find a way to show that empathy. Again, technology gives you the ability to do that. Imagine someone walking into a bank and there are issues, it's end of day, the cashier or the teller is also human, also tired. So the consistency of service is not there and can vary. So I think with technology you can standardize, and that standardization is also something that brings trust. Now, finally, all of these things still needs to make money. So how do you do that? Okay, this is just a case study. Again, I already spoke about a lot of these things, investment, fractionalization, but we need to make money. At the end of the day, it's still a business. So how do you actually make money and build a sustainable model that enables the continuation of the services that you're offering? Now, with a digital bank, you have the ability to embed lots of different models into one product or into one app. So at Kuda, we're looking at credit, we're looking at remittance, we're looking at opportunity to do crypto in certain jurisdictions. So, you know, it really offers you that ability to move super fast, cross monetization opportunities, which as a traditional business doesn't really give you that flexibility. And you need that flexibility, you need that monetization potential to be able to scale relatively quickly and serve the consumers in a way that is affordable to them. So if you're not charging them, if you're making things free, if you're reducing costs, you know, where do you get your money to keep the lights on? These are some of the areas that you know, that you can do, that you can use to achieve that. So all in all, I will close with saying, you know, there is a movement in the world today of digital transformation. I think one of the silver lining of COVID, if there is any, is that it has accelerated the acceptance of digital transformation across different generations. So I think it's super important. The quicker that we understand and appreciate that digital is here to stay, the quicker we plug in, I think the quicker we start winning the battle for inclusion in every sort of walks of life. Thank you very much. Questions?
You will have questions
Okay.
from the panel.
Okay. All right. Thank you.
Thank you so much. That was really interesting to give us a feel of a digital bank, which is just beyond having a simple app. I really liked that. And how it creates trust, ease, and breaks down the complexity that is associated with traditional banking. It was also noteworthy that 30% of users are women, and the fact that women are repaying better. We know this holds true in many markets, and there is a case to invest in women. The State Bank itself in Pakistan has come up with the Banking for Equality policy, which is a very progressive policy, and we hope to see a lot more inclusion happening in the coming years. Now we move to the first panel of the day. The topic here is connecting the future of banking with fintech and digital banking. We have some wonderful panelists and friends who will be represented here. I would like to invite the session host, Nadeem Hussain, Chairman, Pakistan Fintech Network, to lead this session. We have 1 hour for this before we break for lunch. Nadeem, can I invite you to the stage, and then you can invite your panelists. Thank you so much.
Rahmat Hashmi, CEO, National Bank of Pakistan, Mudassir Aqil, CEO, Telenor Microfinance Bank, Babs from Kuda Securities. So, Khawateen Hazrat, we are now going to start the session with the CEOs of banks or potential digital banks. मेरे साथ, there are players who are potentially transitioned to get into digital banking and change the customer journeys, and then we have players who have aspirations to come to Pakistan using their expertise from outside and bring that benefit to Pakistan and change the customer journey. I'm going to start with Irfan. As you know, Mizan Bank is now the most profitable bank in Pakistan. It is also the bank which has one of the highest ROIs and has been very successful in its year-on-year growth, high customer retention. अब क्योंकि digital bank licenses की बात हो रही थी, there are 25 applications and a large number of commercial banks have applied for a digital bank license. Many of them are present here as well. मेरा सवाल इरफान से ये था कि आपने digital bank license के लिए क्यों नहीं apply किया?
Right, Bismillahirrahmanirrahim. I will take you a step back 25 years ago when I started Al Mizan Investment Bank, right? So our name is Mizan Bank Limited, and we put a tagline there saying Premier Islamic Bank. So बड़ा discussion था that why don't we call it as a Mizan Islamic Bank? मैं इनका आंसर पे ही आ रहा हूँ मैं. तो मेरा उसमें जवाब ये था कि if we have that faith that the bank has to be done in banking has to be done in one single way, which is the way. तो उसमें लिखने की ज़रूरत क्या है? तो sooner or later people would get to understand कि भाई वो मिज़ान बैंक है तो मिज़ान इस्लामिक बैंक है और होना भी नहीं चाहिए कुछ. तो इंशाल्लाह नेशनल बैंक भी वही आएगा, right? तो as a result जो इनका जो question है कि why did we not go for a digital bank? तो with this जो trend चला हुआ है digitization का all over the world, not just in banking, into everything, whether you buy a train ticket or you buy an airline ticket. एक ज़माने में हम tickets लेके चला करते थे airline की. अब it's all digital. So my thinking was that a bank, if it is worth anything, it has to be a digital bank. So Mizan is a digital bank, right? So we don't have to get a license for a digital bank. I personally feel that if you don't have a banking license per se, then if Mizan didn't have a license from a digital bank for banking, then probably we would want to go for a digital license. लेकिन अगर आपके पास लाइसेंस है बैंकिंग का, तो बैंकिंग अगर आप डिजिटल नहीं करेंगे, तो then it will all be history. There'll be no Mizan Bank, there'll be no banking. तो उस perspective से, to have a separate license for digital bank, that means you are saying कि यार मेरा वो जो पुराना license है वो obsolete हो गया है वो. So we want to keep the same license and we want to keep it relevant. So that was the reason.
I think many CEOs of commercial banks will disagree with you, but I subscribe to what you talked about because वो यहाँ है नहीं, so I'm not going to put in that position. We also have Mudassir Aqil. Mudassir is the CEO of Telnor Microfinance Bank, and as you all may be aware that Telnor Microfinance Bank, branchless banking service, Easy Paisa, was the pioneer, started by a great visionary incidentally, okay? Was the pioneer in branchless banking. Mudassir, Easy Paisa had a very dominant role in the payment landscape and started way early, 12, 14 years ago. But recently we've seen the growth being impeded. The month-on-month numbers, the increase in the wallets have been opened, but the use case in the wallets have not been expanded to the extent where the usage, has increased. So is this a natural level of stagnation? What are the challenges you see to actually benefit from the railroad that you've created in terms of providing additional benefits to the customer base you have?
Thank you, Nadeem. Great question. So I would not call us stagnant by any stretch of imagination. I think we are growing still about 35% a year, and now at 11 million MAUs. But I would agree with you in one respect that probably the kind of growths that we were seeing 2-3 years ago, where everyone was doubling in size every year, I think there is some focus on unit economics now, right? So so there has to be a balance between good quality growth and just top line growth. So we basically, in light of the direction from the shareholders, made a clear choice, actually three years ago, that we will focus on quality first, and then obviously growth. So we are very pleased to note that our unit economics are very good. We are on a path to become profitable in the next 12 months. And then similarly, when it comes to new use cases, I think it's important to understand that majority of the entire digital banking space is primarily revolving around three core use cases, right? So the first one is P2P money transfers, the second one is buying airtime, and the third one is paying utility bills. And everything else is sort of like on the periphery around this. And the reason for this is, and by the way, we have 1,200 integrations in EasyPaisa, right? So it's looks like a very simple app, but there's like a whole juggernaut behind it. And we process 1/3 of entire Pakistan's interbank fund transfers, and we are the largest biller and process 10% of country's airtime, etc. But the key is that if we want to broaden these use cases, we need to put a dent in our cash economy, right? So primarily what is really happening is that even now, when IBFT was made free 2 years ago after when COVID started, the number of transactions have skyrocketed on all of the apps in Pakistan, not only just EasyPaisa. But what really is happening is that money, cash, physical cash is entering from one side, running on the rails, and then exiting again, converting into cash on the other side, right? So until we really fix this cash economy problem, I think it'll be difficult to, we can continue adding use cases, but we won't really add much value that way.
I'm going to come back to that because the follow-on question. Bab, I want to benefit from your experience in Nigeria. There are many similarities, not all, but there are many similarities. And I think Nigeria, to a large extent, is also a cash economy, if I'm not mistaken. You built a business with 5 million customers over there. What were the challenges over there to get people to go digital versus cash? Cash is free, digital is taxed, in Pakistan at least. So there is a natural reluctance to move from what is convenient, what is in your pocket, to something that will subsequently be taxed. So how did you overcome that issue, if you did overcome it in Nigeria?
Yeah, there's definitely a difficulty in converting people from cash to digital. But I think incentives are super important, and letting people understand the benefits of being digital. With banking, there are two sides to that. So you have the retail side, and you have the business side. That's the SME side. Typically, the retail side doesn't pay any additional charges when they make payments with either cash or digital. But the SME side does. So I think what is important is why should the SME be shortchanged for accepting payments in non-cash? So you have to sell that to the SME. And some of the things that you can sell are things around sort of inventory management. Instant settlement is also important. I think that was one of the limitations previously. If you paid digitally, they didn't always get settled on the spot. But if you can provide instant settlement, you can also provide credit. So again, to expand your business, it's an incentive. So you have to create those incentives. So what they're paying for is now no longer them receiving the payment. They're paying for all the other services that are being offered. So even right down to things like accounting services, even the tax that you talk about, the tax management services, the benefit of paying tax. I think that can be sold to businesses as well. So incentives are very important, and just understanding of why they should receive money digitally.
Rahmat is the acting CEO of National Bank of Pakistan. National Bank of Pakistan, obviously, as far, is the nation's bank, in terms of managing the government accounts, the transactions that take place on behalf of the government, other than the private sector that they manage. Rahmat, same question to you. We are a cash society. We've got, I think, 3.5 or 6 trillion of printed cash swirling around, not in any bank account. Immediate disincentive for doing a digital transaction. Immediate disincentive for digital transaction because you're not only paying tax, but you potentially could get caught in the income tax net because the FBR can come after you right now. What in your mind, should be advocating to the government if we want this economy to move to the digital sense? This is a serious challenge. What in your mind are recommendations you think we ought to be working on to reduce our dependence on cash?
Tough question. But I'll address it in a different way. I think, as Babs said, in most economies, there is always this tendency of a cash economy, right? And that cash economy and tendency can come from perceptions as well as realities. Either there is a fear of the taxman, or simply it's just my habit to go and pay cash in a bank branch for my electricity bill. So I continually take money out from your digital channel and then go and physically put money into the bank as a electricity bill or a gas bill or a telephone bill. Now, from the banking sector, you can have the connectivity and everything wherewithal where the person doesn't need to come to the branch anymore and make those payments, because the public is already aware of the fact that the utilities, etc., NADRA, etc., there is a connectivity. So that's not taxable. The fear of the taxman from those is not there. Then comes the issue of the cash economy. The agriculture sector and the SME sector, they tend to even pay for inputs by cash. And that's simply partly due to records, but partly also due to the fact that that's how they've done it since they were in business. Now, the attempts, if you take that kind of landscape and see what the efforts we made. So in terms of attracting the public to the banking sector, service quality, etc. is there, but also reaching out. Okay, financial inclusion may seem like a relatively new term, but banks like us, we've been in financial inclusion since we started, except that financial inclusion was based on a bricks and mortar setup. So, okay, so when people ask as to what we've done or how we've enabled it, so we talk about the fact that, okay, we have X number of branches in what are called, what even the State Bank calls, unbanked areas. But the benefit that we've derived from that, and the benefit to the people that has been derived, is that the availability of those branches has also not only enabled them to open bank accounts. So these are not government related. These are private individuals, etc., farmers, etc. So over X number of years, we've built an agriculture credit portfolio in those areas. So those people have come into the banking system and they're well aware of the services or benefits of using a bank, albeit in remote areas. Now as we go towards the digital journey, it's a change of model, but the intent has to remain that we have to reach out as a services provider to encourage people to use banking services, because credit is a necessary driver at times for growing your own business. So it is in their own benefit to use the banking sector. Until people sort of don't take the tax as a reason for not banking and cash, using cash, then the evolution is a longer term evolution. Now, yeah, you're right, the fiscal measures can be taken to encourage this process, but that's a matter that is related to a larger debate on fiscal space.
Irfan, obviously, one of the successes of Mizan Bank in getting this high level of profitability, growing year in year, has been your customer journey. I mean, obviously, your retention of customers. What are you doing in terms of using that customer data, in terms of building personas, in terms of addressing the data you have in the customer and translating that into monetizable solutions at Mizan Bank? You know, how do you see this customer data that Mizan holds? And second part of the question is, what's your view in open banking of customer data that the customer keeps with you being made available at the customer consent to a third party?
Right. I'm just thinking to answer this question that Mizan is probably one of the highest granular bank. You know, 65% of deposits come from individuals or small savers. That's the highest granularity rate in Pakistan. So obviously we have huge amount of customer data. Now we are building expertise in as part of our digital transformation to have artificial intelligence and all these areas through which we can actually go and target customers for their specific need. I mean, we haven't gone, I would say, only a small distance in that, but you know, as we grow and as we take momentum on that side, I think we've got a lot of data with us in order to reach the customer and to understand what their needs are. And I feel that, you know, it's like this is the beginning of the story, and once that comes in, you know, the credit offtake on that consumer side would really rise. So we will take advantage of that. And the second question about making our data available to outside, to be honest with you, I'm not an expert on that side. I don't know much about it. But I know that now data has to be shared, obviously with prudence and care. And whenever that happens, we've got enough people on ground to make sure that information security and all those things are there, but we'll be very open to have
Fair.
that available.
Babs, the 5 million customers you reach, I'm told, has been in a relatively short time frame. So obviously, the solution set you had was something that attracted the customer. Two questions related to that. How important was the UI UX? How important in your own experience was the customer journey? Nigeria is a competitive environment. It's not that you know, there's only one Kuda, there's several digital offerings. So how did that help you? And how important is that as people build digital solutions in Pakistan? And what's your view on the customer data, the use and the monetization of that from what the company holds itself?
Yeah, so I think the customer journey is very important. And you have to literally simplify it as much as possible. There's a lot of information required to onboard a customer and to enable the customer to start transacting with money. So from a statutory perspective, it is a little bit complex because just of the sheer quantum of information that you require. And that's essentially where a digital solution provider has to earn their bread. So from the design to the psychology of when you actually request for the information, what we did at Kuda was we broke it into different stages. So each stage we almost gamified even the onboarding points. So each stage you got to something else, there was a big reveal. So, you know, at each point you get excited and you want to do more. Rather than if you look at it from traditionally what you would find is just a long list of questions before you even answered one. You know, it doesn't encourage you to continue. So from the design, from the UX, from sort of the tone, the language, all that is very, very important. Simplification, you know, we say things like send money, because that's what you do. You send money. You don't transact with money. People don't talk like that. They don't say, oh, I'm going to transact with you, or I'm going to, you know, just send me money. So just simplify it, the language, and, you know, it just makes people feel more comfortable and they understand, and that way they feel compelled to continue to the end. So UI is very, very, very important. And then the second question?
The customer data that resides with you, the use of that to deliver more services using AI, big data to make more educated solutions for the customer.
Sure. So data is, again, critical. The usage of it depends on jurisdiction. There are sort of, again, different sort of data sovereignties and GDPRs and whatnot. But generally, if you have access to consumer data and consumer information, you can sort of use it to understand the behavior of a consumer. And then you use that to build other products. You can use that to cross-sell. So, you know, again, the best use case, or the most sort of talked about use case, is usually credit. So when you understand how consumers spend and their income streams and whatnot, you're able to build and offer them credit solutions. But there are other things you can do. So you can, for example, you know, one of the things that we've done is we know what people are spending their money on. So we've essentially kind of created almost like an e-commerce aspect to financial services, where because we know you buy airtime, we know you travel, we know, you know, we've gone to partner with, you know, a lot of these merchants to make it easy for consumers right there and then to do what they need to do.
Okay, great. I have several questions, but we have 20 minutes, and I'm going to open the floor for questions. If I find enough questions, I'll take the floor questions, otherwise I'll continue with my own questions. Please introduce yourself, and please ask a question. I'm not looking for a statement. If an observation, we can do that separately in the break. If you have a question for any of the panelists or myself, more importantly the panelists, please ask that question, brief, and so we can get a response. Otherwise, I'll continue with the questions I have left. So I'm opening it up to the audience for questions to the panel. Gentleman over there with his hand up, please give him a mic. Please introduce yourself and ask your question.
Assalamu alaikum. My name is Syed, and I am head of product at Digitify. My question is for Irfan from Mizan Bank. The thing is that just like Islamic banking, the term Sharia compliance, Sharia compliant fintech is also coming up. So being the finance or Islamic banking, are you thinking towards enablement of the fintechs to come up with some standards, to comply with those standards, to be able to showcase that they are Sharia compliant on not just on Pakistan level but on world level? Oh.
Right, thank you. You see, Mizan Bank being solely Islamic bank, we don't have a mixture of both. So obviously, whatever business we do, whether it's just movement of money from one to the other end, we always have to see the Sharia compliance side of it. So the answer is that whatever we do digitally or through a fintech or any partner, the Sharia compliance test has to be done on that side as well. So the simple transactions of giving consumer loans through fintechs. So obviously consumer loans would attract the way the transactions are happening. So yes, the requirement would be that every single transaction which we do either on our own platform or through a fintech would have to meet with all those requirements. So we can talk about it in more details, but yes, the answer is yes.
Gentleman over there, please, in the white shirt.
Hello, my name is Syed and I work at EFU Life. I have a question for Mr. Babs with regards to Kuda, and if they have any success stories with regards to insurance, because the local industry in Pakistan has a lot of success stories with regards to insurance and DFS. So if they have experiment on that, and what are the results? Thank you.
Yeah, I think that's actually a good question. Insurance is one of the embedded financial products that we are currently experimenting with. Typically, it's one of those products that, nobody necessarily gets excited about insurance. No one wakes up and says, oh, I have to insure. So the way to sell it is to bundle it as part of something else. So maybe you buy an asset. If you're using, so at Kuda, if you're using your card, for example, automatically you can be offered insurance at the point of purchase, and you don't really have to think anything of it, and it can be done either paid instrumentally or at once, just depending on what the consumer wants. So it's an embedded product in a larger financial product, and that way I think it's easier to sell. Otherwise it's just difficult. Nobody really tries to insure in isolation.
Okay, thank you. G. Gentleman in the back over there, the grey shirt, suit, jacket, please. G.
Hi, my name is Zohaib Beg. I'm the country head of Channel VAS, which is an AI lending platform and credit scoring service provider. My question is that, given that the lending services in Pakistan have been limited in terms of consumer lending, question is that what do you think are some of the key barriers to the scalability of digital lending in Pakistan?
Syed, do you want to take that question, please?
Zohaib, very pertinent question. The penetration of credit in Pakistan is still roughly around 4%, as I understand. So, and just like what Channel VAS is doing with Jazz Cash, we are doing this from the Easy Paisa channel, where we are leveraging the GSM data and the payment data to actually give loans. Now, how we can scale it for every common Pakistani, the challenge is that the amount of data available is very limited. If we look at the credit bureaus alone, there is very small number of people who have presence in the credit bureau. So we need to use alternative modes of data, number one, and then there has to be some data exchange available, such as one of the ones that Nadeem has invested in Prosper. Maybe you can talk about it, where various different types of data can be used as credit proxies. So, for instance, we are doing some work with the utility bill data. We believe that the electricity bill of a business owner and the amount of money which is given to them has a very direct correlation. So, so we are simplifying and sort of like creating a credit score based on the electricity bill of a small business owner. Similarly, e-commerce is taking off. There's a lot of potential there in data, etc. So in essence, I think the most common data set available right now is using GSM data. After that, there is bill payment, but there's so much more available if we can digitize that information.
The gentleman on the right, please. I see this is a very gender imbalance there. None of the ladies are asking questions. I would have given you preference. Ji.
Hello, yes, my name is Mohammed Usman. My question basically from Mr. Babs, because he was just mentioning about that insurance is inbuilt into his products or with anyone who is dealing with insurance. We have seen that just a few months ago in Pakistan, even in a developed country like Australia, and very recently in Bangladesh, that climate change is making insurance much more difficult. And we know about, well, I know about at least two models. One is the basic insurance model, you pay a premium and everything. The other is an index-based model. But regarding farmers, my question to anyone who can answer is, how can we design a product which sort of gives them a security that if there is another flood and if the whole community or city is wiped out, and just keeping those things in mind, how can we make a better insurance product that will attract the farmers and other small-scale businessmen towards?
Thank you.
Yep.
I'm not sure, Babs, if you've done index-based crop insurance. If you have, great. Otherwise, there are several participants. Anybody yet? Otherwise,
I can just, I think what you're talking about, there is, obviously all over the world there is now index-based or some variant of that rather than a general kind of a crop insurance. If I'm not mistaken, one model is right now on a pilot level in testing by a foreign insurance company, I'm not sure the name, and a couple of banks are looking at it. And I think once that sort of a proof of concept for Pakistan comes through, then that will not just be climate change or, it's not just for a flood or anything, but it will be for that area, rains, excess rains, less rains, high temperatures, low temperatures, it will all factor into that. So it will capture what you're trying to cover in the risk already.
Yes, the lady over there.
Thank you. Assalamu alaikum. I'm Nada from Globalink. My question is, I understand, and correct me if I'm wrong, investment in crypto, that platform, is generally not, banks are not very comfortable. It caught my, if I'm correct, it caught my attention. Perhaps you mentioned that you would be providing that platform. So can I have some comments and feedback on that? Thank you.
If I can do a preamble on that, Babs, so you don't get into trouble over here. Crypto, as it stands right now, investments in Pakistan is legally not allowed to the State Bank of Pakistan. It will not allow a bank to settle a crypto transaction. You will also have multiple people visiting you if you start investing in crypto. But having said that, chain analysis shows that Pakistan is in the top 5 crypto wallet holders globally. Portfolio shown is estimated between 12 and $14 billion. There are about 8 to 10 million Pakistanis holding crypto wallets outside Pakistan, as much as 70% on just Binance itself. So that phenomena that Pakistanis don't know about crypto, something else. The State Bank previous governor came up with the view that in Pakistan, crypto is used largely for speculation, and the 2 exchanges that existed locally for crypto settlement weren't shut down as a result of crypto, but there was a notification to the banks that you can't have an account for anybody dealing in crypto. You can't use your credit cards to purchase cryptos outside. You can't make an payment through the regular State Bank channel disclosing crypto as your asset class. So as it stands right now, within Pakistan, it's very difficult to actually have a local presence doing crypto. Babs, anything to add?
Yeah, again, it's very similar in Nigeria. Crypto is not illegal, but it is illegal to use the local currency to purchase or trade with crypto. But again, the Nigerians, in terms of usage, there's a high percentage of people that are holding crypto and crypto wallets. So I think, in terms of regulation, there are certain jurisdictions that enable it. And I think it's more a case of, understanding. And over time, maybe there will be rules that could be relaxed, but you just have to work within the regulatory environment that you find yourself in.
Thank you. I'm going to take 2, 3, maximum 3 questions, and then I'm going to close it out. So, any takers? All right. Then, since we don't have any further questions, we're going to take a break. I think there's a natural break there. There's lunch break then right now? Okay. So I'd like to thank the panelists for taking the time out, and thank you for coming and supporting the Pakistan Fintech Network. Thank you, and thank you to the audience as well.
Thank you to the panelists. We are now going to close for lunch. I would like to invite you all back by 2:15. Let me also remind everyone that in terms of what's next, we have 3 very exciting panels coming up. One is on inclusion of customer in the digital journey, then on digital lending, and the last one of the day is agri-tech. I would also like to share with you that tomorrow on day 2, we have a design workshop, which is on Rust and future of fintech. If any of you would like to join in, because this is for the fintech members, but we have limited seats for people in the audience, you can register for it at the registration desk. So enjoy your lunch break, and please be back by 1:15. Thank you. So just a reminder, we will resume at 2:15. Thank you. Enjoy the lunch break.
Live. Check. 1, 2. 1, 2. 1, 2. Live.
Hello, hello.
Assalamu alaikum, everyone. We will be starting our afternoon session. So I hope everyone is making their way back. We have a panel coming up. And the panel is our panel number 2. It's called Inclusion of Customer in the Digital Journey. So as we all know that in Pakistan we have wonderful lunch with biryani, which makes us feel good, but it slows us down. So I propose that if there are people dozing off in the panel, then I will request you to do a shoulder stand, as my yoga instructor instructs us. So be prepared. If you are disengaged because you're feeling sleepy, you will be asked to do a shoulder stand. How many of you can do a shoulder stand? Please raise your hand. Okay, we have just 2 people in the audience who can do a shoulder stand. It isn't very hard, and it's actually a great exercise. It brings blood into your entire body, clears your head, gives you a lot of energy. How many of you do yoga? Okay, just 1 person. So I think if we're in the FinTech forum and we want to create game-changing things, I hope all of you are also looking after your health and well-being and energy, because you will need that to stay in the game. So the panel discussion is Inclusion of Customer in the Digital Journey. I will be the session host, and I'd like to invite our panelists, Mr. Umar Moeen Malik, Head of Easy Paisa, Branchless Banking. Up on stage, please join us, Mr. Yasir Khan, Global SVP, Product and Partnerships, Kist Pay. Thank you for giving them a warm welcome. Mr. Musti Mustafa, Chief Technology Officer and co-founder Kuda, who has come from Nigeria. Please join us on stage. Mr. Mohammad Dayan Alam, Business Head Commercial, Kuda Technologies. And last but not least, Mr. Abdul Wadood, CEO, Digitify. So clearly some of our panelists are still enjoying their biryani and have not made their way back. But given we're setting the tone of doing everything on time as much as possible, I think we'll kick it off, if everyone is okay. Yes. So do you want to take a minute to just, each panelist can maybe just take a minute to just introduce themselves and why this space interests you? Maybe if you can say your name, the company you represent, and why does the fintech space interest you, and then we'll move into the questions.
Assalamu alaikum ji, मेरा नाम उमर मोइन मलिक है. I look after the Easy Paisa business under the Telenor Microfinance Bank ambit, and I've been with Easy Paisa for quite some time. Why this space interests me? I think this is the most interesting space which is happening right now. So in terms of financial inclusion आप कह लें, digitization के ambit से देख लें, the new regulations which are coming out, the world is changing very, very fast for Pakistanis. And I think this is a very, very interesting time with all of our traditional cash-based payments moving and becoming digital.
Thank you, Umar.
Assalamu alaikum, everybody. Yasir Khan. I'm with Kist Pay right now. I specialize in financial services experiences, embedding into different use cases, and monetizing it. I learned about this when I was with Citi and HSBC, working with them in Singapore, Middle East. I got a chance to implement what I learned while I was with Mashriq. I see Turan Sahab sitting over there, absolute legend at Mashriq in Pakistan. And Al-Hil also. This culminated in me in helping setting up a digital bank from scratch in the Middle East. And then working with Deloitte in the Silicon Valley, working with firms like Affirm, MasterCard, digitalizing different experiences for credit unions and other businesses. At Kist Pay, I look after product and revenue. And this space interests me because, I feel that I have an impact in what is happening, especially in the ecosystem that I operate in. So that's really, really interesting for me.
Thank you. Yeah.
Hi, everyone. I'm audible. Can you hear me now? Okay. My name is Abdul Wadud. I'm the CEO and founder for Digitify. We are based in the UK. Our main objective is just to design, develop, and deploy. We develop fintech platforms and services. We have quite a few success stories. We launched YAP, one of the first digital banking platform in UAE. We helped MS Development Bank also to transform their digital services and add in terms of the new products and services. Our main, obviously, objective is just to provide the digital transformation services across the board, but in particular to the fintech, because a lot of innovation is happening in fintech sector, and we want to enable that for masses on a bigger scale.
Assalamu alaikum everyone. My name is Mohammed Dayan Alam, and I've got roughly 11 plus years experience in the industry, more so towards the commercial side of building a business and building brands. I started off internationally with the garment industry, the textile industry, worked with development sector, specifically within the agri and the financially marginalized sector. Then went on to working with a commercial bank in Pakistan within their digital payments sphere. Went to Delivery Hero after that and worked with their local startup, Food Panda, and a couple of regional startups within the APAC region. I'm currently employed as the business head of commercials, looking after all commercial functions of the business, and obviously leading and working alongside the product development team as well in order to produce products that are more apt to the agri market that Kuda Technologies is currently looking to come into the market with.
Assalamu alaikum. My name is Mustafa. A lot of people call me Musti. Co-founder and CTO of Kuda Technologies. I happen to be one of the founders of the first digital bank in Nigeria. We recently launched in the UK 2 weeks ago. I've been with Kuda for over 6 years now. Prior to that, I was a software engineer at one of the largest banks in Nigeria. I've been a software engineer by profession. I studied computer science, both in undergraduate, postgraduate, and up to a doctorate level. Yeah, I'm excited to be here. Thank you, everyone.
Great. So I think as you all can see, we have a fantastic panel over here, and I hope that we will also get questions from our audience. We've kept 15 minutes for it. So technology is really transforming the way people interact, engage, and work. We know digitization offers huge possibilities to bring both operational costs down, to go into new segments, to increase customer engagement, and to create greater ease and trust, which was mentioned earlier also in the day. However, moving from a traditional journey to a digitized journey can also offer several challenges, and it can be and has been referred to as asking the customer to move from walking to flying in an airplane. So there is a certain shift involved, and I'd like to pick up on what the chairman, Pakistan Fintech Network, referred to in his welcome address. How are you changing the customer journey? So if each of the panelists could touch upon how are you in your sphere really changing, enhancing the customer journey? How are you creating ease, convenience, and what more can be done to enhance the fintech digital user experience?
So at EasyPaisa Ji, EasyPaisa was launched about 12 odd years ago with the aim and ambition of providing convenience, trust, reliability, and secure financial transactions to everybody in Pakistan. And then we've pivoted multiple times. We had different models, and as the regulations evolved, as the people evolved, as behaviors evolved, we've also evolved. So initially, if you remember, we had an over-the-counter kind of a business, jahan pe, you would go to an agent and send money from one agent to another agent. And these were non-registered customers per se, you'd be sending on a CNIC. And then we evolved, we started offering wallets to customers on a USSD string. And then we evolved again when smartphones came around, and now we had an app offering to the customers. I think with every iteration, the idea was precisely this, to make sure that convenience ho, ease ho, customers ko zyada payment options available ho, where you have a complete portfolio of payment options available. And very recently we've digitized all of our banking services. So if we have a complete lending portfolio, savings portfolio, insurance products, everything is now embedded into the Easy Paisa app. So everything that that Telenor Bank offers now is available within the Easy Paisa app. And the app itself, I think over time, we've had phenomenal technology advances as well. I think Nadra को हम लोग बहुत कम credit देते हैं, but with the recent services that they've launched, for example, in-app biometric, just imagine any customer today can actually be sitting at home, download the app, register themselves in the app within seconds, do their in-app biometric verification, and have a full-fledged banking account available to them, accessible to them on their phone. We're connected to the rest of the banking ecosystem via the one-link switch and through RAST. So fund movements is very, very easy if you want to move money from one account to another. 130,000 agents across Pakistan where you can do a cash deposit, cash withdrawal. So yeah, this is what Easy Paisa has been doing, and going forward also our objective is building upon convenience, ease, building new services for customers, getting people more engaged with our app. Yeah, that's about it.
Thank you so much.
I think, let me start by giving credit to what Easy Paisa and other wallets have done. I think what you guys have done in the last 5-10 years, this has made it easy for players like us to build on top of that. So awesome work on that. Now that we're talking about credits, you gave credit to Nadra. Nadra ke saath hamara taluk bhi acha nahi hai. They're very friendly towards the banks. They're giving APIs and everything, but for an SCCP regulated entity, Nadra ke saath abhi baat chahiye, abhi aage badhni hai. So before I move on to the exact part of the question, I just want to generally just mention thoda sa at a very high level. When we say digitization, what do we mean? Because sometimes, this is referred as just an onboarding. It's much more than onboarding. It starts from onboarding, but there's a lot that can happen afterwards. Servicing karni hai, transactions karwani hai, that has to be digitized. Usko karne ke liye, it's important that the back office, the back end is also digitized. What I've seen in my experience at multiple countries is they always start by just an interface. Banks become digital just by, introducing an app or a user interface. That doesn't make you digital. I've seen these banks, these apps closing down after a year, 2 years, because they're not able to monetize it. They can't be efficient in terms of their working. Digitization, not for the sake of digitization, it's to ease the life of the consumer. Kaise hogi ease life? It becomes less costly, it becomes more efficient, it becomes faster. You can't do that unless you have the back end also figured out. So that's important learning. Second thing is, when we talk about customers, it's not just individuals also. I think the biggest gap in Pakistan and in most of the developing worlds is the SMEs and businesses. How do we digitize those businesses? So these are important. The way we have, it has been an up and down journey for KSP for the last 1.5 years. We made huge mistakes. We learned a lot in our journey. We have come to the conclusion that we need to build the infrastructure, help players who are already building infrastructure, help them, make them stronger. Because infrastructure is very, very important, one. Second, we felt that with the way to ease the consumer or the businesses into the digital experience is create a user ID, a unique user ID that can be used across the board. So for us, we started, probably most of you guys are aware that we started as a BNPL play. Then we moved on to a checkout play. So the experience that we bring to the table is a customer can do a transaction on multiple, in our ecosystem we have about 2,000 merchants. With just one single ID, they can log into any of these merchants, do a transaction by just one click. That facilitates. Digitization is to help ease their life, make it easy for them to do transaction. The second bit that we're working on in terms of helping consumers is embedding it in different use cases. I'm of the view that payments on its own is not great. People do not think of, I'm going today and make a payment of 500 rupees. They say, I'm going to go and buy a coat. I'm going to go and buy a shirt. Payment has to be embedded. So at KissPay, this is what we're trying to do. Embed it into different use cases. It becomes kind of natural, organic into the entire experience. I think if you're able to do just these 2-3 things and do it successfully and expand it so that others can learn from it, I think that would be a huge boost for the ecosystem in Pakistan. Plus, last thing, the businesses. I think that's an area that has been ignored for too long. Digitizing their onboarding, digitizing their experience, transactions is something that we're working on. Last thing, I know it's a long list, but last thing that we're working on is enabling a platform where all these lenders can come in and use our infrastructure to become better at lending, focus on the core proposition. They don't have to worry about scoring, they don't have to worry about onboarding, they don't have to worry about AML, KYC, that can be done for them. So they have all the ingredients to start immediately and do it well. So these are the things that we worked on at KissPay, and that's it. Oh, you need the mic.
Thank you. Yes, I think the couple of things we, as a platform provider, it's just to understand the pain points of your customer, and that's the starting point. Bring that empathy level. A couple of speakers mentioned earlier today as well. How you bring that empathy level, understand, look, these are our pain points for our customers, and how do we efficiently create the products and services which can meet their needs. And rightfully what you pointed out, my colleague, is just having a UI, UX, and if you're doing everything manually at the back end, you have 300 people who are doing the manual processing and settlements, that doesn't serve the purpose, and that's not digital transformation whatsoever. And unfortunately, to be honest, this is kind of a trend happening, and we're not there yet. It still needs to, we need to invest on that side. Other factor which is really important is the product design and product management. And I've seen the use cases because we have done implementation in all 3 regions, in Pakistan, in Middle East as well, and in Europe. And we've seen the use cases where there hasn't been done a good investment in terms of the product design and product management level. They had to, invest more money and learn from the experiences and experiments, and then, to, market that products and services. It was a much longer route. Hence, if they would have invested more in terms of the product management level, understand what they want to do, what the customers are, where they are, and how they want to fulfill their needs. And it would have been much easier for them to, plan those journeys out and implement them much quicker in terms of the space and scale as well. That's really very important. And the other thing which I think really crucial is that scalability. And I think it's something which is very similar, which you have mentioned, is how scalable you are. Okay? And if you are like, you're a startup now, and you've launched new services, if your products, and hopefully, for the new ideas, it's really good to pick up the tractions, how quickly you can scale in terms of the horizontal and vertical. That is really important when you start a new business, that you need to make sure whatever you start, the design has to be a very strong footing and foundation, because if you want to grow and scale out, if you're not, haven't invested in terms of the product management and also the architecture and the design elements of those, products and services, you will struggle. And I think this is really crucial. That's why we work with our partners, understand what they want to achieve, and then provide the solution accordingly.
So before answering this question, I think it's important for me to give you some context over who we are and what exactly are we doing. So Akhtar for You Technologies is an upcoming electronic money institution that's about to delve into its pilot operations very soon. Akhtar for You Technologies technically looks into the agri sector of Pakistan, and when we're talking about the agri sector of Pakistan, we specifically focus on the top five crops of Pakistan, which contain sugar, wheat, cotton, rice, maize. To start off with, we went into the sugar market, and the reason for us looking into the agri sector was because the agri sector was once the backbone of Pakistan, contributing more than 40% to its GDP. But now we're in a time where that particular contribution has particularly shrunk to roughly about 22.7% of the total GDP, of which these top 5 crops contribute to roughly about 4%. We pondered over why did this phenomena take place, and coming down into the agri sector, into the actual roaming around with the actual foot soldiers of these agri businesses, specifically these days within the sugar industry, we realized that there's a specific tat when a particular farmer sells his sugar cane, to a particular sugar mill. And during that that particular time, there's a specific turnaround time of that payment to come back to the farmer. During that time, the farmer does not have that kind of liquidity for which he requires to pay off his labor force, which he requires to pay off the transport people, which he requires to particularly acquire agri inputs for the next harvest, right? So we try to understand, where does the farmer go? Once we started delving into that, we realized that there was a mere dearth of a banking infrastructure within those particular areas. The farmer was left ignored, and the farmer had no other option than to look into these informal predatory channels, which in local language we generally tend to refer to as the artis, who particularly lend money to these farmers on an interest rate that could go up to 60 to 70%. And every year the farmer has to go through this again and again and again and again and again and again. So there was a natural phenomena that started taking place within a farmer's life, which was of a diminishing cash flow every year. That's when we decided that we provide these mills, we take these mills as a particular pivot of ours, and we connect the capital markets of the urban centers to these agri-businesses of the rural areas, where we provide the farmer a specific way of monetizing their payments as soon as they provide the delivery of their sugarcane. How did we do that? We found out that, obviously there's a procurement receipt that goes through in every particular industry. In the sugar industry, it's called the cane procurement receipt. In the ginning industry, it's called the cotton procurement receipt. We worked with a couple of partner banks of ours, and we came out with a particular solution of collateralizing this particular piece of paper that these agri-businesses used to issue year on year to these particular farmers. And once that obviously happened, now a farmer can generally tend to go to a particular mill and deliver his goods and receive a payment then and there. The second thing that we obviously realized was that although we talk about these fertilizer companies in Pakistan as well, they're big giants, and we generally tend to think that they have their distribution network within these particular areas as well. But what we found out was, remote areas in Pakistan generally don't tend to have a particular supply chain or a value chain that exists within those areas as well. So we thought that why not we create our platform into an aggregator for all of these items that the farmer gets, because there's a black market already there. A black market which generally exploits the end user, whereas, if on a price list, a bag of, let's say, urea or DAP costs 10,000 bucks, the farmer used to usually procure these things for roughly about 15,000 a particular bag. We became aggregators for that, and we started providing these farmers with these particular agri inputs as well. Lastly, obviously, there are a lot of farmers, because Pakistan's general landholding nature is abundant to its small-scale farmers. So what we also introduced to these farmers is something that's very simple, But through these third-party lending partners of ours, we actually have started giving these farmers a platform whereby which even if they don't have cash, they can actually come over to our platform and apply for a particular loan and look into particularly procuring all of these agri inputs and all their agri needs from our platform without cash. So obviously we realized that, essentially payments wasn't the only thing. It was about initially creating a hook with the customer, creating a bond with the customer, and then eventually, delving deeper into his life. Today we're working with roughly about 300,000 farmers, and we're taking that, within our pilot program, we're basically taking that brick and mortar cycle and relationship onto our particular application, and we're digitizing the whole automated ecosystem that we've created within these agri sectors of Pakistan. So yeah, that's how I think I've also answered with the context that I was giving. Yeah.
Thank you. So, Musti, for you, I'll just tailor this to draw on your experience as the CTO. When it comes to launching new features, the business or product teams, they want to launch everything and in the shortest amount of time. So how does Kuda prioritize tech development to deliver on its promise of a user-centric digital bank?
Thank you. Okay, to answer that question, actually, I think it's also important to just give some context as to how we got to this point at Kuda. As of today, we are just over 5 million customers in Nigeria, and in the UK, that we launched about 2 weeks ago, we've crossed over 10,000 accounts that has been opened actively. And we're facilitating remittance from the UK corridor back to Nigeria. We intend to replicate this across all the locations that we're going to launch at. Now, there are two key most important factors why I think we've succeeded to this point, in a way. Speaking of financial inclusion, speaking of launching customers' products, there are different factors why customers will want to use your product. But I think generally in developing country, which I believe Nigeria, looking at all the available data, Nigeria is similar to Pakistan in terms of population, economic size, different metrics of economic data shows that Nigeria is similar to Pakistan. So which means the problem that we are trying to fix in Nigeria will be somehow applicable to Pakistan as well. So the standout two issues are affordability and accessibility. So in every product you want to launch, or any features you want to launch, it is very crucial that you put these two things at the front burner, accessibility and affordability. It is the only thing that genuinely fixes financial inclusion for people. Because, again, in Nigeria, prior to Kuda, we had about 120 million, out of a population of about 220 million people, 120 million have access to the internet. This was as far back as 2017, 2018. So the problem is not knowledge. The problem is not enlightenment. The problem is because financial services is just expensive for these people, and it is not readily accessible to them. It's not available when they want it. So Kuda fix affordability by making sure that we are offering full premium financial services free of charge. Our promise to our customers and to everywhere we go is that as long as you use Kuda for your day-to-day financial service, you will not have to pay for banking. It will pay for itself. That is one. Accessibility, of course, we leverage on technology. We deliver product faster than any competition in the market. We own our tech stack. The core banking solution was built internally. It was the first in Nigeria. There has been no other bank in Nigeria that owns their core banking application end-to-end. Kuda was the first. And this gives us a more competitive advantage to be able to churn out products faster than anyone, to be able to understand the customers better than anyone, because we own the full technology stack that we use to serve our customers. we leverage on technology clearly. Mobile, we have a mobile app, we're available on the web, we use the USSD for those who have no access to internet. Different areas where we've leveraged on to be able to serve these people. So for me, I think putting customer first, their need in terms of how affordable are your product and how accessible are they, is like the foundation upon which you build every other thing along the way. And if you position yourself that way, clearly, it's just a matter of time. People are just going to know that you are the one actually doing the real deal and fixing problem for people. And they will reward you by making profit, really. Thank you.
Okay, great. A follow-up question that I have for Musti and for any other panelist is, in a developing market where digital literacy is a challenge, and I think Nigeria and Pakistan would fit into that, how do you approach in terms of enhancing digital financial adoption? And secondly, I would layer it further by saying in terms of access for women, minorities, transgender, what are you doing or thinking around that? So maybe Musti, you could start, and then anyone else who would like to take a shot.
Thank you. In terms of financial literacy, to be honest, like I said, the data already shows that people are ready and available to learn. You just need to speak to them in the language which they are going to understand. One of the advantages that we also have at Kuda is because we are young, and I'm not even speaking about myself. Most of an average age at Kuda in terms of people that we have is about 25, 24 age. That is majority of people in Nigeria are within that age bracket. So when it comes to communicating, the way we communicate to the people from the app to all our marketing materials speaks to the language that they understand. It speaks to the way they understand. The way we talk to them, the way we relate to them in the app, the way we speak to them, it appeals to their sense of belonging. They see Kuda as their own bank that they are building, not necessarily as one of the incumbent traditional banks. That is one. Secondly, we leverage heavily on social media, obviously. We have a strong presence in social media. We leverage on visuals. We communicate using customers who are using the app day to day. We use them to educate the other people as well. We speak in local languages, obviously. We speak in English as well. We leverage on videos. We leverage on Twitter, different forms of communications that we use. And then another thing is we invest heavily in marketing. Because we do not have physical presence anywhere. We've got an office. Obviously, regulatory requires that we have an office. But we needed to be, how do we communicate trust? How do we let people trust us? We have to be available everywhere people are. So we leverage on marketing a lot. So we are available on big billboards. We are available on all the big buses going around. You see Kuda everywhere. You turn on your TV, you're going to see Kuda. You open your mobile phone, you're going to see Kuda. In fact, people joke around in Nigeria that, look, if you open your fridge, you're probably going to see Kuda. So it was so ubiquitous that we are everywhere. So that register, and you don't have to open an account at that time. But one thing you cannot deny is that you do not know what Kuda is. You would have to know, because everywhere you are, Kuda will be there. So that sort of subconsciously puts Kuda in the mind of everyone. You just know, and you just trust it. You've seen it today, you've seen it yesterday, you're seeing it tomorrow. It's just registered in your mind subconsciously that, okay, this bank exists. So one day, one time, you're going to have a problem that you think, oh, let me try out Kuda, and then Kuda fixes it for you, and then you become hooked. You become our customers. So in terms of educating customers, it's important that you speak in a language they understand, you speak in the style that they understand, and you speak in a way that they are going to understand you, not like the traditional way of marketing to people. So I think these are the ways that are very, very critical, to be honest.
Thank you. That was very interesting. Anyone else from the panel?
Yeah, go ahead. Sure. Just to add to that, I think what Mustafa mentioned is very important, and at some stage was very familiar for the Pakistani market on what we did with Easy Paisa. But I think beyond marketing and beyond awareness, it is absolutely important to go and sit with the customers and understand how they use a digital product that you have developed for them. To understand what their reactions are, to understand how they perceive it, what are their unmet needs. These are very, very important steps to take, and any digital player who's actually just building products and rolling them out there expecting that there would be an uptake is going to find out sooner, hopefully sooner than later, that this is not how it works. So understanding pain points, understanding the jobs to be done. I'm actually very proud that at EasyPaisa we've very recently actually put together a small team that actually now goes out and with every product rollout that we're doing and with all of our existing products, we try to understand exactly how our customer is going to use it. And there are so many insights that they bring back to us that we've not thought of before. This is very, very important. I think as far as digital literacy is concerned, look, I'm not going to deny it or negate it. I'm sure that there are some numbers to prove that yes, there is a segment of society that requires a greater hand-holding, as you may say. But I think we generally tend to amplify it way too much. If you just look at the stats in Pakistan, we have about 75 million, so we have about 200 million active SIMs. This is what PTA states, right? This is what PTA reports. We assume that translates into maybe 120, 130 million unique mobile phone users. And then we've crossed 80 million unique smartphone users in this country as well. And when you look at what those smartphone users are doing, and they're not just in the urban cities, they're all over the country, by the way. When you look at what those smartphone users are doing, they're actually very engaged on services like YouTube, like WhatsApp, and to a large extent Facebook also. So in terms of digital literacy, I think we tend to amplify the issue way too much at times. If the service is built in a manner that a customer is able to understand it, there are people who can't read or write English or Urdu who are using WhatsApp perfectly fine because they know how a voice note works. Yeah. So I think if the product is built according to meet the needs of the customers, it would have a huge uptake. Simple as that.
So just furthering on what on what Umar left, I agree with what you were saying that obviously there's a reason why a person, let's suppose sitting in Tausa Sharif, which is a very remote area of Pakistan, can possibly use a PUBG app or a Call of Duty app, but at the same time that person cannot use a financial application. There's obviously the reason behind it is that the PUBG app is actually fulfilling a need of that customer that financial application is really not, right? So that's been the vision of our institution as well, and we've been working with women as well as the Khwaja Sira community as well, whereby which within the Khwaja Sira community we've picked on something very small. That there's in Pakistan, very sadly, there's a life or an economical life of a Khwaja Sira within that particular community as well, which ends at roughly 40 to 45 years when that particular person reaches that age. And generally speaking, there are multiple government grants, there are multiple non-profit institutions that are working towards providing these members of our society with obviously some sort of an aid that helps them pass through life after that particular age as well, within the situation that they're particularly in. Very, very sadly speaking, because of these stigmas and these taboos in our society, Khwaja Sira still faces a lot of issues when whenever that particular member goes to a branch a bank branch to probably open a particular bank account. And it's a very hassle-full process whereby which, even if that particular person opens up an app and tries to onboard themselves, onto it for them. And none of them basically caters to that particular grant that's coming in. They can't really get that money in as well. So they have to go to a particular counter for which every interaction of them going there becomes a very scrutinizing moment for them in life, and a moment where they're looked down upon and sometimes even scoffed over. So, what we've done is we've created we're coming up with a particular card that helps them to automatically receive those funds and those grants within those cards, and just happen to, go to a particular ATM where they do not need to interact with somebody who would potentially scoff them or make them feel as a lesser element of the society, which they're not, and rather, receive those funds in a very hassle-free and a less scrutinizing and a comfortable way possible.
Fine. So we'd love to hear about this pilot that you're doing, and I think it would bring out some interesting insights. So if anyone else wants to offer, I'd like you to be a bit precise and tell us exactly what's the innovation that you're doing to get underserved segment, women, minorities. Yes.
Yeah, so just to add, I think there were 2 points highlighted earlier is, I think if you roll back 10 years, yes, it could have been a bigger gap in terms of the smartphones. But look at this now. Smartphones are much more available in the market, right? Even a very commoner or low-pay person is able to afford the smartphone, right? And I think the main challenge is how you understand the pain points of the customer and give them what they want. Mediums and modes are there with the ROS, with literally easy text message, opening a bank accounts. I think from the facilitation point of the regulators, and the broader kind of infrastructure is there. It's up to us how innovatively, creatively you can come back and target those segments in terms of women's or those other communities, and see what the pain points are and how we can address them.
Just want to add 2 quick points. Just building on what you guys said, I think these are all valid points. As far as I'm concerned, I have a different take on this. I feel that the interface when it comes to inclusion of these different segments of societies, I think it's overrated. I think the most important bit, I would tell my product manager to focus on the use case. If the use case is there, everything follows. If there's no need for a product, doesn't matter what kind of user interface you make, it will not fly. It will not add value to that segment or to that clientele or the customer that you're targeting. So first thing that we do at KISPE is identify the use case. That's the most critical thing that we do. After that, the user experience, everything follows after that. I think this is what you guys have also alluded to. So I think this is very, very important to understand. This is what we do at KISPE. I think the other important point that I want to highlight is that when we talk about marginalized segments, do not forget that there's a huge macro and nano business segment out there who needs to be included financially. We at KISPE, what we're doing is we're including those small macro businesses onto our platform. These are guys, sellers who are selling on social media platforms, on Facebook, on even WhatsApp. They, if you look at it from, take a step back. If you look at it, they're doing fine. As you said, they're interacting on voice message on WhatsApp. They give pictures of the product to these. So it's working out. It's not ideal, but it's working out. We're taking it a notch up. So that I feel is an important element in terms of including these macro and small medium enterprises also. At KISPE, we're providing them a platform as well.
So certainly, I think when we think about digitization, it's also about SMEs, micro enterprises, and we know this would have huge dividends for our economy. So my last question before opening up to the audience, we don't talk enough about, let's say, failure and mistakes. So I'd love to hear from you, any one of you who would like to bring out one failure, one mistake from this customer digital experience that you think would be valuable for us to share and learn from.
Too many.
Yes, so let's hear some of them. the scars that we carry that we can actually talk and learn from.
Yeah, so we started the project and it was very ambitious and literally, as I said, the learning for us was the product management, right? We did not put emphasis into, how valuable it is just to understand, create the product map, get the research data in, okay, how you want to address the pain points of the customer. So 6 months or 8 months of development, and we had to completely redo everything, right? So that was for us a really a good learning and experience as well. Look, you stop, you work in terms of, understand the business, the customer needs, the pain points, create the product roadmap journey, and then you can start in terms of, you don't have to have, a product launch with 10 or 20 features. You can start with 1 or 2 features, but they are very relevant to your customer needs. And when you launch your product and services, they are adopted, with open arms and hands from your, target market.
Yeah, I'll share some of. So we had huge failures throughout our journey. In my experience, also when I was abroad as well. So one thing that I've noticed out of all this failure is that we don't emphasize enough on the culture in a company. I think that is the biggest learning I had in the last 1.5 years in Pakistan. We just hire people. We don't spend enough energy, resources to understand the fit between the culture. And for us, we didn't give a lot of attention to the culture aspect of the organization. I felt that if there's one biggest learning at KISPay for us is that culture is very important. That helps you retain talent, that helps you attract better talent, that helps you become more effective and become more productive. So I feel this is one of the learnings that we had at KISPay.
Yeah. For us, actually, I think one of the things that is so easy to neglect or to not pay the required attention to is speaking to customers, actually. Especially if you're a builder, right, you always assume that you understand the customers because you're also a customer. You're also part of the society. And you are right in a way if you think you understand the problem. But we always underestimate speaking to customers, feeling their pain points actually to be able to understand the exact problem that they have and how to specifically solve it. Because you can provide a solution in one way, but the customer do not want it that way. They just want it in another way, So I think it cannot be overemphasized to talking to customers, what it means, and being generally transparent with them. It's one of the areas that I think every one of us should definitely pay special attention to. Thank you.
I think if there's one learning that I can share with the audience that would be, helpful for everybody is something that we picked up fairly recently from one of our sponsors at EasyPaisa. And basically when they became a shareholder in our bank, one of the things that they pointed out to us was that we tried to do too many things at the same time, and instead of focusing on 50 different initiatives or projects, if we just scale that ambition down to doing something like 5 projects maybe, the focus and the attention that we would be able to give and the results that we'd get out of those 5 projects would be much better than doing 50 things at the same time. And the fact that when we try to do too many things at the same time, we inevitably end up cutting corners. So, and that's a big challenge for us as an organization because we at EasyPaisa have a fairly large portfolio of products that we have today. And if we try to cut corners by saying, okay, look, this is where maybe I don't need to go to the customers to understand what they have to say about this product, or I don't need to do this usability study, or I'll make this design and roll it out, or I'll build a feature in a particular way. It inevitably comes back and hurts us because then we have to do rework. And that rework takes more time and takes more resources. So you've basically, time, resources, people, cost, money, these are all very important for the organization, and we need to make sure that we are really prioritizing important things and rolling them out. Yeah.
So some wonderful insights on common mistakes, failures from being in the trenches. So thank you for sharing those very candidly and openly. Now we'll open it up for the audience. I hope there are some questions that you would like to ask our panelists. Please raise your hand. You can introduce yourself, the company you represent, and your question, please. And as one of my professors used to say, please make sure it ends with a question mark. Gee, we have one person, gentleman, who's raised his hand.
Hello, my name is Ganesha. I'm part of the financial services consulting team at Imam. So, the participants mentioned the topic of financial inclusion, and particularly from the perspective of businesses and SMEs. So, my question really is that in Pakistan, when you look at the business sector, the SME, the micro and small business sector, is financial inclusion a problem or an impediment, or is it really a choice? Because if you look at the way business is conducted in cash receipts and payments are made, do you think financial exclusion is a commercial choice, perhaps for these small businesses? Because if you just compare the economics of getting your revenue in cash for a small retail shop versus getting it on a POS machine with your credit card, the discounts and the costs, expenses, and the ability to get it up front, does it make sense to get things digitally or electronic form? And likewise, if you get it in cash, it's just more cheaper and easier for us to avoid all that scrutiny from certain institutions. So if this is a choice, then what are we solving for exactly as a fintech or a payments company or an aspirant digital bank?
Let me take. I think it's a good question if I understood it. Everything. So all the services which are rolled out, whether they are digital financial services or even cash for that matter, the way they are being used today by retailers, for example, as you talked about, there is definitely a choice angle aspect to it. So there are merchants in Pakistan who are choosing to use cash over digital payments. But it's much, much more important to understand why that is so, right? Because only when you understand the entire picture will you be able to solve it. Now when we go out and we've done various pilots to study this, we find so many different insights. For example, one of the reasons why a retailer prefers to do transactions in cash is because the suppliers, the Unilever van or the Nestle van that's going to show up in a few hours and drop saman off, they want payments in cash, right? That's one reason, and that's an important reason. They're not going to take digital transactions. Another reason why they prefer cash is because they, at times, can avoid the taxman. It's a very important, and especially for big retail markets, this is an important reason. But then cash also has its own problems. When you run out of cash, when you run out of small chote currency notes, what do? You have to run somewhere. When you shut down your shop at 11 o'clock at night, what do you do with the cash in your till? You take it home with you, you leave it in the till, there's no bank branch open, there's no CDM machines. So there are problems, there are advantages and disadvantages associated with cash. The entire picture has to be understood to actually try to solve it. And then you can try solving it from one end. For example, you can say, I'll pick up all the distributors and try digitizing their payments first. Or you can pick it up from another end and say, I'll pick up the consumers and try digitizing their payments first. But the entire picture has to be solved for it to be a sustainable, long-term solution.
Yeah, thanks. I think that question is very critical, to be honest. So, like I said, in fact, this question sort of like agree with my position earlier that Nigeria economy is somewhat similar to Pakistan because this same problem exists. But how we are sort of tackling it, we have taken a holistic approach to it. What are the alternatives? What is the alternative that exists today from cash? Obviously, it would be bank, right? That's the alternative for small businesses. However, there is a huge disadvantage for small businesses to move from cash-based to digital payment. And two key reasons that are two disadvantages. The first one is pricing. These are small businesses. You know, forget about transaction pricing. That is actually one of the major problem of pricing. The entry level, to be able to get a POS terminal, I'm not sure what it's called here. Is it POS? Wait, POS, right? Exactly. To get a POS terminal, there is a cost associated with that. Banks generally will not give it for you free of charge because you're not doing enough turnover that will make them to justify giving it to you free of charge. So entry barrier is higher. The pricing, transactional level, there's what is called MSC charge. Every payment being made on any merchant, the merchant will be charged a particular percentage. I'm not sure exactly what it's called here, but it's called MSC generally. So the pricing is a major impediment. That is one major reason. The second disadvantage is access to credits. You know, what is the point if I don't have access to, I can't bank my business, which automatically disqualifies me from having access to credit. Now, what Kuda is doing is we're lowering the entry barrier to onboard your business to be able to take digital payment. So we've leveraged technology. Like I said, the issue is not enlightenment, it's not education. It's just the prices, the economics of banking is right now, it's designed to exclude majority of our people outside. So breaking down that barrier by pricing will automatically include a lot of people into the financial safety net. With use of any smartphone, and I mean any smartphone at all, as long as it has access to internet, we have developed a point of sale system that you can use your phone as a POS. So you're not, there is no upfront investment required, that is one. Because we own the technology as well, we can control the pricing. We slash more by 1/10 the typical transactional pricing required that you would be required to pay ordinarily with any bank. We slash it by 1/10. That is what we take from you. So it's literally, and we only charge you when you do transaction, really. So for us, we need to be able to now make these products mainstream. Because when we make it mainstream, as my brother said earlier, the suppliers will come on, the merchants will come on, everybody are in that ecosystem, and then everybody can benefit from it. And because they're already in the financial service, access to credit becomes no-brainer. And because you understand their business, it makes everybody prosperous at the end of the day. So I think we as a player and as a builder in financial service, we need to be conscious of this fact. Pricing is very, very critical in developing world. It's very essential. It's one of the major impediments why people stay away from banking generally. Thank you.
Thank you. Is there one question? Okay, we have two questions. Maybe both of you can ask the question and then we can see if we can address it.
Hi, I'll try to be quick. My name is Hussain and I'm a researcher with Pakistan Microfinance Network. And as Mr. Aamir pointed out, that with regards to agriculture or your partner, there is a huge financing gap. So specifically, my question is that there are many ways that we have known to address that gap. We were having a discussion on closing the
Okay, thank you. And the second question from here, please. Yes, just please do keep it concise. Thank you.
My name is Mohammed Khan, and I'm a journalist. My question is to the whole panel. How important do you think customer service is in order for your company to retain customers, and do you think it is the biggest challenge that you face at this point?
Okay, great. So one question is on customer experience, and the other one service, customer service, and how do we improve it? And the first one was related to, remind me again. How do you attract customers? So just very quick, concise responses.
So very simple answer, sorry. I'm just going to go, it's better products and services. The more competition, the price will go down, okay? And especially, if you compare yourself with the traditional financial sector, its expenses, obviously, the cost is high, and that's why, this SME sector hesitate to go to you. And that's where you have to come back with innovative products and services and with a better pricing, simple as that. Because you don't have, a brick and mortar, and your investment is in terms of products and services.
Thank you.
I'll answer the first question, as in I think more than, just the pricing as well. I would talk about understanding the customer better, right? That's a very simple question that we need to answer ourselves to whatever we're doing, whatever product that we're creating, whatever service that we're offering, right? A solution to a problem that we think is best, is that really a solution to the customer that we're reaching out to, right? That's a question that we need to answer ourselves. So I think the best way to do it is essentially, first up, understanding the jugular problem of that customer, solving that, attracting that customer to delve deeper into financial services only becomes a matter of following suit, right? So solving the first problem, solving the major problem at hand, that's specifically what we're doing at the moment as well. Before anything else, before pricing, before any other particular aspect of a financial product, we understood that there's a specific need of the hour within the customer that wasn't being solved, right? And we essentially went in there and created, although we can't lend, but what we did was we created a product, right, that essentially mitigated the problem that that particular end customer was doing. Today, we stand at a point where he is borrowing for multiple aspects of his life, and he's actually now more in tuned. A person in DI Khan who didn't know how to use an ATM card is now actually delving deeper into the portfolios of our partner banks, right? And trying to borrow for his car, for his solar panel, for multiple things, because now he understands, he's loyal to us, he understands that we understand his problem, right? So that kind of bond, that kind of trust, you only form that once you attack the jugular problem of your customer base.
Thank you. Umar and Yasir, do you want to say anything? Or should
on the the response, I think this is exactly how you bring customers closer to digital financial services. Understanding what the problem is and then solving that problem. And I think as a response to your question, I think customer servicing is absolutely one of the most important things to address. And I think it's a problem across all financial services providers in Pakistan, unfortunately, today. At Easy Paisa, how we are trying to address it is we're investing a lot of budgets into platforms and newer technologies where we can serve our customers faster, in a better manner, and resolve the root cause of the issue before the issue actually arises.
Just quick word on this. जो आपका question था, I think it's simple. We don't need to put the carriage in front of the horse. हम क्या करते हैं यहाँ पे, जो मेरे भी experience है कि we make a product, फिर उसको ठोंस देते हैं कि यही तुम्हारा solution है. We don't want to do that. So I think the panel is right. Address the first, understand the problem, फिर उसका solution निकालो. This is what I've been saying also, that this is the most important bit. That's why all other things come after this use case. To answer your question, I have another radical view on this, that in an ideal world, I don't want customer service to be there at all. I want my product to be good enough self-explanatory. If it comes to customer service, then I'm not doing a good job. The more volume, more traffic I get on customer service, there's something lacking on the product, or education, or somewhere. So in an ideal world, it's obviously it's not possible, but in an ideal world, there should not be a customer service at all.
Okay. Musti, just a very quick, literally one-liner from you in terms of lesson learned from the early days of building the digital banking tech stack for Kuda.
On one-liner, I'll say it would be to trust the people and trust the process. And what do I mean by that? Generally, you should, if you're doing it, go all big, because it's going to be successful if you do it well, and enjoy the process generally, and not necessarily the journey.
Nice, nice. I think that's a great way to end our panel. Trust the process, enjoy the journey. We are here for making a difference while we're building a commercially viable model. At the same time, I think there is a bigger vision driving all of us, which is about financial inclusion, making a difference. I'll just quickly summarize some of the lessons that I learned from the panelists. Keep it simple. Focus on affordability, accessibility, creating trust in all the features that you introduce. Do not underestimate the importance of spending time with your customer. So keep going out, having those conversations, trying to understand their pain points, and do not try and do too many things at the same time. That's a recipe for failure. That's a good reminder. And then keep the language, interface, visuals, all of those as simple as you can. So thank you so much to the fellow panelists. I really enjoyed listening to you. I hope our audience did too. We have a tea break, so I would request all of you to be please back in the room 3:35 latest, so we can move on to our next panel of the day. Thank you so much for being a wonderful audience.
Thank you very much for you too as well.
I'd like to request everyone to please return so we can start Acha. Thank you everyone for coming back so we can start. So if I could request everyone to settle after the tea. We have our panel discussion 3 approaching. We've got 2 panel discussions before we will end the day today. Our current panel discussion is on digital lending in Pakistan, innovation and challenges. This will be followed by panel discussion 4, which is agri-tech in Pakistan, innovation and challenges. Tomorrow, we expect to start again at 9:30 a.m., where we will have an exciting panel discussion, which is the Women's Forum, Digital Financial Literacy and Creating Female Digital Entrepreneurs. So I'd like to introduce the session host, which is Ms. Noreen Hayat, Chief Executive Officer, Zoodpay, Noreen brings 12 years of experience in financial technology and microfinance. Her work focuses on social upliftment, healthy families, poverty, and revolutionizing the microfinance sphere. She founded Tejas Financial Services, which was the first digital non-bank finance company in Pakistan. Noreen, thank you so much for being with us, and please go ahead and invite the panelists.
I will actually, I'd like to invite all of you guys. You guys know who you are, right? So I'm just going to take it easy. Abu Bakr is joining us here from Mobilink Microfinance Bank today. I'd like to invite on stage Abrar Amin Saab from Seed Cred, Kamran Zaberi from Finja, Nilufar Sohail from EFU Life, and Umar Saab from Tasdeeq. Does that complete our panel? I'm sorry, guys. I really hope you guys are not short of introductions. I hope everyone knows already who you guys are. In the best interest of time, I'm just cutting down on introductions. Abrar Amin Saab, can we have you here? He's there? Lovely. See. Well, I guess that's what happens after lunch and tea, everyone sleeps a little. But, we'll try to keep the session today very engaging. What I've seen with most of the panels that I've been a part of as well, of course, opinions matter. It's a lot about, and it's usually the same conversations that we're having over and again. So today's session, we really hope to elicit actual key takeaways for, what we really want the digital lending space in Pakistan to look like. All of you guys, some way or the other, are impacting the digital, you guys are molding the digital lending space. Some of them are veterans already in this space. We do understand that the individuals over here, they're not representative of the entire sector. So a lot of the participants who are not here today, what we would want to do is, I would urge PFN to get in touch with them and we can take some takeaways from them as well. But what I'd like to start off this panel with, so, we saw SCCP recently, every month they're now releasing numbers on digital lending. Recently they released a very interesting number only for fintech-focused digital lenders. And what we saw was this number has actually reached 13 billion rupees over the last 2 years in 600,000 borrowers. That's a huge number, And we've actually not even seen that trajectory for the microfinance sector happening, which started back in 2000. We talk about microfinance, we see the branches banking rail that was started, the regulations that came in the early 2000s, that were really, brought in with the agenda of bringing in digitization. Fast forward about 2 decades, we see a lot going on in the digital lending space. I'd actually call this branches banking 2.0. For me, it's really interesting that someone who's actually an entity that's actually seen this wave throughout is, Mobilink Microfinance Bank. So Abu Bakr, to you, my question in particular, we've seen, Mobilink has a microfinance banking license. You've got a branches banking license. You guys have a telco on board. And now you guys are going for the digital banking license as well. For the digital lending play, we've seen right now Mobilink actually in the overall numbers, you guys, in terms of active borrowers on the microfinance space as well, it's about 27-28% of the market that you guys have. That's a huge number. Even in digital lending, we see JazzCash has really been, stirring some numbers over there. So what is the digital lending strategy for you guys? Because there's so much happening. Do you even need a digital banking license? I would love to hear about that.
No, thanks for the question. मैं पहले फाद को कहूँगा चेक कर ले चाय पे अभी भी लोग बैठे हैं या आगे?
हाँ, क्योंकि
वो चाय इधर ही ले आएंगे.
I'm sorry, guys,
we
for
will
the
never
urgency.
be as important as tea, right?
That's,
so we should accept that.
My apologies. I have a flight to catch, so I'm actually really trying to be, in time.
So I think thanks for setting the background. When digital lending was started, it started as a simple product. So it started as a ready cash product. In all honesty, it was that if someone needed 2,000 rupees, 3,000 rupees and they wanted to use it for consumption purposes or other purposes, that they could get that lending facility on a touch of a button within a few minutes. The fact of the matter is that Pakistan mein banking over a period of time has evolved into कि treasury से पैसे कमाना है. जो असल मकसद था ना कि यार deposit ले उन लोगों से और उधर लगाएं जहाँ पे funding की ज़रूरत है to grow the economy, that never really transpired. So the ready cash product was the first experiment because the regulator and the economy and the structures needed trust to see whether it works, whether we can actually do financing through a digital channel without having complete hell break loose. So alhamdulillah, that number has now grown quite significantly. We have a portfolio of about 4 billion rupees and about 4 million active customers. Going forward now, though, we see a big transformation. And you spoke about the digital lending strategy for us, and I'm very happy to share. ये आजकल कोई trade secrets तो होते नहीं हैं. So for us, I think our next wave of digital lending is our focus over the MSME segment. The micro entrepreneurs, giving loans that can actually help generate economic activity. We've signed deals with the likes of Food Panda where we're lending to Food Panda's home chefs. 70% उसकी नौरीन ख़वातीन हैं who are sitting at home making fantastic food and selling it on Food Panda. And उनको जो financing की ज़रूरत होती है वो उनको कोई 2 साल का या 1 साल का digital loan नहीं चाहिए. They need a digital loan for a period of 10 days because their receipts are going to come after 10 days. They need working capital finance or invoice-based financing. So I think that focus on the micro entrepreneur is something that we've also spoken to the regulator about. I think it will really, really help Pakistan grow. That's going to be a focus part of our strategy. I truly always say this, Noreen, that SME should stand for small, medium emergency. Because in Pakistan, actually the total amount of credit that has gone to SMEs has dropped in absolute number. वो छोड़ दे percentages हम खेलते रहते हैं GDP पे, वो actually 500 billion से गिर गया SME को funding. क्यों? सबसे बड़ा borrower आपका सरकार है, तो कोई क्यों time लगाएगा to understand the SME's cash flow cycles. At the same time, it's a huge business opportunity. So for us, the next avenue for digital lending is productive loans, SME-based lending, and then there is a whole process around it. Very quickly to your second point as to whether we need a digital banking license or not. Yes, we are part of the process. However, at the same time, it's not the end-all and be-all. We will not be constrained by ये license मिलता है नहीं है to reach our aim. There are always other ways to do it. We are excited about the regulatory landscape. The digital banking license is almost a full commercial banking license with certain limitations on lending and deposit caps. But the branchless banking license affords us great opportunities as well. So if we get it, great. If not, you will still see us reaching 70% of the SMEs in just a few years.
I'm sorry, without being politically incorrect, so again, I see beyond group mein bahut changes aaye hain. We've actually worked with you guys very closely. And we see there's Jazz, which is the telco, and then there's the Microfinance bank. And then there's Jazz Cash, which is the shared product of both of them. And telco at the back, of course, brings in a lot of texture to the digital lending space with the data, right? So although the balance sheet is yours, the data is still coming, or I'd say even the customer base is coming from the telco. So, is how fair or unfair advantage you have. And the other challenge is that once that other entity is created, how does internal politics actually play into it?
Her organization, I was the chief digital officer for Telenor. I've partnered and worked a lot with Google, Meta. There is no organization that doesn't have politics. If someone says there's no politics in the organization, sare dozukhiyo. They're all liars. So that I think there is always organizational friction regardless of where you're working. The telco muscle gives us big distribution reach, but it doesn't only give us distribution reach for financial services. आज अगर पाकिस्तान में किसी ने सवाल पूछा था डिजिटल इंश्योरेंस आगे जा रहा है तो वो टेलकोस की वजह से जा रहा है बिकॉज बजाय कि कोई एक बंदा आके प्रीमियम पॉलिसी बेचता है आपके दफ्तर में आके आपको माइक्रो प्राइसिंग पे डेली वीकली मंथली ऑफर्स पे आपको लाइफ स्टॉक इंश्योरेंस हेल्थ इंश्योरेंस क्रॉप इंश्योरेंस एग्रीगेटर्स ऑफर कर रहे हैं थ्रू द टेलको आर्म because the fact of the matter is that Jazz has 75 million customers, Telenor has close to 50 million customers, and so on and so forth. So in terms of reaching the masses and accelerating that journey, a telco is actually a sector of sectors. ये तो हमारी पाकिस्तान में सोचा ना यार वॉइस और डेटा, telco और डेटा की बेस पे तो आपकी डिजिटल इकोनॉमी बेस करती है. So I think yes, it is. I would definitely say it's a bigger advantage than a drawback. But in terms of changes at the group, yeah, we used to have a co-CEO model which we don't. In Telenor, there used to be a group CDO model which doesn't exist. That's life. That's how it is. But you take that, but overall I think our ambition is to serve the underserved segment, चाहे वो digital banking license की shape में, चाहे वो branchless banking की shape में. But I would actually say to a lot of the fintechs and startups that reaching masses of Pakistan, yes, you can do so in your own time and you can do so over a period of time. But a telco distribution partnership or any partnership that gives you scale is always a good route to adopt.
Lovely, absolutely. And you know, actually building upon what you just said, you talk about partnerships and you talk about SMEs as well. I'd like to come to you, Kamran. You know, Finja has been doing, focus has been SME lending. And you know, we see a digital play but also a hybrid play there. You know, we've seen that lending to SMEs is not as easy, one, because of their own innate challenges, but also regulatory challenges also exist. For example, you know, as simple as KYC, आपको, you know, initial onboarding requirements पूरी करनी पड़ती हैं for SMEs. It's you know, within the regulation, there's so much more required as opposed to an individual. वो कई दफ़ा तो वो होता भी नहीं है ना for an SME. So, you know, would love to hear from Finja's perspective, what have those challenges been for you? How have you catered to them? And अगर नहीं किए तो what is required, you know, for it?
So, I'll give perspective in terms of Finja's, well, context in terms of Finja's journey initially. And Finja, when we started off, we wanted to be a digital payments platform up to about 5 years back. But we soon realized that there was a high degree of requirements to get an SME to digitize itself, or we, you know, coined a phrase which said digitize your enterprise. The idea was that how do you hook that SME on, because there was a dearth or a lack of capital that SME actually needed to make payments. So we came up with a philosophy that if using our portal, if an SME is transacting digitally, then we can use that data of digital payments and subsequent collections to actually use our credit algorithms to score better and allocate an evergreen credit line to that SME, so that A, we've already done the KYC in terms of bringing them on board and having their setup done on the portal itself, and subsequently using their transaction data to score them better. Because again, yes, that was a big challenge that most of the SMEs did not have audited financial statements. Most of the SMEs did not have any financial statements of that fact, not even management accounts. So those transactions allowed the system to automatically create a cash flow summary at the back end, requiring, which was a primary requisite of our credit engine, to score them better and hence allocate a small evergreen credit line, which upon usage, utilization and repayment kept increasing. And the benefit went to the SME, because at the end of the day, they then got hooked on to digital payments. And this is how we sort of transitioned from not just leading from payments to lending, but also having lending as a hook to have the companies start using the digital channels for payments as well. That was one element. The second element was focusing specifically in the FMCG supply chain. There are distributors, there are wholesalers, obviously there are structured distributors and there are unstructured wholesalers. Karachi, there's Jodia Bazaar as a wholesaler market. Lahore, there's Shalmi, Akbari Mandi as a wholesaler market. Again, these guys had various issues. Challenges were that A, they were below the tax net. They didn't want to be visible to tax authorities. Second challenge was that they didn't have access to any formal financial credit. But they were procuring stock. They were procuring stock from conventional distributors. They were procuring stock from the metros and the hyperstars that already exist, which are the structured wholesaler segments. So again, getting data from where they're buying allowed us to actually score them better, and that just gave us much more comfort in extending credit lines to them with the assurance that they're repaying in a timely manner. And the funny thing is that we have done consumption lending or consumer lending before, and to Abu Bakar's point, the idea has always been to remain productive. Never to give out cash loans. Always give purpose-built credit lines that are adding value to another business in terms of productivity. And drawing a quick comparison between consumption lending or consumer lending in terms of NPLs and then looking at productive lending, the NPLs are less than 0.5%, which is phenomenal. So even though it's offline, even though it's unstructured, and we're doing our bit to bring them online as much as we can, the NPLs itself support our thesis to stick to B2B lending altogether.
Well, thank you. That's really interesting. That in a way challenges why we started Tej, because we started Tej and we did cash lending to all consumers from all segments. And we learned a lot along the way, but the problem right now is that consumers ko is waqt we serve openly. There are lenders who are doing it, and I'm going to come to one of them. But consumers ke liye bhi space बहुत restricted hai, because of course you need financial muscle for it. Bigger players have to take on that risk appetite. And we have players, like Seed Cred who've actually come into this space. While it's not easy, unit economics, we've been having this conversation about up. Unit economics actually overall for digital lending are not easy. For a lot of people, I think I'm going to take this stage to actually share this because it's important. Kuch mahine pehle, there was a LinkedIn post by a very, respected individual in the industry who talked about, digital lending, primarily nano lending side, predatory lending ho rahi hai bahut. We saw an influx of barring, a lot of lenders. Well, I'd say I wouldn't want to just be, there were a lot of Chinese lenders who came in, jo license ke bagair aaye. And then predatory pricing charge kar rahe the, and then of course they came to the knowledge of the public. Now problem ये है कि एक तो unregulated space है, दूसरी चीज़ ये है कि जब unit economics देखे जाते हैं एक nano lender के for example, so there are four areas that come into play when you're talking about the pricing. एक आपका होता है the cost of funding. This can vary anywhere between K plus 4, 5, whatever that could be. ये हो गया तकरीबन आप कह लें, for a monthly loan it could be something like 1.5%. Then there would be something like आपकी cost of operations है, आपका फिर इसमें आ जाता है एक margin आता है जिसको मैं side पे रख रही हूँ इस वक्त. सबसे बड़ा cost आता है default का for cash loans. Now problem ये है कि अभी इस particular post के ऊपर SECP actually was they actually got their interest actually rose because SECP को target किया गया कि आप कैसे encourage कर सकते हैं ऐसे lenders को. Now unfortunately of course SECP has a role to play, but that burden came on to regulated lenders who were actually doing their jobs, all of us included here, जिस पे pricing cap की बात होनी शुरू हो गई है, which is actually something that is very scary, particularly for a sector that's only started. Abraz, up to you, this is something that could hurt someone like Seed Cred a lot. What is your view on this discussion that is happening with the SECP on pricing caps? And aapke khayal se, what is the next step forward? And I'm sorry, I'm just going to ask about one more thing. हम जब pricing caps की बात करते हैं, responsible pricing बड़ी ज़रूरी चीज़ है. Just being very, very conscious about the fact about the pricing of Seed Cred as well. आप लोग समझते हैं आपकी pricing responsible है. So, all of that in view.
Thank you. Very pertinent questions. I'm glad, I'm thankful to you that you've raised this question because I think this forum will probably provide us with a better opportunity of explaining what we are doing and why we are doing the way we are doing it. First of all, there's a difference that I need to sort of dwell on. The difference between a microfinance bank lending small loans or nano loans to the public versus a company like us. The primary difference is that the microfinance banks have the luxury or the privilege of raising deposit from the public and then lending it. We are using our own money to lend. And the money often has come into Pakistan in the form of direct foreign investment in hard currency. So whenever somebody wants to calculate the pricing, he or they have to take into account the very fact that the devaluation of the Pakistani rupee against the dollars that were brought in weighs very heavily on the cost and the pricing of the enterprise. For instance, again, no trade secrets, when we received the seed money in our company, the dollar was being sold at 160 rupees. And now it's over 220 rupees. So we have taken that hit. We had to take that hit. But, you know, we cannot erode our entire capital or equity because of that. We have to put it back into the pricing factor. So that's number one. Then whenever somebody invests in Pakistan, they expect a decent return on equity as well. So that return on equity has also to be incorporated in that. Then the risk of default, then the cost of operations, then Nadra, then Tasdeeq and Verisis, and all the services that we provide to the customers. Then the call center operations, then the IT operations. There are so many costs that are now associated with it. So the point to note is that despite all these costs that go into the pricing of our nano loans, the percentage is the same as that of a microfinance bank. The difference to note, however, is, and we are taking great pains to explain it to the regulator, which is the SECP, and now I think there's a realization coming in slowly, gradually, and I know it's a gradual process, it won't happen overnight. The thing is that you cannot measure or determine our pricing in the similar parameter as that of a bank or a microfinance bank because we lend only for extremely short period of time. The average lending tenure for our loan is between 10 days to 30 days. In my case, our case, the average tenure is 32 days. Okay? So whatever percentage we earn ends with the termination of the loan. It cannot be translated, should not be translated into an annualized percentage rate. That's the key issue. So for instance, if our pricing is 26%, it's 26% fixed for that particular loan when it ends. So you cannot assume that it is 550% because it's, when you take it to an annualized basis, it becomes that. It cannot be. Because whenever somebody repays the loan, for him, the tenure of the loan ends, and he used that money, our money, for X number of days, and paid back the return at 26%. So that's a market rate. The other factor which is very important to note is that whenever the word predatory lending is concerned, or taken or, you know, bandied about, we have prepared a list of 25 companies in Pakistan that are operating illegally and providing these nano lending platforms. Most of them are operating out of a house somewhere, using 2 laptops, having 3 accounts. I won't name the sources of the accounts, but they are mainstream accounts. So how would somebody know, how would a borrower know that the money is not being channeled through an approved payment channel? So we had a very constructive discussion with SECP, also with FIA, and now we are also going to have a discussion with PTA on this, and we are going to request them to support us, the legal entities, into restricting the access of people to these fraudulent companies, because they are not only bringing a bad name to us, but they're also causing disproportionately high number of illegal practices in the market, which is where the term predatory lending can actually be affixed to. So I hope I have been able to answer some of the major components of your question.
Thank you. You definitely answered my concern about the responsible pricing element, but we'll come back to what you really require of the SECP. We'll come back to that shortly. Umar, it's up to you. Tasdeeq has been making some strides in the recent past. Now the credit bureau itself is a very, very important body when it comes to digital lending. When we started lending, 2018 when we gave out the first loan, people didn't know about a credit bureau. The majority in Pakistan doesn't know what a credit bureau is. But when there's been like mass nano lending with players like Jazz Cash and Seed Cred, what's happened now is that since more people are coming into this ecosystem, credit bureau ki awareness बढ़ रही है, and the need to repay on time. That's something now people are actually looking into. A lot of people now come back to us, our defaulters, saying, हमने repay कर दिया है, NOC please दे दीजिए. Credit bureau से नाम हटाना है, Now, for you, my question is, how important is the credit bureau in the digital lending ecosystem? And other than just providing, credit inquiry services, what all is this Deek looking into? And I'm just going to add on, we've got multiple regional players coming into, people like Karar, who are themselves owned by credit bureaus, like the Saudi credit bureau, SEMA, they're actually doing a lot of work here, looking into data analytics tools. We also know Tasdeeq is looking into it. So are players like these also somewhat partners to you? Are they competition? What all are you thinking about?
Nadeem, we take pride in calling ourselves as the infrastructure for the digital lenders. And I'm proud to say that 4 of our customers are already sitting here. So you are absolutely correct. Credit bureau plays a very important role in digital lending. What are the 3 main pain points for digital lending? Take cost reduction and turnaround time, reduction in turnaround time, and getting a reliable and effective credit evaluation. These 3 things we provide because we are a repository of data, and we are the experts who can manage and provide analytics on that data. Till now, there have been a lot of challenges for us in comparison to how the international market operates. We started operations in 2018, and then it was a challenge in terms of collection of data. It took us 2.5 years to, and even after the fact that the lending institutions were bound to provide data to us under the Credit Bureau Act and State Bank regulations, but nobody was able to. There was a distrust. You asked me to be blunt, so there was a distrust that what will be the security of that data. But eventually we were able to convince everybody, and now 120 institutions are reporting data on a monthly basis to us, and they are using the services. So we started with the basic service, which was the credit information report, which we started providing, and then focused on the B2B business, which was providing credit information to the lending institutions. And eventually, over a period of time, the awareness, as borrowing increased, as lending increased, the awareness started increasing. So we have started coming up with new innovative products also, which is basically starting off with scoring models. We have a wealth of data available. We have got data available for 21 million borrowers in Pakistan. We have got their demographics. We know exactly what their lending behaviors are. And based on that, and this data is based on the data which we acquire from commercial banks, from microfinance banks, microfinance institutions, NBFCs, non-bank finance companies, Fintechs, buy now, pay later companies. All that wealth of data comes to us. Based on this data, we have developed a lot of scoring models, which are applicable to the digital lenders in terms of reducing their costs, or reducing their turnaround time, and doing a credit evaluation. The challenge which still comes in right now is that every digital institution also collects their own data, and they believe that based on the data which they have collected, they can develop great models and do a lot of things. But what I advise them to do is that focus on your core business. Developing credit scoring models is not your job. Share that data with us as per regulation, as per the Act. Correlate that data with the bigger data set that we have of the industry, and let us build those scoring models and those analytics for you, which can help you in terms of managing your business more efficiently.
Oh, that's actually very exciting and refreshing to hear, but problem here is it's unfortunate that we talk about collaboration, but we never come to execution. And that is a challenge, because each one of us actually, for the longest time, has wanted to do everything ourselves. And please.
Coming to your second question, with regards to companies like Credible or Karar coming in, who have been a bureau also and have established, we don't look at them as competition. We look at them as partners. In fact, we are talking to a lot of them in terms of integration into their system, because our strength is our database that we have. Their strength is their scoring models and the platforms that they have built and which they are selling. We don't want to be a competitor to them. We want to be a partner to them in terms of integrating our services into their platforms and providing support wherever they require.
आपने एक जो बहुत important बात की वो ये कि you guys are an enabler. Exactly. And I think we need to understand within the digital lending space as well, there's so many facets to it. everyone can't do everything, right? And this is where enablers like, yourself, Neela, for EFU comes into play. And this hasn't been only now, when the digital lending excitement came through. It's been, since eternity. Microfinance in particular, we've seen, credit life insurance being embedded into the products. But, my question is, insurance itself is a very difficult product to sell, And we've had an experience, unfortunately, जब actually successful होती है ना insurance, which is claims जब आने शुरू होते हैं, तो insurance companies पीछे हट जाती हैं. Now, credit insurance जैसी चीज़ वैसे ही अगर इस level पे आए जैसे Jazz Cash, Finja, and Seed Credit कर रहे हैं, that would be, you need a lot of appetite to bear such losses. So, an insurance company like yourself, what are the interesting or exciting insurance products that you guys are developing for the digital lending space?
Assalamu alaikum everyone. Thank you Noreen for that question. So before coming to your question, I know you have to rush for airport, but I'll take a minute to just give a perspective to everyone. I know when I was coming to this panel, I had this question in mind that people will think, why is an insurance company representing a digital lending panel? Or I think Noreen gave a good perspective, and I was absolutely happy when Abu Bakr mentioned about insurance in a panel. So how do we view digital lending? First, I'll give you my personal perspective about it. So whenever I see around, I think lending is a need of the hour. किसको आजकल पैसों की ज़रूरत नहीं है. हर form में everyone is individually approaching everyone else for lending. They could be people who are associated with us, like our drivers, our maids. They need money. A step beyond, if we go, our colleagues, maybe they don't say it, but they want something instantly. They want lending. We go to banks, they lend. We go to microfinance institutions, they lend. Committee, आप बहुत सारे लोगों से पूछे आपने क्यों ली है, तो मुझे अभी immediate जो है ना, I want the TV, I want the fridge, so I want money for it. So they are lending. In an insurance company, in an insurance policy, people do surrender the policies. People want partial withdrawals because people want money. So need is absolutely there. So we at EFU Life have realized that need, ki this is a segment. So again, for years we have been operating, I think sabko idea hoga, but our penetration is less than 1%. So what we have realized at EFU Life in recent past is that reaching to the customers directly is not possible. आप चाहोगे, you will do that for middle income and above. Your brick and mortar will serve, your partnerships will serve. But जब आप middle income and below की बात कर रहे हैं, तो it will only be successful when you partner with ecosystems. And giving you the perspective and now connecting with it is like this digital lending space is growing. We know that there is a need for it. So we want to partner with this segment. We want to partner. Credit life एक चीज़ है, microfinance institutions में और banks में. This is not something new. This has been there for ages now. But still, if you ask me a very honest question, I would say वो ज़्यादा आपके institution को protect करती है and not the person himself. So yeah, the loan repay हो जाता है and no doubt एक बड़ा burden on the family gets releases. But again, you have to have something that above the credit life that is for the family, that helps the person when he needs it the most. And you are absolutely right, Noreen. जो main I call it कि selling point ही insurance का claims है. So and what we have learned about this mass market, I know my friends here in the digital lending space are also facing कि हम दो चीज़ों की बात करें. We are saying we'll reach to the masses and we are saying we'll do that digitally. मगर एक बहुत important चीज़ है कि शायद वो जो digital audience है, बहुत हद तक वो जो digital financial audience है वो masses नहीं है. They are not the masses. So to reach to them, you have to speak their language. In claims also, what we have done, I'll give you just one example. What we have done is that we have onboarded claim coordinators. और जब वो किया तब हमें realize हुआ कि ये तो वो लोग हैं जिनको अंग्रेजी तो बहुत दूर की बात, उर्दू भी शायद ही समझ आती हो. So we then realized कि no, this market is very different. उनको कहा आप कोरियर कर दें, and then we realized कि नहीं कोरियर कैसे करेंगे, they don't have reach. फिर WhatsApp पे claims लेने start किए, started speaking in their language, making their lives easier. So what we have realized as insurance company, if we have to succeed, we have to embed in your ecosystems. We have to make insurance products the way you like it. We can't operate our way.
Well, thank you so much. And we've seen EFU is coming up with a lot of innovative products, exciting stuff there. So I just like to actually start sealing this panel with something that's some takeaways actually. And what I'd like each one of you is to give one thing that you can give to the industry. It could be any participant. It could be a partner. It could be a regulator. Anyone. One thing that you can give. And one thing that you need. But please name the player. And to make it a little more challenging, each one of you has to come up with a different answer. And yeah, so let's.
Whoever is first has the easiest one.
So, like we're talking about digital lending, I think one key element that was discussed shortly as well is about embedded finance. And that from a lending perspective, a digital lending perspective is super important because the easiest element of scalability is by embedding your lending engine or credit algorithm into a partner institution's application. So that is something that we, from a lending perspective, on behalf of the entire panel here, would seek out in terms of partnerships, in terms of acceptability, not having that, that little scare of, being competitive or data leaks and all of that. It's about trust at the end of the day, and we heard about it throughout the day as well, that partnerships are all, thriving on trust. So embedded finance is something that, we want to sort of give out to all the partner institutions that are there in their respective fields, and not having to sort of cannibalize on their work. One thing that I think from an NBFC perspective that we would like to have from the regulator is, again, I think KIST pages brought it up earlier in the discussion as well, is our APIs for NADRA verifications.
From NADRA?
Not just NADRA actually, we would ideally want to have all government institutions giving out APIs and not treating NBFCs as, below state bank regulated entities or banks. Because I think that's a very unfair advantage, and you're not letting an NBFC grow, and then you talk about, pricing caps, and then the cost of acquisition or the cost of KYC is so high, and then you want us to, worry about the pricing also. It becomes a bit tricky. So one thing that we would want from the regulator, one thing we would want from both the regulators is, equality in terms of API sharings. Again, not just from NADRA, but from FBR as well. One thing that we've also realized is that although we're working with Tasdeeq and Data Check both in terms of reporting of loans, but banks are still reviewing the ECIB. And on ECIB, Data Check and Tasdeeq details are not being shown. So that level of integration where the bank also has visibility that ABC borrower has borrowed and is being reported on Tasdeeq or is being reported on Data Check needs to be there for the bank also. So that level of uniformity needs to be very much there. That is something that we need from the regulators and the government at large.
Lovely. So, by the way, ये give जो थी ना थोड़ा सा cheap था because you're actually asking, but I'll give it to you nonetheless. Okay, from you.
देखिए आपने जिक्र किया था pricing caps के हवाले से.
जी.
So, I think it will be very unfair for any regulator to put a pricing cap on the market-based factors. Just like the credit card several years ago when the banks had launched the credit cards, I used to be in Bank al-Flah then, and I know that Bank al-Flah literally swamped the credit card market back then. The market has to settle in. It has to find its own equilibrium. The dynamics of the market forces have to come into play. Yes, the SECP's role can be there in the form of a watchdog, that unfair business practices are not being incorporated in the working of any organization. But as far as the pricing cap is concerned, it will be contradictory, it will be debilitating for the business to grow, any business to grow, because today we are 2 NBFCs in the lending area, tomorrow more will grow. So if the pricing cap stick is there, the new companies will find it disadvantageous to enter the market and compete with us on equal footing. Thank you.
And something that you can give to the sector, something that you can, that's a take. What would you want to give to the sector? Well, that's the same as embedded finance.
Just to educate the public about it, you know, we have the giveaway from our side in the market during the last 1 year has been that we have serviced 2 million borrowers in Pakistan. And out of these 2 million, 1.5 million were those customers who had never ever borrowed, and they were not there in the Tasdeeq data bank. So we have actually helped document the economy, and we have disbursed 20 billion rupees of these nano loans in the last 1 year. So it's a huge contribution that we are doing to, not just that, we employ 1,000 people. So just imagine the payroll that we are, you know, giving away, and that income is going to those households where there was no income before this. So this is.
Thank you.
We basically
if I would just urge you to be very brief, if you could, one give, one take.
We are a data company, we live and breathe data. So we need data.
Data.
Please share data with us. It will help financial inclusion. It will help poverty alleviation. It will help.
Poverty alleviation. That's a good one.
Exactly. And what we need and what we can give is ask us anything. Analytics, AI, machine learning based model.
We want the data as well. Will you give that?
So anything that you want out of this data, we are the experts.
One small point, if I may, with your permission.
Of course.
You see, we are also very, very alive to the issue of gender equality. And everybody here will be thrilled to know that 58% of our workforce is female. So we are particularly helping the young ladies come into the work environment and become very, very productive members of the society.
Thank you.
Okay, so not directly pertaining to me, but from an insurance perspective, I can say what we can give is easy business models for you to embed your digital journey with. I don't know for what we can take, but I can request everyone here in the room, absolutely I'm not talking to those who are in this panel, but to the audience in general, जो digital lending में जो नौरीन ने example mention किया, I think that is a very important example. वो तब arise हुआ था जब हमने थोड़ा सा जो है वो human factor को aside कर दिया था when data was shared, because I heard a lot about data sharing. So this was an important point that I wanted to touch upon into this panel, that regulators का तब जो है ना थोड़े से uncomfortable होते हैं when the data is shared but it is not used in a proper manner. So these masses, because working directly in this segment, these people need your hand holding. Maybe agar they are not able to repay that in time, there could be a genuine reason and not necessarily a default. So I would request the sector in general, and taking an advantage of being a devil's advocate, that thing that you are serving a human that is sitting right there who is in need of that instant credit. Thank you.
And thank you, Neelafar.
I would say that in terms of giving, our commitment, as I said, our 2023 strategy, I'm saying it out loud, is to digitally serve and lend to the micro SME segment. ये जो small medium emergency है, अगर आपके ecosystem में micro entrepreneurs हैं, जिनको 10 दिन के लिए कर्जा चाहिए, जिनके पास invoice है, cash नहीं आया, ज़रूरी नहीं है कि बड़ी रकम हो. अक्सर लोगों के पास एक short term cash flow की need होती है that can get them by and actually help their businesses. We want to serve that. उसकी credit scoring की फिक्र ना करें, वो हम पे छोड़ दें. We want to serve the micro SME segment. That's what I pledge to give. In terms of taking, it may sound a little stereotypical, but it's also a commitment from the audience and something I also commit to. In our circle of influence, we're not the Prime Minister of Pakistan, we're not the UN Secretary General, but in our circle of influence, in our homes, in our domestic help, there is need for savings products. There is need for insurance. There is need for giving them digital literacy skills and training. Let's take that commitment. It may sound stereotypical, but I swear to you, if in our circle of influence, in the help that we have in our households, in our offices, if we can get them micro insurance, or help them to save digitally, help them to get a cheap loan if they need it, help them to have digital literacy, I think we will take Pakistan forward. I truly mean that.
Amazing, thank you. So I'd actually like to summarize that. बड़ी इंटरेस्टिंग चीज़ ये है कि जो सारे गिफ्ट्स थे ना वो सारे अपने प्रोडक्ट्स थे ज़्यादातर. You know, the interesting take was from Abrar Sahab actually, but it actually comes down to this. You know, when partnerships में होता ये है कि it can't be just one entity taking. You know, it has to be beneficial for everyone in the industry that can benefit from it. I think we probably need a bit of a mindset shift. You know, take me, I think they were really interesting requirements that we always talk about. But I think in the best interest, in the best spirit of actually giving, you know, we were actually having this conversation internally within our team. You know, तेज ने अपना actually पिछले कुछ सालों में काफ़ी lending की, हमने काफ़ी data भी है हमारे पास. And I don't know, we have to see कि वो कितना हम इसको technically correct करेंगे. But we are actually thinking of making that data available anonymously to players who lenders or who can actually use that data to build services upon. We'll have to figure out that, you know, that the structure of that partnership. And we invite, you know, people to come to us if that's something that is of interest to them. And that's something that we're willing to give to the industry. We're, you know, willing to help what our learnings have been. So I think that's where I can start give from. So yeah, I think that's where I would like to close this session today. It has been very exciting. Thank you so much, everyone, for being so candid. I would actually also like to urge Fahad and Dr. Zima, you know, maybe we need to start, maybe a thread of conversations with all the other lending players, digital lending players in the industry who are not present here. There's some great players doing some great work. Their voices need to be heard. So maybe we can start that chain where we can ask them of what their requirements are and maybe have, you know, a session where we can actually take this to the regulators or the players concerned. Because I think बहुत बातें हो गई planning की, now it's time for execution actually. So let's try to do that. So I'll just open the floor to 2 questions. I'm sorry guys, I'm just getting late for my flight, so I'll try to keep it short. 2 questions. Yes. Afan?
Right, so my name is Mohammed Afan, I'm a journalist. I just have a question for the whole panel. Is that Sharia compliance, is that the biggest challenge in credit lending and insurance?
It's the biggest opportunity. जो 75% पाकिस्तान अभी अनबैंक्ड नहीं है ना, उसमें से 61% कहता है कि हम उस वक्त आएंगे when you have Sharia compliant offers. So why would a fintech, why would a bank, why would any NBFC player not want to offer that service? Other than being the right thing to do, customers need it. पहला वाला panel था, they were saying what's the problem to be solved. It's a huge opportunity. वैसे ही State Bank कह रहा है यार 2025 तक कुछ खुद ही कर लो तुम लोग यार, you know, get to it. I think if we can do this the right way and then digitize this journey, the people, the companies that are able to capture the trust of the customers, I think they will be world beaters. The reason is, customers now, you know this better, उनको transactional relationship नहीं पसंद. आपको personalized में भी transactional relationship नहीं पसंद, क्योंकि वो लेन-देन का relationship है. You want a relationship of a trust around the ecosystem. You know that the company is going to serve your needs and interests. So I think it's a huge opportunity. We ourselves as Mobile Link Bank, you will soon see certain product launches and verticals around this. And I hope the more the merrier. Everyone should get into this, but do it right. Do it with customer trust in mind.
So I would answer with regards to insurance. So 7 years down the road, conventional insurance companies, including EFU Life, took license for takaful. And we thought that it will not exceed 10%, 20% of our total customer base. And as we speak, we are around 50%. And to some channels, we are around 60, 65%. So you can absolutely see that there is a need of Islamic products. It also, for us, we see it in small tickets, that it also cancels one of your observations of why not to buy insurance. So yes, takaful is serving the population, and it's answering to many questions that were previously unsolved.
So on Sharia, we initially saw this as a growing problem towards the tier 2 and tier 3 cities in particular, not just tier 1 when we were doing productive lending or business lending. And we reached out to one of a very well-known Sharia consultant who is also now an independent director on our board. And he explained to us very well, and he explained it in a sense, and he gave a fatwa against it as well, that when you're doing purpose-built stock financing, that entire process is Sharia compliant end-to-end, because you're actually supporting a small business or a small entrepreneur in terms of their productivity in their business. So when you can structure the process, or you can build the best kind of a process flow which at every essence is adding value to, you know, what we were discussing earlier as well. When you become a net giver to the respective borrower, then automatically that entire process just becomes more on the Islamic angle as well. And the minute the borrower understands that, they no longer question whether you have a Sharia certificate or whether you're Islamic or un-Islamic. When you take out the word loan and you facilitate it in terms of, or you interchange it in terms of a facilitator, that just changes the entire dynamics of the role. But that's again a mindset, that's a philosophy that each entity would have in terms of digital credit.
Could we please hand over the mic to that gentleman, please?
My name is Syed. I was just listening to the argument when Ms. Nilofer started that credit, तो अब हर कोई मांग रहा है. So we started the payment industry like this. हमने उसको एक demographics के गेम की तरह देखा कि हमारे पास 220 मिलियन की पॉपुलेशन है, 170 मिलियन जो है हमारे पास टेक को यूज करती है. हम कितने लोगों को दे सकते हैं, कितने लोग 30 साल से नीचे हैं. तो अगर हम लेंडिंग को भी इसी तरह मतलब perceive करते हैं और इसी तरह अभी trying to start payments the way we did, lending the way we did payments. So won't that be a bigger risk considering we've got the nano lending players who can also comment on the NPLs which they've gathered from different sort of lending. Abu Bakr साहब ने बात की SME lending की, which is more safer than what Abrash company was doing, which was nano lending, consumer lending. तो ये कितना बड़ा रिस्क होगा कि हर कंपनी लैंड करना चाह रही है और एक दूसरे से आप इंटीग्रेटेड हैं नहीं और आपको पता ही नहीं है कि किस कंपनी ने कितना पैसा किसको दिया हुआ है. तो it's like handing I'm not getting the right.
That's a good question, and if I may summarize, what you're really saying is it's a risky business. Lending is a risky business. Can it be democratized the way payments is being, despite the fact that it's so risky? And I would just like to correct your misperception. सबको पता होता है कि किसको कितना पैसा दिया है. That's why credit bureaus exist. So that is happening for nano lending as well. But as for the other fact, anyone to answer कि lending को democratize करना कितना आसान होगा? Anyone wants to take that?
Yeah. I will hazard an answer on that. You see, I think Abu Bakr was talking about in the morning is the educating the masses is the key. So education and then the availability of the trust of the masses in what you're offering and what you're proposing to offer, that holds the key. So in our country, you see there are some barriers, psychological barriers, cultural barriers, societal barriers to borrowing. In a typical rural environment or a patriarchal society, it is not considered good if you have a loan on your head. It's a society thing that we have in Pakistan. So to inculcate or to give out a message that borrowing is not bad as long as you intend to repay it. But it is bad definitely for the lender if you don't repay it. So the message has to be very clearly driven out that there is no harm in borrowing money, as our colleague just mentioned. But the real thing is to be able to repay. So unless and until you don't have the capacity to pay, please don't borrow. This is the message.
Another thing is, the institutions know because of the credit bureau where they have taken loans and what kind of behavior they have with those institutions. Credit bureau इसमें एक और तरीके से help कर सकती हैं in terms of risk-based pricing. Customers who have a bad risk profile can be priced at a high rate, and who have a better risk profile can be priced at a lower rate. This kind of pricing has not yet been done by any institution, but going forward, this can help mitigate the concerns that we have.
Thank you. Yes, one last question, please. Go ahead. Thank you.
Hello, my name is Kashif. I'm from Mitsubishi. So I see that Fintech industry has been growing with a lot of opportunities. But of course, with opportunities comes a lot of threats as well. So my question is with respect to the insurance company. Of course, when you operate in a Pakistani market, where safety and security is the biggest concern, how do you cope up with that? I mean, theft, fire breakouts, it's quite common here. So how do you maintain the financial feasibility and profits in such a situation? I mean, I'm still not clear because of course people are moving towards insurance a lot because, you know, because of the safety and security factor. And since insurance has become Sharia compliant as well, but this has become a challenge for insurance company as well because a lot of people have been claiming more often now. So how do you deal with the financial liquidity, profitability and feasibility in that case? Thank you.
Look, see, your question is absolutely correct because there is a lot of risk that Pakistan is carrying, and one problem that we all face is, again, the lack of data, the lack of accurate data. So we don't, like other companies, we don't have so many databases which actually predicts, which actually has the historical data. But then what we also have is, what we all know is a huge population. We also know that the law of large numbers is what is relevant to insurance as well. So when you have a bigger pool, such a bigger pool of people contributing in it, and then you have to bear those losses, those large number works out. So when you penetrate into masses, when you get these numbers through telcos, through huge number of digital lending institutions, then you have the capacity and you have the capability of paying claims. And everybody here, most of you might think that this is a loss-making proposition. When we entered into the proposition, we were all very, very rapidly said that you will end up in a loss-making. But it's not a loss-making. You have to do it right. You have to rely on the risk profiles, credit rating, but more than that, it's the law of large numbers. If people come in, if you have those masses, you can deliver the right product. You have to iterate, you have to change, you have to add benefits, relate benefits, and aware your customers.
Well, thank you so much. Thank you so much to all the panelists. You guys have been super candid, sharing some great insights. And to all of you in the audience, I think it's important to understand lending is not an easy space to be in. It's an art, a science, it requires a huge heart, and a lot goes into it. So kudos to all those who actually dare to lend, in a country like Pakistan in particular. But then also, if players like them do not get it, who do not do it, then who will? So I think we need more and more players to get into it. You have a population of over 100 million who actually are people who can get access to lending, but still only about 4% of the population has access to lending. I think this is an opportunity for us, and all these players are doing a great job, but then a lot has to be done. So thank you to all of you, thank you to the audience. We'll call that a wrap.
Thank you.
Thank you so much, Noreen. That was a really nicely moderated session and wonderful insights from all our panelists. And yes, we must dare to lend and leverage partnerships and do it well, because this is an essential need for our country to spur economic growth and catalyze economic prosperity. We are now reaching the last of our panels for the day. So thank you for staying with us. A big hand to the audience because they have been around. So let's clap ourselves for being here. It takes a lot in today's world to stay in one room for a full day, where we have so many demands on our time and distractions. I think what we have ahead is actually a very fascinating conversation. I hope this is also going to keep us active. And if not, as I said earlier, please be ready to do your shoulder stand. So let's now invite Habib Saqib, Head of Fintech, FasalPay, who will now be leading our discussion on agri-tech in Pakistan, innovation and challenges. Let me share with you briefly about Habib. Habib is the founder of FasalPay, Pakistan's first agri-fintech, aiming to increase farmers' profits through improved access to affordable agri-credit products and services. Before FasalPay, he launched Khushhal Zamindar at Telenor, Pakistan's first digital agri-advisory service, scaling it to over 8 million users. Habib, thank you so much for being with us. Please join us here and invite your fellow panelists. Thank you.
Assalamu alaikum everyone. So definitely PFN has kept the best for the last, and it is my pleasure to invite the panelists for this session. Mr. Fawad Khan, Chief Data and Strategy Officer, Bakhabar Kisan, a veteran of IT and telecom sector in Pakistan and abroad. He was part of the founding team of GIK Institute, developed deep understanding of agri-tech, working for Fatma Group as Chief Information Technology Officer, and since leaving Fatma Group, he has been associated with Bakhabar Kisan, which is one of the leading digital agri-tech firms serving over 5 million monthly active users with their digital contextualized advisories. My second panelist for today is Mr. Muzaffar Mangi, who is the co-founder of a very promising agri-tech startup called Farmdar. They use remote sensing and artificial intelligence to create marketing solutions and also provide remote reporting on crops. And the next on my list is Mr. Arsalan Khan, Vice President and Country Head, MasterCard Pakistan. He brings with him extensive leadership experience in emerging and mature markets, has worked for telcos and digital financial services, driving market growth and customer acquisition. He has been leading startups, turnarounds, and merger integrations. Before joining MasterCard, he was the Chief Commercial Officer at Bakhabar Kisan. So it'll be interesting to discuss what he has been seeing on both sides of the fence. And then we have Fatma Zaka, who is the founder of the Farmet, an experienced professional who turned a hobby into a startup. She has worked for over 10 years in various sectors and is currently working to close the gaps in agribusiness, especially for capable women growers and smallholder farmers. And they aim to be a portal for women in this industry to thrive. And last but not the least is Mr. Faisal Bilal, founder and CEO GrowTech. Is Faisal here? I think, yeah, he's here. Faisal is also a telecom expert with over 15 years of experience in using telecom and technology to address fundamental challenges. His firm provides numerous technology systems, helping the farmers grow more and grow better. And we are missing one of our panelists today, so Mr. Zishan Beg, the country head Syngenta. He had a family health challenge due to which he had to leave. We wish his family well. So, let me start. So we're going to start with you for WhatsApp. So agriculture, as we know, has been the least digitized sector in terms of industries, not just in Pakistan, but globally. And I remember Bakhabar Kisan started off with a very simple advisory service, and now you're moving towards more of digitized services, remote sensing, and you're also trying to add more functionalities and features to your app. So just tell us a little bit about the challenges in helping farmers move from a relatively simpler feature phone-based kind of services to more digital services.
Sure. Can you...
Just tap it and see.
No, it's okay. It's working. Yeah.
Okay. Good.
Okay. So, again, it's been a long journey at Bakhabar Kisan. We've been there for 6 years. Initially, our objective was to scale. And our focus was on traditional services using, IVR, using SMS, using a call center. So it was traditional services. Clearly, the sort of services that we can offer using an app are, way more than just the standard suite of services. Now, moving to an app has certain challenges. Some of these challenges I call lazy challenges. They relate to connectivity, affordability, and literacy. I'll hit a little bit upon each of these. Connectivity, you move off the motorway and signals get very spotty. So having an app out in the field is perhaps not the ideal solution. Smartphones over the last 1 year, they've become more expensive, and that surely is a challenge. And literacy, digital literacy, that is a barrier. Because you see, the farmers that we work with are mostly smallholder farmers. Affordability for them is a big challenge, as well as literacy. The other thing, we had an app, way back in 2017. But as was mentioned by several speakers, any digital product has to be relevant, it has to be useful, it has to bring value to the customers. And we, I think, learned about it a little hard way. We have just recently completed a project with GSMA. They, took us through the process of design thinking workshops, usability testing, UX, UI design, product iteration, and that has allowed us to really, bring our app to a level where we now think we can take it to the farmers, and we are going to do that in a very concerted way, because we feel migrating the farmers to the digital platform, whether it happens today or over the next 3 years, is the way to go.
Thank you so much, and that really nicely places us to ask the question from one of the leading agri-techs in the country, Farmdar. So Muzaffar, how has the experience have been? So these guys kind of transitioned from a more traditional feature phone-based service to a more smartphone-based service and precision agriculture services. That has been your starting point. How has the journey been so far?
I just want to contextualize, the space we're all playing in. ये पहाड़ हिलाने वाली बात है. इधर कोई काम नहीं हुआ. फार्मर को पिछले 60-70 साल से निगलेक्ट किया है. हर फार्मर को कुछ 300 से 400 पेस्टिसाइड कंपनीज आके हर महीने मंजन बेचती हैं. कोई वाली वारिस नहीं रहा उसका, ना उसके कोई आउटलेट्स हैं, ना एजुकेशन है. Understand the beast that you're addressing first, right? So progress should not be measured how it would be by urban standards sitting on stages like this. Progress का context थोड़ा और है. मेरा पहला point ये होगा. दूसरा देखिए, there was a gentleman sitting here from Mobilink who was talking about trust in the ecosystem, right? We're going to a farmer essentially and saying that the way you've been doing things for a couple of 100 years, we're now suggesting a slightly different way of doing it. Is that farmer ready to try a new thing out? 100%. Every single farmer in Pakistan is. ये मैं खुद इस चीज़ की गवाही देता हूँ. But it's conditional. Because when you're asking him to try something new out, it comes with a risk, right? So trust in the ecosystem is really very, very important. It's like electric cars. आपको मैं 2.5 करोड़ रुपए दे दूँ वो बोलूँ कि आप जीप खरीदें, आपने जाके प्राडो खरीद लेनी है. आप e-tron नहीं खरीदेंगे. Why? Because it's just so brand new. I mean, what are you going to do with it? How many people will buy it from you? It's just brand new. And trust in the ecosystem comes from value, right? If you're actually giving the farmer something that is truly of value, if you are gearing yourself to give it to them on a free model or a freemium model, if you're smart about targeting early adopters, there is absolutely no reason why people would not want to latch on to this. Farmers do want to know the weather. Farmers do want to know plant health, vulnerable areas, productivity zones. उनके मसले बड़े crystal clear हैं और unaddressed भी हैं. तो जब उनको एक solution provide दिया जा रहा है वो ज़रूर try करेंगे. But देखें इसकी ये एक तो long haul है, ये overnight नहीं होगा. और दूसरा ये जो value creation है ये ही आपका ecosystem एक trust create करेगी. So coming from that space, I feel that the progress is good. Internet connectivity is a real issue. I will slightly disagree on mobile phone prices. I was in Nawab Shah 2 weeks ago. I was in Khanewal yesterday. परचून की दुकान पे, not exaggerating, 3,000 रुपए का आपको चला हुआ स्मार्टफोन मिल जाता है. कैमरा अच्छा नहीं होगा, बैटरी अच्छी नहीं होगी, but it is a screen with a browser that allows you to connect to the internet. What are his motivations for buying that outside of YouTube and Facebook and just, you know, using WhatsApp? And connectivity plays a huge role in that. Whereas I feel the telcos have done a tremendous job in making sure, you know, we have such a high mobile phone penetration. Internet connection is spotty at best. And that really has a lot to do with what companies like us will be able to do for the farmer. And moreover, you know, what kind of financial technology is brought to them. Technology udhar hai, farmer ke paas, wo connect nahi kar pa raha. So thoda sa mixed bag hoga, I think is answer ke andar. I hope I've addressed your question.
You shortly did, and I think that really helps me ask the next question from Arsalan, who has recently moved from, not too recently, but in the recent past, moved from agri-tech to fintech, or a financial services company. And, you know, we talk about the promise of the two working together, but still we don't see that happen a lot. So what Muzaffar is saying, that the farmer is ready to change his behavior, adopt new technologies. What are some of the barriers? What can we do to accelerate that adoption from a financial services perspective?
Okay, I think, first of all, thank you so much for inviting us to this session. I mean, from a MasterCard standpoint, we're extremely proud to be here. Thank you to Fahad and the PFN for holding this. Look, in terms of barriers, look, I will speak obviously more to financial inclusion and the financial services thing. We've all heard the numbers, right? The agri economy in Pakistan contributes about 21 to 24% GDP, contributes to half of the direct idle workforce. Prior to the floods, I mean, we had double-digit growth in important crops, right? So Pakistan is 25% financially included, right? So there's a large segment of the market which is financially excluded, and it's rural, and that's where the agri segment appears in. So in terms of the agri, I would say the actors involved in the agri ecosystem, you've got the farmers, you've got the agri input dealers, you've got and obviously you've got what we call the mandi, right? The marketplace where everybody sells out to, right? This is a very informal system today. And we've discussed the role of the RTs as well. I think that where it comes to us being MasterCard, we have deployed something called the Farmers Network of Farm Pass. We've introduced this in a lot of emerging markets in Africa, also with our neighbor across in India. And working with different actors like agri-techs, financial institutions, FIs, government institutions as well, whereby we kind of plug in various actors into the ecosystem, right? We facilitate that. But I think the key barrier right now towards anything today is that it's an informal economy, it's an informal ecosystem. There's not enough, I would say, transparency or visibility. So the farmer's ability to set pricing or at least work with the market in terms of his own incomes is very limited. His access to, I would say, formal financial services or lending is extremely limited, right? And so the whole ecosystem is informal, right? So if you look at the farmers today, 8.1 million farms, right? Out of which 64% are small, right? And they're subsistence farmers. In terms of lending alone, if you look at the ADB numbers, 11% of the farms today are what we call large landowners, right? They get almost 70% of the lending, right? And the 64%, which are the small farmers, get less than 25%, right? Because it's a very informal thing. So I think the key barrier today is how do we make the more important actors of the ecosystem, meaning the agri input dealers, which is a large chunk of the MSME, and the farmers financially included. But the thing is, it's not only about getting them included. You can give them a wallet, you can give them an account, but there needs to be a reason to use transactions, right? The history, the analytics isn't there, right? The second key barrier today basically is that agri is adversely affected by climate change and weather, right? So there's always a risk factor involved. And that's where companies like Bakhbar Kisan and FarmGuard come, because they provide advisory services. They provide a level of protection, right, to lenders as well. But our role from a MasterCard standpoint basically is that we'd like to enable the ecosystem. We'd like to work with our partners, right? And essentially, if we can manage to get even, I would say, 20 or 30% of this cash-based ecosystem into the digital economy, I think that the whole government economy will just completely change, right?
Totally agreed. So coming to Fatma, we have talked about farmers in general. you work specifically with, most of the time, with smallholder farmers and especially women. So are they as much ready as perhaps the rest of the farmers to jump onto the digital transformation bandwagon? And what are some of the barriers or challenges that you see in terms of the ecosystem that are kind of decelerating that transformation?
Yes, we do essentially work with small to medium-sized farmers. Ideally speaking, the farmers should be very innovative, highly skilled, and data-driven. But we need to understand. Okay, so Arslan, the statistics that I have, so 70% of the farmers are working on small to medium-sized farms. The main problem is most of them do not own the lands. So the main problem is that they don't feel the incentive of, jumping onto innovative practices because, they don't feel the ownership. So that's one problem. And number two, in our experience, we keep, spending a lot of time with these small to medium-sized farmers because we have now started contract farming. They really, really want to, apply innovative practices. Most of them, out of the 70%, and much more than the large sized farmland owners. If you talk about the landlords, most of them are not even interested in farming. So they are not even interested in what's happening on their agri-land. So these farmers are very, very much, ready. Another really big issue is that they don't have any incentive in terms of investments in their innovative ideas and practices. Whatever these government and semi-government organizations are offering, most of it is going to the influential lot. Those farmers who are not even really interested. So these two are the really big problems that we have witnessed and experienced. So I think this is something that the government bodies and the financial institutions, they need to really look into.
Thank you so much. And we come to Faisal from Grow Tech, who has been, I think, probably the oldest in terms of precision agriculture or satellite imagery-based reporting agri-tech in Pakistan. So this morning, there was a lot of talk about changing the user journey as an enabler or an accelerator to digital transformation. So how do you see that happening over the last 2 years or so since you guys have been in business? And what would be some of your advice to probably some people who aspire to be agri-tech entrepreneurs or want to partner with agri-tech? What's the promise and how are you transforming the user journeys?
Thank you. The main thing what we try to do is the AgTech, Fintech, financial inclusion. These are big words, but these are not in essence the objectives. The objectives is different. From our perspective, what we have created the overall working model for us and with the farmers is that can we create a win-win situation for everybody? AgTech is very important so that we can produce the data-driven analytics, data-driven advisories, and the data-driven actionable items for the farmers, jo wo istemal they can use on their farms. Or end of day, they produce some tangible results out of that. So, हम पूरे crop cycle पे work with the farmers. Our main purpose is that we will use the technology, we will equip you with the technology and the education and the necessary knowledge for the crop, but by the end of crop cycle, we will create the disposable income for you. So, the last wheat season, we shared our case study, like rightly mentioned, the climate change. Again, climate change is not only for Pakistan, it's happening all around the world, but people are coping with it. So we use these data points, we use these data analytics to assist our farmers. And even then, on the last wheat cycle, 43% we increased their disposable income in terms of investment optimization and then their yield enhancement. So the point is, AgTech, like we are all in this domain, and it's rightly so, okay, awareness level is increasing across Pakistan and people understanding this is very important. But this is where we are different. We don't flood the farmer or the end user with the data, oh, we are the digital company and we will do this, we will do this. So what is the point? Use case is very important and the win-win situation. That I think that we are one of the company who charge farmers because we say it's the win-win situation. We will create money for you out of your farm, existing farm, and again, Imam mentioned, we are working with the Thekedars, we are working with the absentee farmers living in UK or US. So we connected the urban community back to the rural community. So we told them, guys, you own the land, you are making the investment. Million of rupees you are burning every year, so we will create the profitability for you out of these farms. So I think this is very important to understand for digital inclusion, financial inclusion, or agri-tech inclusion. Are we ready to work thoroughly throughout the crop cycle, season, and risk sharing? Like there are so many discussion happening today and maybe tomorrow as well that we are ready to lend. Why people are not getting the loans? 4% only, and maybe they are mostly in urban sector. Why not in agriculture sector, rural community? People mention the Zaraat is mulk ki backbone, reed ki haddi hai. Oh bhai, reed ki haddi is not getting loan from you. They are going to the Arti, to the Mandi. Why? So it means use case is not there. Agriculture portfolio for every financial institution in Pakistan in the last decade from 25-24% has gone down to 5-6% probably. Please, because I'm the aggregate domain, not the financial domain, so you can correct my numbers, but around 5-6%. So it means use case is not there. Cost of business on the loan side is very high, mentioned in the last panel as well. So I think these are the points where we think as a GrowTech, we created the collaborations. And I think financial institute, seed companies, government bodies, any input suppliers, buyers, we are not trying to reinvent the wheel. We are collaborating with the people. Where people are not ready to work on farm, we are there. We are ready to work. And on the other, you are the technical hand, you are the financial hand, you are the input hand, we work with you. We are not going to replicate efforts. So I think we created good harmony in our domain. We are working with the banks. We are working with the input suppliers. The whole idea is wherever we can create 1, 2, 3, 4% benefit for the farmers, we go to them. Whatever effort we have to make, but we bring them on board. So this is probably...
That's excellent. And actually that's what my next question is to pretty much all of you is, so there are challenges with respect to digital transformation and digital adoption. The good news that I hear from most of you is that the farmers are ready. They're ready as long as there is value created for them. So for WhatsApp, I would like you to share, some of your experience with from your sister organization, Reap Agro, which is trying to bring in more financial inclusion through contract farming. Tell us a little bit about the factors which has helped you succeed, and then what are probably some barriers that are kind of barriers to scale. How can that be scaled really quickly?
Right. So first of all, why Reap Agro? Why did they go into contract farming? Again, State Bank has very ambitious agri-lending targets. This year they plan to, the target is 1.8 trillion rupees, if I'm not mistaken. While this is all very good, commercial banks do not lend to farmers who have less than 12.5 acres of land holding. So the farmers who need the funds most, they have no access to it. More than 70% of the farmers have land holdings of under 5 acres. So these are this is the segment that we are addressing. This is the segment that Reap Agro is working with. Currently, they are working in 2 value chains, potatoes and maize, in districts Swabi and district Mardan. So the model is that they provide the inputs to the farmers as in-kind interest-free loan. And then they guide the farmers through the entire crop life cycle, during which the farmers also have access to Bakhabar Kisan's whole suite of services, weather, remote advisory, and so on. And then at the end of the crop life cycle, they buy back the produce. Reap Agro has back-to-back contracts with the likes of, with large food processors. So they are able to get a good price. And the incomes of these farmers who are working with us have gone up over, between 30 to 50% over the last few years. We embed a few other things into the lending process. All the farmers are required to take out index-based crop insurance. So we started that practice in 2021, and now we did a pilot which was successful, and now we do not lend without the index-based insurance. So the challenge. When we started off Reap Agro, we were using our own funds. So let's say we were working with about 2,000 farmers, and the loan size in terms of rupees for each farmer was, let's say, on the average 100,000 rupees. That's 200 million rupees of capital stuck for 4.5 months. Clearly not sustainable. Growth is going to be very difficult. So last year we started working with fintechs. We have Finja on board. We are working with some other fintechs. We're working with banks as well, who are using Reap Agro as an intermediary. They lend to Reap Agro, but not to the individual farmer. And that is helping us scale. Grow. Of course, the entire process, the onboarding process, it's all digitized. We would like to create and make all payments digitally. We do create wallets for the farmers. It's part of, it's one of the KPIs. But digital payments have their own challenges in rural areas. Agents often charge extra commissions. They do not have sufficient float oftentimes. So farmers are reluctant to, they're reluctant to accept digital payments. But we are, nudging the farmers, encouraging them, and because we accept digital payments, farmers have an option of paying us rather than cashing out. So it's the whole ecosystem has to be developed for digital payments to increase. But coming back to Reap Agro and how we are scaling, we are adding other value chains, and we are moving into districts outside KP. The next step is to move into districts like neighboring districts like Attak, and then certain districts in the potato growing region in central Punjab. One of the interesting things that happens is in this model, when we buy back the produce is, safeguarded. As you're aware, in fruits and vegetables, the post-harvest losses are as high as 40%. So farmers, we buy the produce from the farmers immediately after harvest and use appropriate transportation to deliver the produce to the large processors with minimal loss in between. Otherwise, farmers are at the mercy of the proverbial RT or the middleman. He may delay, produce may rot. So there's lots of ecosystem challenges over there.
So coming back to Muzaffar, so I think in one or two other panelists also identified that the share of agriculture in overall lending in Pakistan as compared to its GDP contribution is very low. Fawad Saab is saying that the farmers who need credit the most, they're not the ones who are getting it from commercial banks who've got the biggest deposits. But when you talk to the banks, they say that either it has to be a collateralized loan or we need some data points so that we could do clean lending, which is safer because it's easier to lend, it's very difficult to recover. So as an agri-tech who does a lot of remote sensing, produces a lot of data, what data points do you see can solve at least some of this problem? And do you see any global examples which could be replicated here in Pakistan?
Absolutely. So I just want to address the whole Aarti question because he's been mentioned a number of times, and the Aarti really is demonized, and I'm not saying that that behavior is not predatory at all. They definitely are. But वो आरती से लोन क्यों लेता है? फार्मर जो है वो तो हिसाब किताब वाला आदमी है, वो आरती से क्यों लोन ले रहा है? फार्मर बेवकूफ़ नहीं है, जाहिल ज़रूर होगा, अनपढ़ होगा, बेवकूफ़ नहीं है. वो आरती से लोन ले रहा है because उसको वो चुपचाप दे देता है. So
it's easier to take a loan from the Aarti.
No, because he's ready to give it. It's not even about easy. So if the Aarti was asking the farmer to do 10 cartwheels through hoops of fire, the farmer will do it and pay 50% interest on top because the Aarti is willing to give it, right? So I want to set the stage for this answer to be more of willingness than of data availability. So they came. If a certain financial institution was willing to accept that farmers don't always want to give up collateral. When a farmer has to sign a stack of papers in 8-size font in Urdu or English or any language that you please, उसको वहीं पे पसीने छूट जाते हैं. उसको लगता है कि यहाँ पे सारी मेरी ज़मीन गिरवी रखा ली है और ये अब मुझे ठुडे मार के निकाल देंगे. और वो ठीक सोच रहा है because उसके साथ historically यही हुआ है. He's very aware of how isolated he is in the grand scheme of things. So it takes a willingness to acknowledge where the farmer is coming from. Now, if there is someone who's willing to understand this, if there's a bank, if there's a fintech, if there's an organization or REAP, there's plenty of data points because the lack of willingness is arising from a space of risk. We are in a position and we're doing this. It takes us all of maybe 45 seconds to develop this. It's all automated. These machine learning algorithms are in place. There's hundreds of thousands, if not millions of data points that have already been validated. So we're offering this directly to the farmer right now because it has an impact on their farming practices. It has an impact on their input usage, input costs, and so forth. तो जहाँ हम ये बता सकते हैं कि इस इलाके में पिछले 5 साल में you are a farmer, आपके farm में productivity zones कहाँ हैं? Based on crop yields in your farm this year and the last 5 years, or if you wish, the last 10 years, but that's kind of redundant. And we can advise you कि NPK जिसकी कीमतें बढ़ती जा रही हैं, आपको कहाँ पे डालना है, कहाँ नहीं डालना और किस एरिया को तो आप जाके इन्वेस्टिगेट करें as opposed to जाके और 2-2 हाथों से आप छट्टा लगा के आएँ NP और DAP और SOP का. तो जहाँ ये इन्फॉर्मेशन प्रोड्यूस की जा रही है, इसी इन्फॉर्मेशन की बेसिस के ऊपर जब आप पूरे एरिया की प्रोडक्टिविटी देखें, इलाके की, आप उस इलाके के वेदर ट्रेंड्स देखें, क्रॉप ट्रेंड्स देखें, देखिए फ्यूचर तो कोई प्रेडिक्ट नहीं कर सकता, बट ये हमें पता है कि हर साल सैलाब आना है, right? Now what are we going to do about it? So if there's a data set that allows you to identify your degree of risk and you mix that with the willingness to walk away from your traditional मुझे ज़मीन के कागजात गिरवी कराओ, तो फार्मर आपसे भी लोन लेना शुरू कर देगा. But that data does exist. Other countries are doing it. Nigeria is very hardcore about it. गुर्बत वहाँ भी है, फार्मर वहाँ का भी गरीब है, छोटा फार्मर वहाँ का भी है, सारे मसले मसाइल वहाँ भी हैं. हम कोई यूनिक नहीं है. But Nigeria is doing something about it. China के अंदर my bank has partnered with Alipay. It's all over Google. They're doing a fantastic job. फार्मर को बोलते हैं कि आप सिर्फ गूगल पे अपने फार्म की निशानदेही कर दो, 4 लकीरें खींच लो और बेसिक्स बता दो, अपना नाम, अपना शनाख्ती कार्ड जो भी वहाँ का equivalent है, आप अपना crop type हमें लिख दो, and in under 3 minutes they have algorithms which exist over here. I know it's very new, but in the grand scheme of things, it's no rocket science. Israel is doing it, India is doing it, Bangladesh is all over it. And in a span of 3 minutes, जब वो farmer ने अपना बहुत basic information submit कर दी है, वो assess कर लेते हैं इस farmer की ज़मीन का क्या हाल है, फसल का क्या हाल है, पिछले 4-5 साल से क्या हालात हैं, इसके इलाके के अंदर weather conditions क्या हैं, ये इलाका सैलाब में कितनी बार डूबा है, उसके basis पे credit scoring आती है, और वो farmer को loan दे देते हैं. So, I'm not saying it's easy, but nobody said it was going to be easy. You know, it is very possible if there is a willingness at play.
Fair point. I think you've definitely, made some of our banking friends think a little more about this. So, Arslan, you mentioned about MasterCard Farmers Network. I think it's probably now in India as well. How is that solving the financial inclusion challenge for the farmers? And do you see, or how do you think it could be replicated here in Pakistan as well?
So, I mean, I think the key takeaway that's coming across here is that data is available, farmers are being engaged. There definitely are, there's the Aarti question, but again, if I would just answer that before, there's two ways of looking at the Aarti thing today. So it's definitely not predatory, right? They've developed centuries, I would say years and decades of relationships with small farmers who do not have access to a form of financial services, right? So to answer your question, so we have launched Farm Pass, obviously, in our neighbor. We've got 2 engagements there. We've also done it in 3 markets in Africa. These are emerging markets, agri-based, where agri is a large part of the, I would say, the GDP or the economy, right? So how Farm Pass works today is that if you take Pakistan scenario, so you have the farmer, you've got the input dealer, then you've got the actor, for example, who disperses subsidy, then you've got the advisory organizations that help in weather, help in the GIS mapping and the analytics, even down to the marketplace, right? It kind of connects all these actors into one ecosystem, right? It's not only a technical platform, but it's also, we bring in our expertise and our know-how and help design this, right? But we work in a partnership model, right? So in India, for example, we're working with an agri-tech and a microfinance company, right? Same thing applies also in I would say, Uganda and Tanzania, right? So there's different actors with different ways, but have different objectives and different markets. So, so in our particular scenario, Pakistan's ecosystem is huge. It's massive, right? So I mean, if again, we're here because for one simple reason is that how can we make financial inclusion be accelerated in Pakistan, right? Take that, the large chunk of the cash-based economy and basically make it more digitized, right? End game basically is that how do we serve the farmer, right? So the main thing today is that the whole ecosystem is not digitized, right? So the data is available. I mean, Fawad Saab spoke about Swabi and Mardan and Atak, right? These are small areas. There are certain areas, but then there's South Punjab, there's North Sindh, right? We have the cash crops, we've got livestock, we've got cotton as well. So what we do today, what we would help is work with our partners to kind of connect this into the ecosystem, right? So imagine if the farmer was connected to the digital ecosystem, the input dealers connected to the ecosystem, they were transacting with each other, right? There would be access to inventory financing for the input dealer, because MSME, access of lending available to the farmer as well. Then if you manage to also digitize, let's suppose in the mandi. I mean, today, for example, we have not been able to digitize mandi rates, right? I mean, there's different mandis across which is your output marketplace, right? So that's one test case as well. What we basically do is we just connect the ecosystem. We support our partners in the ecosystem. So today we have about a little under 2 years, about 2 million farmers that have been added onto the ecosystem. Wow. Doing almost 2x, 3x worth of growth in terms of transactions, in terms of efficiency. So the main thing is the efficiency in the system in terms of visibility, right? So when you digitize, there's more transparency, right? With transparency, there's more analytics available. So with the transparency, the farmer is now in better control, right, of the prices which are being set, his margins, etc. I mean, today it's a very informal economy, right? So he is lending from, he is taking loans from the Aarti, and then he's coming back, but his margins are very low, right? So subsistence is there. So when you talk in terms of digitization of the farmer, the merchant, You bring in the financial institutions, you bring in the fintechs, you bring in the agri-techs, you bring in the donor organizations. We connect all the dots into one ecosystem, and I think that's the conversation we're trying to have here.
Great, and we look forward to have MasterCard launch the same in Pakistan. Fatma, again zeroing in on the smallholder farmers, especially women, what are the challenges that you feel they have when it comes to access to financial services, especially lending, and that to productivity lending to improve their crop yields, efficiencies, and profitability of the farm?
So we are talking about agri-financing and agri-lending, right?
Of course.
So you see, almost 60% of the workforce in agri is female, right? But the thing is, you will hardly come across any female landowner. मेल तो है ही नहीं, स्मॉल होल्डर, स्मॉल टू मीडियम साइज फार्मर्स, उनके पास तो मेल के पास भी नहीं ओनरशिप, फीमेल के पास तो बिल्कुल भी नहीं है. एंड दिस इज़ मेनली ड्यू टू आवर इनहेरिटेंस कल्चर. It's not Sharia compliant because you see the fathers, they want to pass it on to their sons mostly. So you see, if you ask me what are the challenges in access to agri-financing, to be very honest, I have never come across any female looking for financing in agriculture sector because they don't even have ownership. They are just workers, they are the labor class. मुझे अगर आप देख लें या फिर I'm not a landlord, any वो big time sort of a farmer, small to medium ही है मेरा भी. But the thing is, बहुत ही कम families हैं, progressive and some of the feudal families जो थोड़ा बहुत अपनी बेटियों में pass on कर देते हैं, but वो भी बहुत ही छोटी population है. So access of financing is not there. If you want to bring that on board, number one, land reform laws, it's high time that we start working on those and make inheritance laws Sharia compliant.
Okay, fair point. Faisal, have been producing satellite imagery-based data for probably the longest in Pakistan, and it was really heartening to hear when you mentioned that based on those data sets, you were able to guide farmers to reduce their cost of inputs and increase their yields to a level where at an average the farmers' income increased by up to 40%. How can that help them? How can these data points be shared with the fintech industry and the banks at large to help them access more funding or lending so that they can perhaps further improve their practices, improve their yields, and probably move towards high-value agriculture, which brings in a lot more money than the crops generally that we grow in Pakistan today?
Like I said before, 43% was the profitability increase in last wheat season, and now we will publish the rice crop season. The profitability increased for the farmers, and this time we will trying the third party publish this, so it's more viable for the people. So for the data points, Muzaffar also mentioned, we are already running pilot with PMIC, where we have created the entirely different lending model. Because if we don't believe in the parachute lending, then the AgTech and the FinTech are the natural allies. How I will try to explain. From the AgTech perspective, we are working with the farmers. We are farm level, doing intervention on the farm level. So FinTech. So what we have created with the help of PMIC, we created a running finance or the need-based financial model for the farmers. So we don't stick on the selling or the buying side. What we have done, that because our agronomy teams are working with the farmers, so we create, whenever the farmer's crop has some need, automatically it generates the trigger. Farmer vet it, our agronomy vet it, that the need is there. Maybe it's the fertilizer, it's the spray, it's the irrigation model, you want to buy some diesel, or diesel to aapko kahin se nahi milta, aapko khareedna hi hai. So in that case the cash type. So running model, and the markup is also running based on the finances used, fund used, not the term financing model, no. And then on like Muzaffar probably mentioned, that collateral. So On collateral model, currently we see that for a maybe 1 million loan, the collateral is around 10 million. So you can share the collateral. So we have created the different collateral models. Like what? Shared collateral. We know that the one brother or father has asked for the loan 200K, and out of that collateral we have is already 1 million plus. So his son may be able to apply for the loan as well. So at the same time, he has the machinery, he has the house, maybe he has some shop. So some flexibility from the fintech perspective is very necessary. That's the reason we are running this. We are using our own data, we are creating the data points, and we are creating the whole new credit scoring model. Why? Previously, the discussion was on purpose-built lending models. So when we are doing the purpose-built lending model, so the farmer is, or maybe the person is secondary, the purpose is primary. So you need to see that this farm can produce the enough revenue so that he will repay the loan. And then the important point, but where we are working also, that the insurance model does not cater the farming community. Loan insurance is there, crop insurance is not there. So in case of any calamity like the flood this year, banks are safe. They will get the 25 acre tak unki to insurance hui hai bhai. They will get their money. So what about the farmers? How to come back on their feet, go back to their lands? So this is where the fintech act as a natural lies. You need to run these new models, not the term financing, and risk sharing, I think should be there. In a way, I'm not saying that we pay to the farmers for any loss happening on their farm, but in a way that we assist them to foresee the risks, like we are doing. So what we are doing, we are not giving them extra money or maybe anything like that, rather they are paying to us. But the surety we create that there will be nothing wrong with your crop until there is some natural calamity. So the banks are, that's the reason the Tekadar, absentee farmers, small, big farmers are working with us, banks are working with us, and the big corporates are working with us. That the idea is improve profitability, if disposable income of the farmers, so they are able to take risk. Like we really want to use sensors, like sir mentioned, but the cost of the sensor is there. So how we will sell to the small farmers? वो कहते भाई मेरी खाद नहीं पूरी होती. So these things we need to look at, and this is the reason, like I said before, we need to really work on the right use cases.
Yeah, first of all, just a quick question on what you just mentioned. As your personal practice or experience with working with the farmers, are you guys also using some parametric or weather index-based insurance provider to work with your farmers? Or otherwise, I mean, all loans by definition are covered with the insurance that you mentioned. So the bank gets all the money that they have given, but that's only in cases of natural calamity. But are you using any of these new crop insurance providers?
We have created a new product for the insurance, and we have shared it with all the insurance companies in Pakistan, and only one company has accepted so far.
Okay.
Because our idea was very simple. That trigger point and the claim generation will be automated by the system, because all the data is available. Whether it's the weather, whether it's the flood, some calamity is there, some disease tag is there, everything is documented now, and the panel knows everything about that. So why we need a person to go, oh, यहाँ pest attack आया है, यहाँ बारिश ज़्यादा हुई है, why? So insurance company, only one insurance company is working with us at the minute, rest has refused, and we hope by the next crop cycle we will launch this product. I hope so. Otherwise, what we have planned, like we are doing the lending model on our own, that if this doesn't happen, we will do this product ourselves. So to facilitate the farmers. So if you see things from the farmer perspective, like whole discussion we are having here before and after, all is from the corporate classes. Why we are not able to sell our products? Why there are defaults? why they are not getting money from us? We are giving you, yeah, why? So take a pause, think from their perspective.
I think one company signing up with you is a good sign. I hope it's a successful pilot, and then others will follow.
Thank
so
you so
that
much.
brings us nicely towards the end of our panel discussion, and I would now take 3 to 4 questions. So we've got a gentleman here. Could somebody please pass on the... Five. Please mention कीजिएगा if it is for a particular panelist or is it for all. Please introduce yourself and go ahead.
My name is Junaid. I'm a technology professional. I'm looking into investment in the fintech sector. And first, I thank you all for sharing very good insights about the fintech and the agri-tech industry. My question is, due to these floods, there is a situation which is very tough in the whole country. The whole crop area is disturbed. The poor people who were previously doing this contract farming or some ad hoc farming, now they are into big trouble, right? And we have this fintech industry and the banks and the government who is looking into to improve the situation. And this is a test of time for the whole industry, which I believe that how these things work. If you cannot make it work now, it won't be able to work in future as well. But the situation is very worse, right, than the previous years. So what's your plan? How you will collaborate to make this different kind of models which are operating in different segments from the fintech and the aggregate tech sector work together to make sure that this thing is like farmers get benefited and they get the money, because right now they don't have any collateral because it's all washed away with the flood. They don't have any means to, do the farming again, because I have a servant, he lives in interior Sindh, and he spent 6 weeks at his home to just rebuild it. But the flood water still there is like 3 feet level, right? So there is like another few months which will take some time. Yeah. So how you will make your models work? Because right now the segment you are targeting is is in a very worse condition than the previous years.
Yeah, so I think the question is that we know the devastation with respect to the floods. Climate risk is a big challenge. How do you see the industry coming together to solve this for our collective future? What's up? Maybe?
So, excellent question. There's no easy answer. From our perspective, what we are doing is that जो flood affected areas हैं, वहाँ we are advising the farmers on how the cropping cycle has changed, will change, और going forward उनके इलाके में कौन सी disease के chances ज़्यादा हैं, कौन से insects के chances ज़्यादा हैं, so what precautionary measures to take. So that's what we are doing. I think आपका सवाल जो है वो that's a broader question because it relates to their financial ability to bounce back. Wo, unfortunately, it's beyond the scope of what we are doing. I think I can speak for all the companies over here. हम satellite monitoring से भी we can find out hotspots for disease and provide early warnings. वो हम कर रहे हैं, and I think Farmdar भी कर रहा है, Grotech भी कर रहा है. But जो आपका सवाल है कि वो how will they bounce back? It's above my
just to add a couple of points. I think when a natural calamity hits an area, then it's more about the industry and the government coming together. So you see a lot of subsidies given by the government, price support of the crops, and then of course there are lots of donations and discounted products being given to those farmers in those areas. we have time for one more question.
Sorry, I just want to add a small point to
Mazda.
what you asked. देखिए अगर आपका सवाल ये है कि जब गरीब फार्मर अगले साल डूबेगा, अल्लाह माफ, क्या उस तक पैसा पहुंचेगा, उसको एड पहुंचेगा. Is there a long line of banks wanting to hand out loans to farmers that have been devastated and have little to no means of paying back? I don't see that happening. Now the question is what we can do to help him recover otherwise, or well, what we can do to help him be financially able enough to prepare for when that day comes. It is coming again next year, guaranteed. Climate change is not selective. It doesn't skip years. So what we are trying to do, and what Fuad Saab's doing, and pretty much everyone over here is doing, is trying to equip the farmer with the means to have better farmer economies at play, farming economies at play. कम खर्चा करने में वो अपनी yield बढ़ा सके ताकि उसकी जेब में 2 रुपए हों, ताकि अगले साल जब ये सब कुछ आए उसकी जेब में कुछ पैसे हों. So it's a pessimistic answer, but that I mean I want to kind of use this opportunity to lay out some facts, because that's a fact.
Yeah. Thank you so much, Muzaffar. Last question, sir. If somebody could pass on the mic to him. Okay, Asad, could you please give him an opportunity?
Assalamualaikum. So my name is Zain and I'm representing EG Fresh over here, and I have a question, and the question revolves around the fact जैसे इन्होंने अभी question raise किया था climate के ऊपर. I was sitting with a few आरतीस, and obviously if I'm talking about agriculture, आरती तो आना ही था कि every आरती is also right now in a very bad position कि यार climate के मसले हैं, हम पैसे देते हैं, हर दूसरे तीसरे साल बाद पैसे डूब जाते हैं. So don't you think this is the perfect opportunity for you guys to partner up with the Aarti when you are coming up with solutions like providing aerial views, soil testing and all these, and Aarti के पास पिछले 1000 साल का डेटा पड़ा हुआ है, किस फार्मर को पैसे देने, कौन सा फार्मर पैसे वापस करता है, उसकी क्रॉप कैसी होती है, क्रॉप बुरी होती है, अच्छी होती है, उसकी लैंड होल्डिंग कितनी है. So isn't this the perfect opportunity to partner up with the Aarti and reach out to the landowners or the farmers?
Fatma, you want to take it, please?
I think that's a great question. Today I was speaking to somebody, and I did say that Aarti is your data gold mine, and as you said that this is a great opportunity to bring Aarti into the formal channel, because they are also looking a way out and partnering with somebody so that unka business chalta rahe, kaam sham chalta rahe. You see, again I'll speak from my experience. अब जैसे सारे जो traditional आरतीज हैं, इनके वालिद साहब ने भी किया था, दादा ने भी किया था, परदादा ने भी किया था. अभी जो है ना, ये वाली generation, a lot of them are actually very educated, very well spoken, very polite, and they show professionalism. So I think अगर ये सारे जो हम लोग वो हैं players, if we identify the right sort of artists to work with, they will understand what we are talking about.
Thank you so much, Fatma, and that brings an end to this panel discussion. I think the overall message is that the farmers are ready for digital transformation. They actually welcome new tools that can help them make more money, but it has to be done using human-centric design and developing trust in the ecosystem. Data is available. It's up to us now how we collaborate and come together as an industry to make use of it and transform agriculture in Pakistan. Thank you so much, guys. You have been a wonderful panel. Thank you.
Thank you so much, Habib, and thank you to our panelists. And clearly, this is a topic of great interest because everyone's had questions, so that's really wonderful. We will now formally be closing our conference, Breaking Barriers Through Digital Financial Inclusion. I invite you all to come in tomorrow at 9:30 a.m. We will be starting with a Women's Forum panel, which I expect will be the best panel of this forum. And we certainly are going to hear some very interesting perspectives. This will be followed by a panel on AI, Web3, NFTs, Metaverse, and then we have a design workshop on Rast and future of Fintech, including PMIC coming and sharing their views. So do join us. Thank you for being a great audience. and see you all tomorrow.